On behalf of IRDAI, a very warm welcome to all of you to Bima Manthan, the bi-monthly series of in-person meetings with the CEOs and MDs of all the insurers. This is the second phase in the series. The first one was held on 7th April in Mumbai. It's indeed a pleasure for all of us to host the second meeting at Hyderabad in our office. Bima Manthan is an initiative of IRDAI that offers a platform for continuous engagement of the regulator with those at the helm of the insurance industry, seeking to invite new ideas and promoting constructive discussions on various aspects of functioning of the industry, apart from seeking to increase the penetration of insurance in the country. We have begun a new journey a few months ago under the leadership of our new chairman, and the regulator and the industry are working hand in hand to achieve the common goals for the insurance sector. We have a vision to spread insurance all over the country. The theme of today's meeting is the road ahead. In our midst today, apart from chairman and the members of the authority, we have the CEOs and managing directors of general insurance companies, health insurance companies, and reinsurers, a couple of whom will be also making presentations for us today. We have the Secretary General of the General Insurance Council, who will be making a presentation too. Also present here are the MD of IIRM and the CEO of IIB. Today's meeting begins with a welcome address by Srimati S. N. Rajeshwari, Member Distribution, who is also holding charge of non-life. This will be followed by Chairman Sir's address and presentation. Following this, we will have an open house wherein I will request the CEOs or MDs to react and give their views and inputs. I propose to make the request starting with the health insurance companies and move to the general insurers in the reverse alphabetical order. Reinsurance protection is a very important aspect that requires both the direct insurers and the reinsurers to leverage each other's synergies to achieve the common goal of creating capacity to offer greater protection. We will have a presentation from Mr. Bhargav Das Gupta, CEO of ICICI Lombard, from the direct insurers side, and Mr. Parag Gupta of Score Re will respond from the reinsurers side. We will then have Mr. Nagaraj Sharma, Secretary General of the General Insurance Council, speaking to us about the role of the council as a growth driver and what are his plans or what are the plans of the council to move forward in this regard. How can we better leverage the presence of the Insurance Information Bureau and what more can we do? Mr. Anuj Gulati, CEO of Care Health, who is on the governing council of IIB, will give a presentation on the future role envisaged for IIB. This will be followed by a presentation by Dr. Mamta Suri, Executive Director, IRDAI, on the road ahead in the implementation of IFRS and INDAS. This will be followed by another open house. We will break for lunch for an hour from 2 p.m. to 3 p.m. Post-lunch, we have the privilege of having Dr. R.S. Sharma, IAS retired, who is the current CEO of the National Health Authority, who will be speaking to us on the Ayushman Bharat Digital Mission and the Claims Exchange. May I now request Member Distribution to kindly give her welcome address.
Okay. Nine. Respected Chairman, dear members, dear IRDA colleagues and friends from industry, good morning to all of you and warm welcome for today. So before starting the discussions and proceedings, let me greet the chartered accountants and doctors present here. Today is a CA day and Doctors Day also. So I wish to the CAs and doctors here and in your family also. So non-life industry completed 2.2 crore lakh in FY22, and for the first 2 months up to May, around 36,700 crore was a completion. The growth rate was 25%. Of course, we all know that the 25% should not be taken as a percentage because the base of last year in FY21 and May 21 was less. But this growth really indicates that there is a progress, there is a revival of the automobile industry, the sunrise sector, and there is a revival of the infrastructure. Also, there is a health rebound in the Indian economy. That is a fact to be accepted and appreciated, and we are moving in the right direction now. So the regulator has been engaging with you right from the first bi-monthly meeting, and we have been discussing with you, taking your suggestions, recommendations for ease of doing the business, for penetration, and for coming out with various reforms. The first step, non-life department has started the ease of doing business. Use and file has been introduced in majority, more than 85% I can say, except a small portion in the miscellaneous retail. So that has been done. So now we also see a change in our vision. Instead of looking into for a company's vision, now our vision has become larger. We are seeing as an Indian economy, totally Indian insurance industry, how penetration can be improved. And we are focusing on seeing how every family can have a health cover, how every house can have a protection, and how every vehicle can come under insurance. So that is a focus we are looking apart from our individual target. Both are intertwined. When this will happen, that will also happen. And also by all this, the protection gap can be narrowed. So when I talk about protection gap, still we are counting the death tolls in the Assam floods. It is going 126. Today also added 6 like that. So whatever we do suddenly, then such an event widens the protection gap which we want to narrow down. So our focus also should be on parametric insurance, how we have to engage with the other stakeholders and what can we do for controlling the losses and narrowing the, bridging the protection gap. That will be one of our discussion. Then how do we engage with the missing middle, the unorganized sector, how we bring them also into the insurance bracket, that we have to focus. And a little more I want to talk about MSME. So MSME are the growth engines of the country, not only in India, across the globe. And World Bank has said that MSME gives employment for 60% of a country, and 40% of GDP in emerging economy is through MSME only. So in India, there are 6.3 crores of MSME and they contribute to around 30% of the GDP. And you would have heard about the Udyam portal which has been introduced by the government. You know, government has been, and the financial sector, MFI are taking steps supporting the MSME now. So around 66 lakhs of MSME have enrolled in the portal. They are now growing through harnessing the technology. And the statistics also says in FY21, their loans given to them has increased by 40% to 9.5 trillion Indian rupee. And also the retail and wholesale traders in India are doubling. So for their resilience, what will be contribution of the insurance? That also we have to see. And it cannot be that one size will not fit for all. So maybe the micro sector should be handled separately and medium and small scale separately. So that we have to see. So on going through the how internationally other countries are doing, IAIS is also focusing on MSME insurance. So I just had to go through some reports like in South Africa, Peru, Philippines, Kenya, Pakistan, all. They engage closely with the MSME. So they interact, they have workshop, insurance summit, they come out with innovative products for them. So why don't we also consider them as a consumer segment? And what can we do for them? We can do a research of what will be the product required by them. What can be the new distribution channel we can have, so that we can focus on that. That is my request. Apart from that, when we come about customizing the product, maybe for millennials, maybe for senior citizen, the products could be like somebody will want a short-term need-based products. I want only for this period. So probably we have to come out of the myth of annual policy. Already in motor, we have come out, and also in the project, maybe everywhere, it should be customized to the need of the customer. So we should have an annual product. We should have a product for a short term. Similarly, we should have a product for a long term, means longer term also. Maybe we know when we do the depreciation for how many years the life of a building is there. There are, government has given parameters. Should we also look into insurance for that period, 20 years, 30 years, 50 years, like that? Maybe at least for dwellings in case there is a requirement. And for that longer term, do we give discount? We can look into. And can we align even the vehicle insurance to the RC period when somebody takes a vehicle? Why to remember OD every year? Long term is, even the TP is for 5 years. Probably we have to engage with the government and other stakeholders. So when a vehicle is taken till the RC 15 years means if somebody is ready to afford, can we do that? So we have to look into all these options. Of course, the role of reinsurers and for pricing and actuaries will be more in this. Should be technology driven. And cyber risk, yesterday also it was insisted that creating the awareness and data security. Today morning, just when I was going through the Economic Times, I saw RBI has reported that these expansion of the fintech have exposed the banking system to new risk like safeguarding the data privacy, the cyber security, consumer protection, compliance of AML guidelines like that. So when we certainly have to advance engaging with the fintech and the insurtech companies, we should also balance between innovation and the stability, insurance and financial stability. We have to take care of that. So we should also see what new distribution channels we can bring in. We have already spoken from last meeting on engaging the banking correspondents to reach the rural, to reach the women, to reach the underpenetrated. So how quickly we can start these things, we have to look into now. Last but not the least, service is the primary importance, the focus. It is acid test for the insurance industry's performance. So we have to also engage in speedy and fair settlement of claims. This will be our looking forward. So now today, we expect all of you to actively participate in this meeting and contribute. Have a good day to all of you. Thank you.
Thank you very much, ma'am. Chairman sir, may I now request you to kindly give your address and presentation.
Very good morning to all of you. Hope you had a nice sleep and enjoyed the Hyderabadi cuisine last night. I think my colleague member has already made the opening remarks, which was a fairly comprehensive one, and leaving little room for me to really go into the details. She talked about the MSME sector, which is an untapped market, I would say. She talked about the security issues, cyber security, very important when we are going to embark upon, the journey of onboarding insurance technology players. And then a host of other issues that she mentioned are probably something which we now need to engage in a more serious manner, and by constituting committees which are more representative in character. From the practitioner's point of view, from the user's point of view. If it is MSME, I think we need to engage with the various associations that they have. We need to do research. We need to do surveys, maybe online surveys, offline surveys, get the feedback, and then perhaps design a product will be more worthwhile. So we are done with the committees. That was basically to bring about the necessary reforms. So I'll just run through a brief presentation to take you through the journey, what we had discussed on the 5th of April at Mumbai, and then on the 7th of April, 6th was live and 7th was non-live. And then what all we have so far been able to take forward, and what are the issues which are underway, in the sense work is in progress on those items. So the use and file already done, reduced compliance burden to a large extent has already been initiated. Then the formation of the thematic working groups, all headed by some of you, have already done its work, and I think all the reports have been submitted since. Then the monthly open house is happening regularly on the 15th of every month, and the response is quite okay. We get a few players from the industry and other stakeholders who come up with their own grievances or issues, and also fairly good amount of suggestions are also coming through that forum. We wish to continue that as well and request your participation as well. Then, of course, the bi-monthly meeting, as promised, we are keeping to that schedule, and we'll continue with this exercise. And then, as we go along, we'll see if it's not required bi-monthly, but definitely a quarterly meeting we'll have and get it more structured. So every quarter we'll meet once in order to take stock of where we are and what were our targets, what were the issues. All of that will get filtered and come up for suitable action, both by the regulator or by the industry or by the intermediaries. The amendments to the Act was something which all of you have recommended through the committee reports. And IRDA on its own has also worked on what are the necessary changes that ought to be done. And we've been working with the government, and a fairly comprehensive set of recommendations has already been forwarded to the government. And if all goes well, I would strongly recommend and expect that in the forthcoming monsoon session, which has been announced only yesterday, the dates, we should see this through. And that will bring you a lot of expectations that you have on the value-added services. Then we also discussed about having more and more players, niche players, regional players, micro players. So that also is one of the recommendations. Plus the investment guidelines are all very much hard-coded into the Act. So we are also requesting that to be, left to framing of regulations which can regulate that piece. So that has also been recommended. And of course, the perpetual license for the intermediary. So these are some of the key recommendations that has gone in, and I hope and expect that to be taken forward. And hopefully the Parliament will be able to see reason in what we are recommending. As far as the EOM is concerned, the expenses of management is something which also finds a wide range of, ideas coming through the media. Otherwise, also every day or the other, we get some kind of a mail giving their own suggestions or cautioning us, no, this should be done, this shouldn't be done. Anyway, we have already gone through the recommendations of the committee, my team, all the members and the heads of the department. And as far as non-life is concerned, we are almost reaching the final conclusion as to how we take this forward. So I would just like to tell the industry, yes, we should be able to come out with that soon. The regulatory approvals, yes, that is something which is on the topmost on our mind. How do we cut down the number of approvals which we feel is not necessary? That's one. So that reduces the number of compliances or prior approvals which may be required from your side. So that is one. Then secondly, we are also designing SOPs within the regulatory mechanism in order to reduce the turnaround time and make it as simple and as seamless as possible. That's the second one where work is on. As we had in the first meeting, also mentioned that we want to move from the rule-based to the principle-based, and you would be witnessing that that's what is happening of late. And so we are definitely moving towards the more of a principle-based regulation. The scope of distribution is something we wish to enlarge and also request all of you to make it a more efficient one and a more productive one. Let's not try to, sort of nurture something which doesn't really give you the desired output. Make it efficient both from the perspective of the industry more and also from the perspective of the policyholder. Because, the intermediaries, there is a cost. So how do we reduce the intermediation cost? In fact, when I was in the government, I did mention this to the banks also, because probably India is one of the highest in terms of intermediation cost as far as the bank credit is concerned. So if we bring down the intermediation cost, I'm sure the cost of the product that you are going to sell will also become cheaper, and people will be more attracted towards buying insurance products. So that should be kept in our frame of things when we are taking any decision here at IRDA or you at your level of the boards. The public grievance system, you see, I think this is the most important pillar. And the policy holder, how do we satisfy the policy holder? I think somehow I feel that there is some amount of disconnect. The apathy to the grievances which come is further accentuating the problem in terms of the word of mouth, the messaging which goes around becomes a very negative one and the talk of the town. I think you are doing a lot of good work also in terms of claim settlement. But that doesn't come out in the press or the media or in the website or somewhere we should highlight. If 99% claims have been settled, that should be highlighted. During the COVID times, you settled a record number of claims and paid a huge amount of money, more than 36,000 crores, if I'm correct, as COVID claims. So that should be highlighted. I think you all as leaders of the industry should go to the media and should try and publish. Why not in the newspapers? I mean, you have no dearth of funds for publicity. Your expenses of management, in fact, when we decide this, we are seriously thinking of mandating that you should spend a particular amount of percentage of money on publicity and awareness. So these are the things where you can reinforce the minds of the public that, look, the insurance companies are not here just to make profit and not pay claims. You are paying claims. But even that 1% which is not being paid are the ones who are the disgruntled one. Now, how do we communicate with them? How do we, at least take a feedback from them that whether they were satisfied with the settlement or the reply that you have given them? So currently we have something called an integrated grievance redressal system. Now, that really is not working in the manner in which it should. It should be doing the data analytics. I mean, whatever complaints are coming, an analysis of what is the nature of the complaint, from which geography it is emerging, which kind of policy it is mostly, coming again and again, which is the company which is having that product. So if you do that, then the root cause analysis is done and then you correct it. Then, you need to constantly engage the regulator and the industry in terms of trying to also find out where exactly has been the problem and what is the mitigation measure. Customer feedback. After all of it is done, then there should be 2 calls to the customer through the call centers to ascertain whether they were satisfied with the customer experience with either the regulator or the company. Regulator, it will be less, it will be more the industry or the company. So how can we create a more robust body? My colleague here, Mr. Randeep, Executive Director, is working on it under the guidance of the members. So I think what we are proposing to do is move towards a more analytical model with analytical tools in it, customer feedback, and make this a more user-friendly portal and in various languages, multilingual. We want to also rename the portal because nobody connects with the IGMS. So the name which has been suggested or is being suggested is Bima Bharosa. So Bima Bharosa is something people can connect with, and the trust and the faith in insurance as a product will also get reinforced in the process. Insurance awareness is something, again, we have to really forefront. We have already requested the councils, instead of, each of one of you launching a campaign, you pool the resources and then plan a campaign for the next 3 years. It has to be multimedia, social media, and we want to see this in the next 1.5 months that the campaign is ready and should be launched. And we should launch it in a big manner. We'll call some dignitary to launch it. So that is one. And your communication plan, I would expect that senior industry leaders should be part of this committee to decide how this campaign will run, what will be the content, what will be those creatives, who will be the brand ambassadors, so that we have I mean, there is no presence actually now, no visibility rather, not the presence, but the visibility. So we need really to work closely and parallelly. My team here is also on the job so that from the regulator perspective, what are the issues we need to, highlight through the media so that the public gains the necessary confidence that yes, if we buy insurance, then this is what the regulator says in terms of the fallback mechanism, in terms of the grievance, etc., etc. So I think the entire success of what we are going to discuss today in terms of what we are going to achieve in the next 3-4 years time in terms of premium growth, coverage and all that will hinge on the awareness part, the publicity campaign, the outreach, etc. So each one of you will have to really within your own company and board work on to a plan, and those things which can be done jointly should be done jointly, because the awareness is something which you don't need to separately. You can make publicity of your own products, but the awareness and the utility of insurance products, something which whether it is property or whether it is health, and it should be illustrated by testimonial. Somebody actually who has gone through an experience should speak for a minute. All kind. I think the mass media agency will help us in designing those kind of product and create and also come out with the creatives. So this is the in a snapshot explains of what has been done and what is under works, and we hope to cover up the rest also in the next 1-2 months time. The next, what we had also mentioned during that meeting is the expectations from the industry. So the strategies for the underserved market, that is what my colleague also mentioned. How do we capture or cover the farm community? Farm community, we should look at a comprehensive kind of a cover, because you see about 6 crore farmers are now covered under the Pradhan Mantri Kisan Samman Yojana. Now they are already there on a portal, which is the banking one. How can we ride on that platform, and the moment they get the PM Kisan funds, which is about 6,000 rupees per annum, so if they could give an auto debit like what we are doing for the Suraksha Bima Yojana, I mean, it's easy. They are low hanging fruits. You'll have to work with your banks. We can design a product, as I said, by some kind of a survey, some kind of research, and a little wider broad-based committee, and then design the product. In fact, from the live side, we got some good suggestions where they are trying to bundle a few more products along with the JJBY, the Jivan Jyoti Bima Yojana. So we can call it Pradhan Mantri Jivan Jyoti Bima Yojana something plus or something, where you bundle a couple of other projects. So we also in that meeting thought, why not we try and get this experimented or try it through a regulatory sandbox mechanism. So that will be a proof of the concept. If it is working, then we can scale it up. So a similar thing can be done here. But let me tell you that we don't have the luxury of time. Whatever we have to do it fast. We would like to engage closely with the industry and support these kind of efforts to reach out to the millions of people who are still not covered under insurance. Then orderly market conduct goes without saying that this is something, again, the regulator would be very, very concerned about. And we would not like, to hear stories of mis-selling, duping customers and all that. And the industry will have to enforce that discipline amongst the intermediaries. And we would also expect strong action to be taken against any erring agent or any intermediary network. We would like to see them being named and shamed in the public domain through newspapers or through their websites. Because if there is no deterrent, then people will continue to mis-sell and continue to adopt unfair practices. The listing roadmap, we will again insist that, yes, when I talk about the projected growth targets, then of course you'll need more capital. So the roadmap you need to create. I'm not saying do your listing right now. The timing can be decided by you, but you obviously have to work out a plan. And when we make those projections, obviously you would be required to raise capital. So plan from now. So over the next 5 years, how you are going to garner those resources. Then, of course, data security has also already been mentioned. Very important. And I think we need to separately also engage with your chief technology officer or chiefs, I don't know, CISO, if you have one. If you don't have one, I think you should immediately nominate CISO in each of the companies so that they are aware of exactly what is the protocol and what all they need to do in order to make sure that the security features are inbuilt into your systems. Well, I'll just take you through a couple of slides which talks about what are the key reforms undertaken here. Apart from this, we have already discussed. The next one. The next one talks about the regulatory returns. I've already mentioned here. You know, we are reducing the number of regulatory returns. The numbers I do have. It has gone down from, yes, 16 returns have done away with. And then we are still working on what else we can do away with. We are also increasing the frequency for filing. Instead of 3 months, somewhere it's 6 months, somewhere it is annual, somewhere it could be even once in 2 years. So that work is also under progress, where we do not need regular returns. We can have it once in a year. We are also going to consolidate the various regulations, circulars that we have. As far as the non-life sector is concerned, if the counting is correct, there are around 540 circulars, regulations, guidelines. So we want to bring it down to not more than 3 or 4. There may be maximum of 1 or 2 master circulars and 1 or 2 regulations. That will help the existing players also do business easily, and the new players will not get shocked with 540 circulars. If they have to read, they will take 1.5 years. डेली एक सर्कुलर पढ़ोगे तो यार आपको 1.5 साल लगेगा पढ़ने में, और वो भी समझ में नहीं आएगा. So we are pretty much serious in doing that, and the entire team is working on it. That's the next priority that we are going to attend. Then, of course, I've already in general mentioned about the increased choice of policyholders. So, I'm not talking alone on one segment or the other. We have to clearly identify which are the segments of the society, or which are the, you can say, professions where the insurance is not yet reached, under-penetrated, or completely they are uncovered. So how do we reach those markets? And how do we reach with the help of the various technology tools and also the various portals or platforms that are already available right on it? Then the next one is about the Pradhan Mantri Suraksha Bima Yojana, the flagship program. Glad to inform you, you are already aware that the premium has been revised now. Should give you a lot of comfort. And even for the crop insurance, what we have done now is we have reduced the solvency requirement, and in the process around 1400 crores estimated amount has been freed up for you to to underwrite more in the crop sector. And another change which has been made is on the crop. Another change kya tha wo? Yagnapriya ji. There were 2 changes in the crop solvency thing and number of days. हाँ, क्या है बताओ? So you are aware of that. So these are the 2 dispensations that has been provided. We would now expect the industry to really work hard on this and make sure that, to give a case in point, 45 crore Jandhan accounts are there in our country. Now, they all began with the 0 balance accounts. And today, if anybody could guess what is the balance in those accounts, can anybody would like to take a guess? Our industry leaders. Yeah, you are technically correct. More than 1 could be 2, 3, 4, 5. So it is about 1.5 lakh crores. So 1.5 lakh crores and an average balance around 3,500 rupees. That's the balance which is there all the time. So why are we not tapping that resource? That database or those customers. I think you'll have to really work. And I think what is missing here is the interface, a technology interface between the banks and the insurance companies. So in our hackathon, which I will mention, we have announced or we are going to announce, is already contemplating to place that as one of the problem statements. So what we need to do is to clearly have an interface between the banks and the insurance companies, so that the moment the customer files his application, and the application also should be through a tab or through a smartphone, entire data is captured, it comes to the bank, and the bank transfer, you can access that from the bank along with the premium, then comes to the insurance company. And the certificate of insurance, which normally is not given to any customer. During the COVID, we tried to sense how many customers have actually, the bank accounts are not being operated, so probably he's no more. So we did find from the State Bank of India, we did a test run. So there were thousands of such customers who were actually not there. They died during the COVID, but nobody knew that they had an insurance cover. So once we have a technology kind of an interface, then we can send the certificate of insurance through SMS and also send the same to the nominee of the customer, so that they are aware that the wife or the husband has an insurance policy, and in case of an unforeseen event, then that comes in handy for the family. So, and the claim processing will be fast and seamless. So my request again to the council is to take up this initiative along with the insurance companies and the bankers. If you feel that there is a need for us to, get the banks, and also then we'll be very glad to do that. But this has to be done as a top priority. I've told even the life companies, so even life, non-life can together work on this platform, GI Council and LI Council, so that these two flagship programs, and in future, if you want to, do the the PM Kisan, then it becomes still easier. Unless you have a technology platform, it's not possible. And then if you want to add on the MSME customers who are with the banks, again, it becomes very easy. Then, the whole lot of things can be done once you have a platform which connects you and the banks. So, and that is absolutely doable. And I don't think it is difficult. If there are regulatory issues, then we can certainly work it out along with RBI, and IRDA can work together and sort out this issue. I would expect the industry through the councils to come up quickly with a proposal, and where the regulatory clearances are required, then we can work together and get them as soon as possible. The groups which have been formed, as I said, we have already received the reports. Presentations have happened here, deliberations are going on, and I can at least assure you that it will reach its logical conclusion very soon. Yeah. So this we have already mentioned. Chalo, jaldi tikha lo yaar. Time is short today. We have. This is something important which I would like to mention is the mission mode programs. Do you have another slide for this? The mission mode? Can you just, okay, I'll come to that later. But we have launched 5 mission mode programs within the regulatory setup. I'll come to that in details. For technology-led innovation and to onboard insurtech players, and also to give quick clearances to the new initiatives of the insurtech players through the regulatory sandbox is something which we are working on very closely. We had an insurtech conference in Bangalore, which was attended by more than 200 players from the insurtech world, and more than 100 industry players were also participants, and it was a huge success, and I could see huge enthusiasm around the entire ecosystem. Let me tell you that as the regulators, all of us are completely aligned to the fact that technology and only technology can ensure what we want to do in a short span of time. That is to reach out to people and to provide them the services, get them the best premium. All of this can be possible, and the claims settlement possible through the help of technology. We will continue this exercise in a few other cities. From Bangalore, we intend to move to Mumbai, Pune, Chennai, maybe Kolkata, and Delhi. So, and we can have even more if you all come up with suggestions that we need to have such, tech conferences in the future. The hackathon has already been announced, but the formal announcement of, the start of the event will happen soon. The hackathon, actually around 10 to 12 problem statements will be made. and the players will come up with their solutions, and then we are providing them incentives in terms of monetary rewards, and also if they choose to, straight away onboarding with an insurance company. So such kinds of incentives are being built into that system. We would like all of you to also encourage players to participate in this hackathon. The recommendations of the Insurance Act I have already mentioned broadly, so will not go into the details. These are the thematic working groups which have already submitted the report, and work is in progress in some of them, and the others have been done. Mission mode programs are something which should also interest you, and we would like you to also partner with us right from day one, so that we move hand in hand synergistically, so that the day we are all set to launch it, then you are also ready to accept it. And we also intend to connect these new initiatives through a technology-led platform or a technology-led solution. So the first and foremost is developing and implementing a risk-based supervisory framework. We want to move away from the current compliance-based, which doesn't tell you about the risk which is sitting in the company in different places. So a risk-based supervisory framework will actually give us the knowledge and insight as to how that company is in terms of their risk parameters, and then corrective actions can be taken rather than waiting till the end of the year. You can do that concurrently. We expect this to get completed in the next 6 to 8 months' time. A dedicated vertical has been set up in motion here, and very soon they would be engaging with you all, and would be expecting that small teams from your side are also constituted, who consistently and constantly work with this team, so that they are in sync as to how to take this whole initiative forward. And so that is one big initiative that we have started. And you would all agree that RBSF framework will be an holistic kind of supervision of the insurance market. It will certainly enable both you and us to understand the risk profile. It will shift from the one size fit all to a more customized approach. And the supervisory intervention would be also proportional to the risks. So this is something which we want to bring in very fast. We are also trying to onboard a knowledge partner. We are looking at the other international bodies which have already adopted this, or the jurisdictions which has adopted this. We are looking at our own regulatory setups here, the RBI and others who have already moved towards that. So with all those inputs, I'm sure we would like to create something which will be the best in the world. Because if we are doing at the last, so we should be the first one to be the best. So that is what we are aiming to do, and would require and seek your cooperation wholeheartedly in this effort. Risk-based capital is a talk going on for quite some time. And although some preliminary work has happened here, but I think a substantive amount of man hours has to go into this. This is a slightly difficult and longish one, as I understand from the experts. But again, our target should be between 2 to 2.5 years. We should accomplish this goal also. This, I think, is a much needed one, and which will help you in managing your, the capital requirement in a much more efficient manner. So that is one which we are working on. The IFRS and the IND AS is something internationally. I think on January 23, they are switching over to this new framework. This will also help adopt the global insurance accounting standard, and therefore help all of you to even mobilize resources from abroad. And it will improve comparability, it will increase transparency, and all other associated benefits will accrue. A small presentation will be done in the next session, I think before lunch. So you will get a better insight as to how we are intending to take this mission forward. Then, of course, the InsurTech we have already discussed. Again, a top priority. All dedicated teams are working on these pillars. And then the last one is the grievance redressal mechanism, which we have already discussed, the Bima Bharosa portal. Next. The regulatory approvals and the the rationalization is something again which we are working on. Regulatory approvals are being rationalized. For example, the other forms of capital, we are contemplating to give you the dispensation that you don't need to come to us again and again. You can do it on your own. We are also planning to even enhance the cap from the current 25 to 50%. So that should be able to give you the comfort of raising capital, and also the regulatory comfort will be also there in terms of the total requirement of solvency. Then even section 48A, where you need a prior permission for the appointment of the independent directors, that also we wish to create a framework and delegate that responsibility to you and your board. Remuneration of the CEO MD also we are working if we can have a band, and then you can decide based on that. So that is something we are working on. And if we are convinced that that would work, then we will be notifying that as well. The TATs, the turnaround times, are being shortened in each of these processes. And while we are going to give away a lot of responsibility to you, I think a lot of our time will be freed up. Like RBC will free up your capital. Similarly, giving away the responsibility to you will free up our time. And I'm sure we will be devoting more time to the developmental role. And the RBS, RBC, all these frameworks should be able to help us in monitoring the risk profile of the companies. Onboarding new players is something, again, top priority, because 70 players perhaps in the insurance industry of size like India, country like India, and the economy the way we are growing and we are poised to grow, we need many more players. And we need players, differentiated kind of players. You need small players, you need micro players, you need regional players, you need niche players, you need large players, you need very large players. So all of that is required in this country. So in order to do that, the onboarding process, or for acquiring the registration, which allows them to start their operations, is a slightly cumbersome one. And not much is understood as to how the application has to be filed and what are the requirements or the expectations of the regulator. So we want to end that uncertainty by placing a guidance document or the FAQs before an applicant files his application. Why I'm telling you this? Because you are the ambassadors of the industry, and the word of mouth to the prospective investors or the newcomers will always definitely give them the confidence when you speak or when you speak to the media as well. So the guidance document. Then the second thing, the NOC which is required to go and register with the ROC will be an automatic process. You just apply and you get a generated letter saying that you are successfully registered with us. Then they can go with that letter to the ROC, get them registered. So we are making it absolutely simple. It was taking quite some time out here, but now that has been shortened and an automatic process. The third thing which we are doing is that we are creating a facilitation cell. The moment an application is filed, a facilitation cell will get established. And 2 officers will be escorting that particular entity till the registration is given and they start the operations. Then it collapses after that. And whenever a new application comes, then 2 new persons again come up. It's not that the same person is going to escort every entity that they wish to set up. So this is what we are planning to do, to sort of do the hand-holding and walk them through this journey of getting the clearances from the. Otherwise, a lot of bad mouthing happens that the regulator is indifferent and a lot of time is required and it gets stuck there. So we don't want that to happen, and clearly give a signal that we are here to welcome more and more proposals and more insurance companies to come into the market. Then the next one is on the consolidation. I've already spoken. Can we move on to the regulatory sandbox mechanism? Currently, the regulations, I think, are a little short-sighted, and it doesn't give you the kind of bandwidth it requires for the products to be tested in the market and then get the final approval. So we are in the midst of amending those regulations, and I think in the next couple of weeks we should be out with the revamped one. So that is something work is on. Next. Yeah, another concept I would like to leave this thought with all of you, and we are going to deeply engage on this subject as we go along. is of creating a channel called the Bima Vahak. And this will be an intermediary, obviously, a person from the community itself. And it will be a technology based, the person will have some kind of tech enabled system to reach out to the customers. It could be laptops, it could be tablets, it could be smartphones. So that digital footprint of the customer is captured right from the beginning, and everything gets accountable as to what kind of underwriting has been done. And we also thought it will be appropriate to have a women-centric force. And why women? We all know that the power of women, the decision making, the spending decisions are now increasingly being made by women. Some survey where I think I came across more than 56% of women today decide, they make the decisions on spending. So I'm sure that this percentage will still go up. I don't know whether Mr. Bhargav and Mr. Ritesh, they decide, or their better half decides what is to be spent. But obviously the women of the house. Okay. So let's repose the and they have the power of convincing. They have the power of explaining. So, and they can reach out to the household and explain the women of the household. So let's try to create a force so that they, and whether it will be an incentive model, fee-based model, or whether it will be a commission, so that we can all discuss and debate. We need to draw the contours of this and how do we have individual bank Bima Vahak, or we have corporate Bima Vahaks like what the banking correspondent system has. That are all matters of detail. I think we need to form a group and then sit and threadbare discussions and come up with this new formulation. And then this we can launch it, through some dignitary so that it gains traction and also gains attention. And I'm sure this will be a big game changer. And I said underscoring the fact that it has to be tech enabled. So right from the day one, if they are tech enabled, then you are capturing all the data and everything. Then the technology interface between the banks, we have already discussed. This will help us really in ensuring or deepening the insurance inclusion part. So we'll be able to reach crores of people, which we'll not be able to do through the foot soldiers, that is agents and others. They are necessary. That's why I'm talking of the Bima Vahak as well. But this will enable you to quickly get on to the customers and sell your products. Bima Bharosa portal we have discussed, awareness campaign also we have discussed. So these are the things that now we'll move on to now the developmental agenda or the developmental items that I have for you. You see, if you look at the penetration, we are really at the bottom. We are just at 1% as compared to the global average of 4.1. And if you look at the other G7 and all, they are much above 4.16. But how do we catch up with this 4.16? Now, what we have done here is that we have looked at what will be our GDP growth. We have also factored inflation. And then we are making certain projection as to what should be the CAGR in the next 5 years in order to, at least from 1.18, we move year upon year, 2.01, 2.52 is what we are going to reach by FY 2027. And based on that, what will be the premiums look like, we'll just show you in the next slide. So, no, not the segment wise, overall premium. Yeah. So the general insurance industry, FY22, we have reached 2.20 lakh crores. So if you want to touch that insurance penetration, which I showed in the previous slide, then you need to underwrite premium worth about 3 lakh crores in 2023. So that becomes your bottom line. You can do 4 lakh crores. I'm going to honor you by the topmost dignitary of the country. So that is what I like to challenge you, and also assure you that in this journey you will not be alone. We'll walk the journey with you as well. Then FY24, you need to reach 4 lakh crores, and then 566, 8 lakh crores, and 27, we should be somewhere around 11.73 lakh crores. I don't think it is impossible. It is absolutely doable. In fact, some of you have already achieved that CAGR target, so it's not difficult. I think the small players need to really aggressively grow and become big, and the bigger ones should become even bigger. So that's what we are looking at. We'll go to then we have tried to break it up industry-wise, I mean company-wise. Next one, please. And I think you got your emails last night. So if you not, you can just take a quick look. So actually, we would like to see skyscrapers all around. We don't want to see these small huts and dwellings. So that's the projected targets. And let me tell you, when we did the same projection yesterday with the life companies, they were all very, very excited. And in fact, I mean, none of them said that it's not possible, that we can't do it. We will certainly go back to our drawing board. We'll go back to our boards and place, because some of them had already gone to the boards. One or two of them actually matched whatever they had taken and what we had projected. So my request to all the very, very, dynamic CEOs is that really now plan big. Tell us what we need to do. We'll do whatever we can. And we are already in that journey. We also want to sort of join hands with you in going to wherever you want us to do. Like we said, our meetings, these bi-monthly meetings should now happen in the state headquarters, where we engage with the states, because they are one of the most powerful stakeholders in this whole ecosystem. We haven't tapped them yet. In fact, the banking system, why it is growing so aggressively is because of the state governments getting involved. So they have something called a state level bankers committee meeting, which is chaired by either the chief minister of the state or the chief secretary. All the bankers are there in that meeting. There's one lead bank, and the other banks work with them closely and achieve the credit targets. They look at the credit deposit ratio, how it can improve, and all of that. So what I'm trying to also request the RBI and the Ministry of Finance is to include insurance in that SLBC forum. So that becomes a regular item of monitoring. It becomes state level bankers and insurance committee meeting. A replica of that is available in each of the districts, which is chaired by the district magistrate. And we all know in India, the district magistrate institution is a huge influencer. They have a huge authority and power to get a lot of things done. They can drive this growth of insurance penetration. So we need to involve the states so that there is a multiplier effect of our efforts. So when we move on to the next state meeting, we will do it there. But before that also, we are planning to do something different as well, parallelly, in order to connect with the state government. Now, we have never tried to, position the insurance industry as to how it is helping the state's economy grow. Your AUM, I mean, quite a bit of it is actually going towards the state development loans. So if that kitty grows, the AUM grows bigger, then, the states will benefit. Infra funds going to the states through your, AUMs. So if the states are made to believe that if they contribute to this kitty through insurance, the people get protected. At the same time, these monies will get channelized into productive growth instruments within the state. And it is a win-win for the state, win-win for the country, win-win for you, win-win for the people. It's completely, a win-win for all. So let's work on those lines. We are also now trying to devise a system where each one of you will be allocated 1 or 2 states as the lead insurance company, and an officer from the IRDA will also be deputed for the state to be partnering with you to engage with the state governments and take forward this initiative of insurance penetration and insurance inclusion. Next. Well, there are a host of other issues where I think where is that segmental thing? I think we skipped that slide. Can you just? Yeah. I mean, it's a little disappointing that in some of the segments, like for example, fire, I think includes property and all that. I mean, why we haven't grown this in this segment is something which is worrying actually. So there are what I am told is that there are 30 crore residential units as per the 2011 census report. This would have grown from 30 to 40, 45, 50 crores even. Why? Because there has been a lot of supply of houses through the Pradhan Mantri Awas Yojana. So all put together, the Pradhan Mantri Awas Yojana is again a low-hanging fruit. I think you need to work with the Ministry of Housing and Urban Affairs as to how we can provide insurance along with the around the time when they actually apply for the loan and the subsidy. It can be a bundled product. So, I mean, you have to take the initiative. We are there to support you. Similarly, if you look at the rural sector, hardly any coverage, 1%, 2% coverage would be there as far as the farmers, the small traders, or you have across the country. If you look at the tier 4, tier 5 cities or towns, or the mofsil areas where there are small traders, grocers, dukaan hai, but they are not insured. How do we capture them? So the fire segment is something. Recently, we have also freed up. I think there were some restrictions, unnecessary imposition of restriction that you'll only sell what we have decided. We are not going to design products unless otherwise it's a flagship program and we all agree it makes sense. So we have freed up completely. You can launch your own products. You can price the manner you want. When it came the question of price, I said the market will decide. If you price it high, nobody will buy from you. He prices it appropriately, his product will sell. So let's not get into that. And secondly, we have also instructed the reinsurance companies that the so-called burning cost of what the IIB is only a guidance for you to factor it. You factor, you don't factor, we are not concerned. But that cannot be the benchmark for deciding what will be the price for reinsurance. So it's a free market, so you decide what should be the price. We will come into the reinsurance subject, which is the matter. It's a pain point. So we will discuss and try to find out and work out some solution. Then motor. I don't see any sincere effort. Like my colleague said that why can't you suggest that we'll sell when the new car or a scooter gets registered, 15 years, you get a 15-year insurance. You discount it in a manner. I mean, of course, the actuarial calculations, etc., has to be made. But we are open to that kind of giving a long term. In fact, we were even contemplating why not we request the government to give some income tax concession that in bulk, if you buy the motor insurance, then you get this chhoot under the section 80cc. Similarly, if you go for a long term house property cover for say 10 or 15 years, you get, say, 15,000-20,000 worth of rupees concession in the income tax. So perhaps, but we need to come up with the data and how we are going to do, only then we can convince the government, yes, it makes sense to give some kind of concessions. Similarly, we were thinking of for life cover up to 1 lakh if there is a separate carve out. So about 1.5 to 2 lakhs if we allow for insurance, then it is going to, I mean, become a good sort of attraction for the people to buy insurance products. But for that we need the commitment of the industry. हम concession ले भी आए उसके बाद एक भी नहीं बिका आपका तो हमें छीछा लेदर हो जाएगा फिर. So we have to have a full commitment of yours. Only then we go with some statistics and data that this is the kind of traction that we will get once this is done. So I would request again the industry and the council to also tell us, give us an idea and what kind of tenure, longer tenure you want for these kind of this thing, and what is the the income tax relief that you would expect. So this is you have to work this in the next 1 or 2 months, or maybe even lesser, so that we can take it up with the government at the right time. Health we are discussing today. We the second half, and the CEO of NHA will make a presentation on the digital initiatives that they have taken for that identity of the individual, for the portability of data or for the accessing the data, and also the exchange where the claim settlement can happen. So the worry here is about the missing middle. How do we capture them? Here, I think through banks, you're all working with the banking channels, but we are not leveraging it enough. Then there are various other portals which are available. I think Madam mentioned about the Udyam Mitra portal, about I talked about the PM Kisan portal. So all of those data, which are again low-hanging fruits, who already have, uski sara, you know the footprint of that person, where he is from, what is his income, what is his, all of that. So how can we sort of leverage that information which is available and quickly try and reach them? So that is the another important piece that we would like to. Then, of course, others would be miscellaneous, etc., all of that. So now your plan has to be appropriately, when you decide how do we achieve these targets, obviously you will have to look into each of this. Merely saying that मैं भी बोल दूंगा कि हाँ कर लो, but no, it has to be very carefully planned now and executed. In the execution, wherever our help is required as the regulator, we are willing to work with you. Because we have a developmental role as well. So whether it is with the state governments or whether it is with any other agency or any other regulator or the central government, we are always there with you. Next. चलो जल्दी यार, time कम है. This surety bonds, I think, which a lot of efforts, the regulatory clearance was given, but I think there are some hurdles which is being sorted out. But I think you need to actually take this forward. I will request as we go along, you can mention later, ma'am, what is the and what is the solution that you are looking at. Then the second one is the professional indemnity policy. This has also not taken off. I think you need to work on that. The no-fault liability, you all crib about the fact that you are having problems in the settlement, your IBNR, that is being taxed, etc., etc. Now, there is no visibility of this new provision which has come. I haven't seen a single ad. In fact, I didn't know till I came here. How do public become aware that this door is also open for them to get this money by way of conciliation rather than going through the judicial route? So I think the council should immediately start a campaign and ask or tell people that this door is also available. Next. This is what I was mentioning about the adoption of the states and UTs. We have made a tentative allocation, but if any of you would wish to make some changes, you are free to tell us and then we'll make those changes. So if we look at the opportunities, these are my last two slides, then I'll stop. I did mention about the property cover. Motor, only 50% of the vehicles are insured. Now, what are the ways and means we can really attract more and more into this fold? Then recently I'm told that the Vahan data is now going to be on the health insurance, 40 crore, the missing middle. is devoid of health protection. Crop insurance, only 70% of the gross cropped area, 30% is insured, another 70% is uninsured. How do we reach there? And basically the insurance is also primarily in wheat and paddy. How do we move into the other crops is a challenge. We need to work on that. You look at the national infrastructure pipeline, 100 lakh crores worth of projects are already lined up, and the execution and implementation is on. So here there is again a huge opportunity for insurance. Then the asset monetization program of the government is another very important vehicle where you can actually get a good amount of insurance cover here. Aviation sector is again, I would say, growing in this country. How do we tap that? Rather than they going out of the country, how can we tap that insurance? Liability market, again, is a huge one. I think untapped, and you have to take that additional, effort and risk to get into this market. In the long run, it may be a very, very winnable proposition for the insurance industry. Marine, again, I think has potential, and the growth has declined. I think you need to work on that front. Then the other challenges, broadly, we have discussed. If I were to summarize, then how the penetration in the low income segment, people at the bottom of the pyramid, then even further, if you segmentize, then there are layers. There's the farm community layer, then you have the small traders, the grocers, the micro entrepreneurs, the small entrepreneurs. So, and how much of it can we get them covered under parametric? You see, then the trust and the confidence of the customer grows. You promise that if this happens, this is the trigger, then I pay so much of money. The moment you deploy a surveyor, bhai wo jayega, karega, mahina lagega, by that time he has lost all interest in the insurance product. So I think these are some of the issues, not that you don't understand, you don't know, but I still wanted to reiterate and again bring it to the drawing board that we need to be aware of these facts if we want to grow big and we want to grow fast. And all of this is doable. The regulator is completely open to all kinds of new ideas, open to whatever changes that are required to drive this whole effort. However, the bottom line is that the policyholders' interest will be at the top of the chart. And of course, the risk profile, that the promise you are making to the customer should be honored at all times. So that is something the regulator should be pretty much aware of and stick to that. Rest of the things we are absolutely open. So thank you very much for that patient hearing. Thank you.
Thank you very, very much, sir, for guiding us and the industry. I can assure you that sir has a way of getting the latent energy out of us in a very, very active manner. I can see a lot of people looking very bright, and I'm sure you're raring to, participate in the open house, which is going to be the next session. Can I request the boys to have the chairs at the front over here, please? May I request the chairman and the members to kindly come to the dais. So as mentioned by me earlier, we'll start with the health insurance companies. May I request the Managing Director of Star Health, Dr. Prakash, to go first, please.
Can we have the right screen?
On the reinsurance. This about the reinsurance, huh?
This This is about giving your feedback to the various points that have been discussed and any inputs that you might have, sir, to travel the road ahead.
Sir, thanks for that very brilliant presentation, sir. It is we have understood our responsibility that how we can further enhance penetration in health. So, given the health front, today the complexity of health insurance products, it is not easy for all common man to understand. So, we need the involvement of the intermediaries. So, agency-driven channel still appears to be the largest in procurement, sir. So, as you rightly said, that we have to nurture these agents at the same time prevent mis-selling, because the mis-selling is creating a trust deficit between the public hospitals and the insurance companies. So, we take your point that we enhance the penetration in health insurance through whatever possible channels and embed technology into agency channels to see that how we can better the agency channels, and parallelly grow on web sales, telesales, banca, and rural channels. The missing middle, we are very much interested to participate in that. Only thing is our experience in participating in RSBY and other government schemes where the pricing and implementation, if we are involved in the pricing and implementation, and if we can make it viable, certainly insurance can play a greater role and really make healthcare made free at the point of delivery. So healthcare made free at the point of delivery, meaning that these schemes should work really with the purpose of giving the desired amount to the public and without charging anything extra than what is envisaged. So we are very happy to hear from you on the opportunities and the importance on other tech-enabled distributions and managements, governance. So we have made a note of your presentation, sir. On the reinsurance front, we may look forward to a lot of support because, sir, currently the obligatory cession is around 4%. And unfortunately, there is this obligatory cession. As a company, from if I have to talk about Star, sir, we are losing around 12% on that, based on the incentives and the profit commissions. So we would request you to see that, we have this open to all insurers, because the national insurers, they have a set flat rate. And we have been contributing a lot to the profit of national reinsurers. But still, we have been given a flat rate compared to others. So that's one request, sir. The other thing is, so back-to-back reinsurance, there is a limit, upper limit set. So I just want the consideration of reinsurers on that. A pandemic cover. So during pandemic, we had pandemic-specific policies, Corona Kavash and Rakshak. And also most of our existing policies where people went in for pandemic-related admissions. So the pandemic policies originally covered under reinsurance. Finally, then we thought we are told that no more reinsurance coverage for pandemic or Suraksha Bima Yogna. So these things, I think the reinsurers should come for a support and help us to participate in all these noble initiatives with the governments. So finally, the right of refusal, the reinsurers, they have the right of refusal, and we have to go to the national reinsurers and then pitch into other reinsurers. I would request your directions to see that there is no the right of refusal need not be mandated, sir. So these are some of my observations. If there is anything else, I will add on, sir. Thank you for the opportunity, madam.
Thank you very much. Thank you very much, Dr. Prakash. I would request all the CEOs and MDs that we are brief and also basically address the points which Chairman Sir has made in the presentation with regard to, the targets and the road ahead. You do know we have specific presentations on certain subjects, and we could discuss those points then. So next, I would request Mr. Anuj Gulati, CEO of Care Health, to go, please.
Respected sir, members, I think we feel energized to hear everything that you've said. And specific targets are they're steep, they're not achievable. I think we will have to re-strategize. I think the opportunity is there. It's been a supply constraint from our end. You're now freeing up the supply constraints. I have no reason why we will not be able to achieve that level of penetration. I think what you've done through use and file, I don't think, as we've been reflecting on it, the number of new segments of customers, segments of the market that opens up, I think we will get growth. We will get in newer segments. We'll be able to cover newer segments. I think opening up distribution. I think distribution has been key to where we've reached as an industry, and given the nature of the product, I think taking them along with us and further building up, especially as we go into micro segments, rural segments, I think will be key. Riding on existing banking channels, microfinance channels, and so on and so forth. And I think a lot of work will need to be done around products in that area, which again, I think should be helping us. And we take your point around building awareness, sir. Again, it is absolutely necessary. I think there's a lot of good work done. I think the fact that through a COVID period, we are one of the few countries where insurance has stood by the consumers. Even if it was pandemics were excluded, we paid claims, and we haven't spoken enough about this. I think we need to build more awareness, and that's a point well taken, sir. Thank you.
Thank you, Mr. Gulati. Can we have Mr. Vishwanath Mahindra of Niva Bupa? He's the appointed actuary and filling in for the CEO.
Hi, sir. Good morning, and very exciting presentation, sir, and very exciting number, but certainly achievable. Sir, you touched upon this missing middle as far as health is concerned. I would just like to highlight one sub-segment in there also. If you see the senior citizen, this is the segment which needs insurance the most, but it's really, unfortunate that the penetration of health insurance is quite low there. And the main reason is we all know that incidence rate of, hospitalization is very high there. 1 out of 4 gets hospitalized every year. And length of stay also is high. So, sir, what happens is the premium is quite high, and let's say 40,000-50,000 premium. And on top of this, we have this service tax of 18%. So if something can be done, this GST for this subsegment, that would be really helpful, sir, in the short run. And in the long run, that's another irony that when person is young, he has a high income, but premium is low. But as, his age increases, premium becomes high, but, affordability is low. And there is one recommendation in one of the working group around health saving account, where person can save, and that can be utilized to subsidize his premium in the old age. That would be another important recommendation, sir. Thank you.
Thank you, Mr. Mahindra. May now request Mr. Prasun Kumar Sigdar of Manipal Signa.
Yeah, good morning to all of you, sir, and thank you for the opportunity. Just was going through the targets, given the low penetration of health insurance in India, obviously these kind of targets is possible. One thing that is going in my mind, that what are those 2 things which is required perhaps to basically do these kind of targets and grow the market. One is obviously the capital issue for health insurance. Health being a short tail business, is there a need to basically look at the solvency requirement a little differently, which will perhaps, free up a little more capital for growth. I understand that RBC will happen, which will free up obviously some bit of capital based on the different insurance situations or companies. But that would be, let's say 2.5 years from here. So if you have to start the journey today, is there a possibility to basically look at the solvency requirement for health insurance a little differently? That's point number 1. Point number 2 is that whether we like it or not like it, over the last couple of years, there has been a significant growth of health insurance, but that insurance growth has been driven by retail health insurance. And so Sahis have actually played a significant role in actually driving that retail growth, and building up retail challenge requires a different cost structure to basically build up from a long-term perspective. So I think, it is important that whatever decisions we take going forward, which will support the growth that we want in health insurance, we must admit that the intermediaries actually play a huge role because health insurance or any form of insurance in India, being a risk-based product, is a push product. And therefore, we must basically make sure that whatever we are doing, we basically keep the interest of the intermediaries also in place, because otherwise I see a big problem in terms of really growing the business as we move forward. Apart from that, sir, it's been absolutely great. These kind of situations have never happened. I have been associated with this industry for many, many years. But the fact that today we can all stand up and actually ask and have an open conversation, I think is brilliant, and we'll move forward on this. Thank you.
Thank you, sir. May I request Mr. Mayank Batwal of Aditya Birla?
Good morning, sir, and all the members. Thank you for this opportunity. Actually, every time we come, sir, you surprise us so positively with the way you enable us to move ahead. On the target, sir, actually, it's so interesting that what you've shared with us are exactly what we are vying for in the next 2-3 years. So we're very much we'll ensure that happens. I think I'll not repeat what my colleagues have said. I'll just make one point, sir, here that you've spoken about a lot about how do we interact with other stakeholders, whether it's the financial services, RBI, etc., or whether it's at a state level. I think if we can find a way to create some interaction opportunity with the healthcare delivery side, so because finally, both from a affordability, pricing, and also because the service is finally delivered at their end, how do we control the experience of the consumers? If as an industry we can create some platform for that, I think that will go a long way in making this more. I think from a policyholder perspective, really improve the experience and also manage the costs very effectively. But otherwise, sir, thank you for all the enablers, and we really look forward to working on it with you.
Thank you, sir. We will now move to the other specialist companies. May I request Mr. Molay Poddar of Agriculture Insurance Company to give his views and inputs.
Sir, thank you very much once again for your very, very encouraging presentation, the road ahead. Well, since I am from a specialty insurance company, and on behalf of all the players who are into the crop insurance market, I can mention, I can just at the outset, thank you very much for freeing up this 1,400 crore of admissible assets, which will help in solvency requirement for the companies, particularly in the crop line of business. But sir, I did mention in my last presentation that as far as crop insurance is concerned, PMFBI, Pradhan Mantri Fasal Bima, although liability after the claim approval, liability is reckoned in the books of accounts. But scheme says that we need not pay until and unless we receive the full premium. So my second demand will be, other requirement would be that, again, thanking you for freeing up this 1,400 crores, but there is some more room actually for freeing up balance, because anyway, we are not going to pay the claims until and unless we receive. Probably in a staggered manner, it can come from the regulator. Second thing, sir, to enable this road ahead growth, we have mentioned that 70% of the crops are, including horticultural crops, those are not insured. Fully correct? Sir, in this use and file approval, the crop line of business probably has been missed out. Request you to do that. That will help a lot of parametric products that we are designing. And not only parametric, it's a parametric crop indemnity, some blended products that we are designing. If it is, those are sold to the commercial entities. And if use and file is also given to the crop line of business, it will be good. And one more thing on the reinsurance perspective, I agree with what Mr. Dr. Prakash has mentioned, that crop being a very catastrophic kind of protection that we offer is a climate risk. So reinsurance is a very, very important for us, and probably domestic market doesn't serve our purpose for purchasing the reinsurance protection. So there is a clause that for placement into the CBR, cross-border reinsurers, that for the ratings, the security ratings, if it is A plus and above, we can place only 20% of the 20% of the CBR placement, which is a very small amount. I think it should be opened up so that we can match the growth track that we have presented with our reinsurance requirement. So that's all. Thank you very much.
Thank you, Mr. Poddar. Sir, from ECGC, we don't have anybody because both the CEO and the in charge, they were not well. So we now move to the general insurers, others. Universal Sompo, Mr. Sharad Mathur.
Strength. So the targets are achievable to us. Only thing that I see is there could be a capital issue, solvency as we grow exponentially. And of course, as it has already been shared, that there would be a requirement of open architecture in true sense. Maybe we can have, whether it is bank, whether agents, we can have everyone dealing with every insurance company, and then we can have a relook if there is any requirement to be tweaked in the whole process. Also, a lot of tech integration would be needed. Like when we say bank, so integration with their app and all digital assets would also going to support the whole scaling up. And so single expense limit just to make things more ethical and compliant would going to help us in a long way. So that's all from my side. Thank you.
Thank you, Mr. Mathur. May I request Mr. Tripathi of United India, CMD?
Thank you, sir, for a very precise and focused presentation today. I will focus my talk basically on the aggressive targets that have been fixed. While 25% growth over the next 5 years is doable, I would feel that it is rather aggressive. Now, taking from where Mr. Mathur has left, I would feel that the requirement of capital for such a growth is really humongous, and we must see what are the sources that is available to raise such capital. Now, in most of the cases, and where companies are listed, they have an open market for them to raise the capital. But in most of the cases, the promoters have to fill up the gap. The other process of raising a sub-debt from the market, I would feel that it's rather dated and cumbersome at present. We don't have much of an option there when we have a fixed tenure of 10 years with a 5-year call option. But if that becomes more flexible, I would feel that in a rising interest rate, probably the sub-debt route could be available to many of the companies to raise capital. If we don't have access to capital, then this growth projections which is given to us, though doable, will be becoming very difficult days ahead. I will focus next is on the matter which is regarding reinsurance. On the reinsurance matter, I would say that the order of preference should go. Or in case there, we can restrict it to 3 reinsurers, with GIC being one of them. Plus the obligatory cessions of 4% which is there also should be phased out sooner than later. These are my submissions, sir. I would believe that you can have a look regarding the allocation of various states to the companies that have been given. If there is any order of preference in allocating the various states to the companies, would like to know that. But there are certain areas where certain companies are having more focus and more resources available. If that could be considered in due case, I would like to have a say on that matter. Thank you very much, sir.
Thank you, Mr. Tripathi. Oriental Insurance is represented by their General Manager, Mrs. Aarti Mathur. May I request her to give her inputs?
Good morning, sir, and thank you for a brilliant presentation. My first time attending this, and been very eye-opening experience to see where you have the vision for the industry to go forward, sir. Certainly very steep targets, sir, for the growths, though the industry probably is already growing, and as a company, we are also growing at over a 15% growth rate. Certainly health is something which is achievable, but where the public sectors do face an issue is probably in terms of the kind of targets which are set forth for the motor, where probably a more level playing field is required. And that's something that we've been asking as an industry for a long period of time, sir. We have frequent interactions with the Government of India and with the parliamentarians. And usually their concerns rest on 2 points only. One is on crop and the second is on health. Crop, obviously they feel the need that the public sectors to pitch in more for crop. Where we have an issue, obviously one on in terms of the capital requirement that is there, which we are squeezed on. And the second is in terms of the reinsurance, lack of reinsurance availability. So both of these are handicaps which deny the pushing of business in the crop areas. The second is in terms of health. Yes, the concerns always are on reducing the delivery costs. So you can reach the maximum amount of penetration if the delivery costs come down. So there, I think seriously is being hampered because there is no regulation in terms of how the hospitals are administered, and that creates a problem, and it's not likely to allow you to extend it, and the costs are only going to go up on a year-to-year basis, especially with the ongoing COVID, which is not going to go away at all. And of course, motor, as I've said, the third concern area for us is definitely that the level playing field needs to be brought forward, sir. Thank you very much, sir.
Thank you, ma'am. Since we're going to have a separate session on reinsurance, I would suggest that whatever matters are linked to reinsurance be brought out in that session. Let's now restrict ourselves to the points which have been made in the presentation. Thank you, ma'am. May now request Mrs. Madhulika Bhaskar, in charge of New India Assurance Company, to please give her inputs.
Respected respected Chairman, all my participants here. So it's a very good initiative started by the regulator of these bi-monthly interactive meetings that is much appreciated. As regards the specific points that were mentioned, the target, as already mentioned, is pretty aggressive, but it's doable. Keeping the focus on the bottom line would make it really more challenging, as being a PSU, even the DFS has set us a kind of a different targets with KPIs which are now trying to focus more on the bottom line, and accordingly, they are tweaking the growth rate based on the profitability. So we have to balance the targets given by the IRD and those given by DFS with a percentage or a component of the bottom line. Now, coming to the states that have been allocated to us, though these states that have been given do have potential, as already mentioned by Mr. Tripathi, we do have a predominant presence in some other state. So what exactly is the role that IRD is expecting when you say lead the state? So if there is more clarity, or we would like an option to have a relook at the states allocated to us. And just one more point about these long-term insurances which you have mentioned. Just a suggestion, like since there would also need to put in some other complementary, how do you account for these long-term insurances? Because we did have an SBI long-term, and there was a lot of conflict in when we tried to account it between the CAG auditors, and there were different perspective on it. So some kind of guidelines when you account a long-term premium, and how do you, some investment guidelines on it, so that the solvency aspect is really well balanced and maintained. That's it. Thank you, sir.
Thank you, ma'am. May I request Mr. Nilesh Garg of Tata AIG, please?
Good afternoon, sir. Good afternoon, members and all my friends and colleagues of the industry. Sir, it's from the presentation made 2 months back, I've never, in my 20 years, never seen this kind of speed and execution on most of the action points, so thank you for your vision and leadership. So the targets given to us, stretch targets, but I think, they are very much achievable. I think the two key words, would be opening up of distribution and technology. I think those are the two key things, which stand out for me. The only other comments that I wanted to make was that so far the growth of the industry, if I may say, has been cannibalistic. So there have been existing pools of assets or customers, and each of the company, has been doing that. I think, what you've been showing in the presentation, that as an industry, we need to open up our minds, to exploring new segments, whether it's MSME, missing middle, the rural population, home insurance, those are things. I also, sir, wanted to make a request. I think from the council, General Insurance Council, needs to be also playing a very dynamic role in brainstorming some of these concepts, because, home insurance, there is a reason also why it's not taken up. So what are those systemic issues? I think the council, can do a lot of these sessions, and if there are further points which come up, because each one of these points, home insurance itself could be, sir, a 1 lakh crore premium. So I think some amount of brainstorming, could happen that, and that could open up new avenues, for growth. So that's the only point I wanted to make. Thank you.
Thank you, sir. And now request Mr. Agarwal of Shriram General Insurance.
Thank you, sir. Thank you for the great presentation. We will request, sir, if there are 40% is the uninsured vehicles, how we can insure those vehicles, if any linkage can be done with the RTO or with some authority, so that we can get the details for those RTO uninsured vehicles, message can be sent or some communication can be sent. That will be a great help for insuring the vehicles. And another thing, the targets are good, achievable, but the pressure will come because of our regulation that we have to book all the upfront expenditure in the current year. So we may be showing more losses this current year. That will be the impact. If the deferment of the expenditure can be done, that will be a great help for the industry. Thank you, sir.
Thank you, sir. We now request SBI General Insurance Company. We have Mr. Kanpal. May I request you to give your input, sir?
Yeah, good morning, sir. Now, I think our discussions in the boardroom and the management discussions have changed now in last 3 months, and we are talking about more opportunities than anything. So I'll talk about two things: expanding distribution for increasing penetration. So how can we leverage BC channel, sir? You must be knowing that around 169,000 BCs who can be leveraged for this purpose. Second part is, sir, how can we engage these people for claim processing? Because see, even whatever we say, whether it is technology or something, unless we have got kind of RFID which tracks the movement, or geotagging which tracks the movement of anything, be it cattle or anything, it will take some time. I think how can we leverage the presence of distributors for collecting papers or paying claims, small claims, maybe in micro segment or other thing. Third thing is about health insurance. We need to increase penetration. And when I see that I'll be superannuating in 2 years, my worry is that what will happen to how will I pay premium after that? Can we bundle some kind of this insurance plan with mutual fund? Because I'll be putting all my kitty, whatever we get. And I think there are 1 crore, more than 1 crore employees now who would be worried about on retirement, how they will be paying this. So if you can bundle this with mutual fund and the premium gets deducted as part of SWP, I think that will help in increasing the health penetration. Thank you, sir.
Rakesh Jain of Reliance General Insurance Company.
Respected Chairman, sir, all the members, thank you for this opportunity. Every 2 months, if we get these targets, I guess it will be very difficult for us to handle ourselves. But thank you so much for setting the tone, sir. I'm not repeating a few things, but I think it's a systemic thing we all need to come together. I think apart from the fact that there are specific points, areas we have said, it's equally important to really brainstorm what is the collective strength we bring into, together as insurers and maybe all the other people associated with insurance industry. I'll give you a simple example just to illustrate my point. We are all talking technology, and we know today it's a big spend. Like a company like me spends 100 crores on technology every year. Half of that money really goes in keeping the lights on. Nothing much, buying licenses, buying various things, hosting on the cloud and all. Frankly speaking, if we have to really look at your targets, I think my 100 crores should become 1,000 crores. Now, what I also see is when I spend 1,000 crores, a few of them will really, won't matter after 2-3 years because you'll have to write them off. I think we need to really see what is the basic hygiene level of technology we create at the industry level. Like, for example, what today Mr. Sharma will present for ABDM, I think is a fantastic way of saying what can we do the same in motor, what can we do maybe same in householder, and potentially link that with awareness and the credibility which the industry gets out of it. And maybe the claim hassle on all these things frankly come like a hygiene on the platform. Insurance companies should ideally innovate on top of that. If we really try, every one of us tries to build like a stack up, I think it will become too much, too onerous for us to really do that. So I feel brainstorming for our collective strength is very important, sir, if we have to run, 1 lakh crore every year. Second thing, sir, capital, and I think it's also the need of the environment. We raise capital and we have to give return on capital. I personally feel that we have a lot of static rules, like, on the solvency, we put 50%, 70% static, whereas our retentions can be much lower. It's time for us to, quickly free up some of the capital, including crop insurance dues, including tax dues. There are so many places, sir, we can release. On a simplistic basis, sir, to do 1 lakh crore this year, which is the target you are proposing, the industry needs 25,000 crores of extra capital, presumably if everything is fully deployed. 25,000 crores, if you ask me, the industry just makes 5,000 crores of profit even in pre-COVID days. So there is no way the balance 20,000 crores can be just assumed. We need to dip in efficiency, raise here and there. But it's a stretch by any imagination if we continue this on a 33% or 35% growth rate for 5 years. I feel, sir, it's important for us to say insurance companies are credible. Can we raise alternate forms of capital? Maybe like an ART, maybe like a cat bond, maybe even, tier 1, tier 2 in the longer run. As again, just looking at pure equity coming from, the promoters. And I think listing of companies can really help further in broad basing our avenues of raising money. So these 2-3 things I serve is important. Lastly, sir, ease of doing business, I think, is the theme. I think tax authorities really breathing down our necks, creates a lot of challenge in our day-to-day stuff, sir. Our boards also are really concerned every time we go to them with a show cause. Sir, a little bit of personal help from you will be help. The credibility of this industry perhaps is not understood by people. Sir, we paid 35,000 crores and you rightly said we never publicized. I think somewhere, the tax authorities and all need to realize that we are doing a service for the common man and as against doing like corporations. So these 3 things, sir, if you really set it, I can assure you, sir, these growth rates can even be overachieved because that is what in the 20 years in this industry we had come to set out for. Unfortunately, we went through a lot of phases of opening up. Even pandemic was unanticipated, but this industry is strong enough to give what we need, sir. Thank you, sir.
Thank you very much, sir. We'll now move to Raheja QBE. May I request Mr. Arora, please?
Very good afternoon, sir, and thank you. We are all charged up. I think we all, as insurance industry, had different journey. Each company had different journey. But the way we look at journey forward with your guidance, it looks very exciting, sir. Couple of things. I think the growth path that you have set is ambitious but achievable. And 4 pillars to that would be, the way I see it, would be regulatory comfort, which you have already given, capital, which Rakesh spoke about, distribution for sure, and technology. I'll just touch upon one distribution point, which is bank assurance. I think while we are looking at other reforms, if we can look at bank assurance as well and opening it up for more than 3 players for GI and that pace, that will again help because there are large banks spread across country, and if that can be regional or some kind of reforms there would help new entrants and smaller players to also enter into that segment, which today we are not able to. And I think. As I said, completely charged up and completely lined, sir. Thank you.
Thank you, sir. Navi General Insurance is represented by its Chief Business Officer, Mr. Vaibhav Goyal.
Good afternoon, sir. Good afternoon, members. We are a new insurance company, and often, when we're doing product innovation or distribution, or we've been building digital journeys, we're a purely digital insurance company, and often we face a lot of issues that this is not possible, that is not possible. Today I'm walking back with a lot of confidence that we'll come back with a list of suggestions, what we'd like to take up, some of the ground realities we have hit, be it product innovation or claim settlement. Another point I just wanted to react upon was while we are going in the right direction in our pursuit to reduce dependency on intermediation, and our thought process is product innovation is the only way we can sort of that's the only path we can take to reduce dependency on intermediaries. So while we have taken the first step, that is use and file, and we're a new company, and this comes like a very big surprise for us. There's still some suggestions we'd like to keep forward in terms of how can we make existing products more agile. So while we have opened doors to file new products and make them very easy to launch, be it when it comes to existing products, there are still certain changes to be done, which we'd like to put forth to the regulator and work with you to make the process easier.
Thank you, Mr. Goyal. May I now request Srimati Suchita Gupta, Chairman and Managing Director of National Insurance.
Good afternoon, Chairman, members, and all my colleagues. Yeah, the targets given was the first thing we saw in the morning today, 25% hike, which was a little, initially it was a little shocking or surprise to us, or to me at least. But after going through all the, things shown by the chairman and how much the regulator is going forward in his insurance awareness and all the steps being taken by the whole industry, we are sure we'll be able to make it happen. And of course, this will require a lot of capital, as Mr. Tripathi has said, and being a PSU and also the targets given by DFS to us is more profitable growth and to maintain our solvency. For that, we would just request, I don't know whether there's a forum to say when all insurance are present, but especially in motor and in fire, the amount of, if we could have some benchmarks below which we wouldn't go down in our discounts, that would help us at least maintain something and have some profitable growth. Because in this bargain, it is in the insurance industry who is suffering to a large extent with a low premium, and the clients are getting the benefit of it, so which will help us all grow in the positive way and attain the premium targets given to us, along with our solvency, keeping in view our solvency also. Thank you.
Thank you, ma'am. We'll move to Magma HDI General Insurance, Mr. Rajiv Kumaraswamy, CEO.
Thank you, sir. Very refreshing session as usual. Just a few suggestions, sir. While on the distribution side, it was referenced in the committee report, which was the need to make KYC mandatory. I think if we can push on that agenda, it would help, improve the cross-sell and the penetration agenda. Second, in terms of the capital reforms, I think the other forms of capital, if we increase the limit, it would be absolutely, enabling companies to, raise capital. But there are certain other requirements that, especially in a high growth trajectory, the accounting strain tends to be high. And if you have losses, then again, to pay interest, we again need to come back to the authority to seek approval. If that could also be looked at, saying that if we can even, because as a rated and a listed instrument, if there are any delays in payment of interest, it does create problems. So ma'am, if you could also look at that particular aspect when you're reviewing the other forms of capital circular, it would help the industry. Also a thought whether bringing in the concept of perpetual bonds, like it is in the case of banks, whether it's too early, that is something which you could consider. Other aspects in terms of probably inter-regulatory interactions, which is say IRDA with RBI, if there are some interventions at a policy level, that if a home which has a mortgage attached to it has a lower risk weightage if it has insurance backing it, and banks have to hold higher capital if there is no insurance, may actually push insurance penetration. The same thing may actually work on surety bonds, sir. Right now, we are looking at, say, insurance companies offering surety bonds, but if banks are able to create capacity and insurance can, say, guarantee the banks, and then banks are able to hold lower capital if it is counter guaranteed, it could help banks create capacity on this instrument. Two other themes which again were there in the committee reports, but since there was no mention on it, on the issue of fraud. I mean, to build in strong fraud deterrents as an industry, if the messaging goes out that we will work on eliminating the element of mistrust, but we will go strongly after fraudsters. If that message could go out strongly, it would be great. The last theme is the need for capacity building from skilling. I mean, we will need as an industry a lot of people if we have to reach these targets. So some work that we may need to do in terms of creating capacity, whether it's surveyors, whether it's underwriting, whether it's actuarial capability. I think if we would need to apply some thought so that we build on that foundation, it would also be a great initiative. Otherwise, fully energized and aligned to meet the targets that the authorities set out. Thank you.
Thank you very much, sir. I'm sorry, while going in the order, I seem to have missed Royal Sundaram. May I request Mr. M.S. Sridhar, please?
Thank you, Chairman, sir, and other members.
of IRDA for this opportunity. I must confess that internally our target was a 20-22% growth over the next 4-5 years. But I think looking at the numbers that I saw in the mail, it's almost doubling the target, which means we had to work on double engine. But I think having seen the presentation today, if you are addressing the ecosystem to spur growth, that I think gives us a great confidence and belief that we can work together and achieve this. Couple of points on the general insurance side. You mentioned about in the last presentation that the penetration in tier 2 plus towns is very low. You also said that 70% of the consumption is going to happen in tier 2 plus towns by 2030. But we have also seen that in terms of underinsurance and uninsured population in these tier 2 plus towns, it's very high. Accessing through distribution and reach through agents and point of sale persons in these markets will mean that we need to really encourage and motivate them to, because typically our tractor renewal retention is less than 10%, our two-wheeler renewal retention is less than 20%. Obviously, it means multiple visits, engagement with the customer in those towns and villages. If we can look at a higher compensation or commission for this set of customers in tier 2 plus towns, like in the case of SEBI has done for mutual fund, where they are saying that, if your money comes from cities other than the top 30, you can spend more. This is just to ensure that we are able to reach out to that market. Number 2, in terms of this crop insurance, while we are very happy that the dispensation has been given up to 365 days, but I think there are state governments, monies are pending beyond 2 years as well. According to the Lok Sabha, this information almost close to 5,000 crore is pending from the government. Our own company, in one of the states, we have almost 240 crores of capital locked up because of the delay in payment of premium. This is one issue that we are grappling with the state government. The central government is willing to pay, provided the state government settles it. Claims are held up, money is held up, capital is locked up. And this is something that we need to address if we want to really make sure that this is a long-term, drive in terms of this business. On missing middle, sir, we did participate in the government did invite the insurance companies to do some pilot with some select groups. We did participate in a bid for 3 groups: affordable housing loan customers, small traders in Tamil Nadu, and also goods carrying vehicle borrowers. But I think they have put it on hold. I'm sure the NHA authority will revive this. We think once that is done, we are very actively interested in participating and helping that segment of the society. Sir, in terms of MSME, currently the banks have the best reach to the MSME customers because their network of branches, they are lending money, they are accessing customers, they have an insurable interest on the assets that they have funded. But currently, as per the corporate agency regulations, if the sum insured per location is less than 5 crores, then only the banks are entitled to commission. I think if we can align the payment of commission to the MSME definition of the government, which spells out definition for small, micro, small and medium, which is, I think, talking of 50 crore assets and 250 crore kind of turnover. This will help the banks to reach out the MSME customers and drive this insurance for us. So this is something that requires a careful evaluation. We suggest that can be looked into. In terms of this 40% growth, sir, obviously it will demand a lot of capital infusion from time to time. And it will also mean that the frequency of capital infusion may have to be higher than what we have experienced in the past. So if the sub-debt limit can be increased, I think, which is something which is under consideration. And also we look at other forms of capital, which the company can raise on its own without having to get the prior approval of IRDA. That should speed up the process of capital raising for us. Thank you, sir. Those were the suggestions from our side.
Thank you, sir. May now request Mr. Rupam Asthana, CEO of Liberty General.
Good afternoon, sir. Good afternoon, members. First of all, very excited and optimistic about the prospects of the industry, as you very rightly mentioned. So, a couple of things that I would like to highlight. So, one is the need for capital. And I think what we need to brainstorm is what is holding back foreign capital from coming into the country. So, is it the lack of underwriting profits? Is it the uncertainty on the motor third party portfolios that the companies today have, or something else? And how can we attract that foreign capital? I think that will hopefully bridge some of the capital need and requirements that we have. So the second thing is focusing on what you talked about in terms of growth. So while one way of growing is by bringing new to insurance customers into the fold, the other is through cross-selling. And I think what we need, sir, is industry-focused KYC. So today we don't even know how many of our customers actually own a home, how many of them are actually running a shop, or what profession they are in, or what is their family size. So both from a health point of view, MSME, small business point of view, home insurance point of view, if we are able to collect more information through the KYC route, the cross-selling process will become easier and make the distribution more efficient. So the third thing I wanted to talk about was you spoke about making distribution more efficient. So is there a way in which, all of us can actually cooperate and use the same distribution to sell multiple products? So for example, can I, as a general insurance multi-line company, pick up products from a health insurance company and sell it on a commercial basis? So what that will do, sir, is that will help make our distribution system more efficient and create actually, dependence within the industry itself and help us collectively to grow. So the last thing I want to talk about is something which you talked about is in terms of the Bima Bharosa. And I think when I look back at my experience in credit cards, when there was a problem on mis-selling and challenges in credit cards, what the RBI did was they brought out something which was called the most important terms and conditions, which actually mandated even a font and the what is actually needs to be covered. So if we could do something like that on a multilingual basis, I think that will develop a lot of trust, because then there is something which the policyholder can go by and actually hold the insurer accountable. So these are just some of the suggestions that I have. Thank you for the opportunities.
Thank you very much, sir. I will now move on to Kotak Mahindra, Mr. Suresh Agarwal.
Good morning, Chairman, sir, and the members. Sir, as always, your presentation is very inspiring. I come from the life insurance industry. It's been close to a year, and we are a 6-year-old company. So I noted down the numbers that you have chalked out for us, and perhaps it meets our expectation. I think it's kind of beating the expectation of the board and the shareholders. So a pretty inspirational number, sir, as your expectation is from the industry. The two areas which I find as problem areas here is one, I think most of us have echoed that capital perhaps is really a limiting in the sense of the more you expand, more it drains out your ability to mobilize money. And the second is on the quality of data. I think we just heard Rupam speak, and similarly others, that we don't really have KYC. So our ability to do analytics and play with the insights of the customer is completely missing, and which is what's there in case of life insurance industry. So I really find these two areas as the areas where perhaps we can look forward to some solution there. Thank you, sir.
Thank you very much, sir. May I request Mr. Suri, CEO of IFCO Tokyo General Insurance.
Good afternoon, sir, and my dear friends. Most of the points have been touched upon, but I'll simply confirm that the targets which have been set by the authority are definitely achievable, but with the challenge that about the raising of the capital. I mean, that is a limiting factor unless until companies go for the listing. But as far as the reforms have been done by the regulator now, I mean, things looks like that the future is great for the insurance industry. But there are certain areas, sir, I just want to touch upon. My learned friends have also touched upon the crop insurance, and we are one of the active players in the crop. What I feel this scheme is not being now governed or controlled by the government in an effective manner, because we are left to our own destiny. Despite of doing all sort of services, we are being played by in the hands of the state government. I mean, they are not releasing the money. Otherwise we are under strain for our capital adequacy ratio also. I mean, we have appealed for also, you have relaxed from 270 days to 365 days. That is okay, but still I feel that will not be sufficient. Something great has to be done if we want to implement this scheme in an effective manner. And even if we approach the central government, why there is a condition that unless until first state government will release the subsidy, then only central government will come to the picture. Because the companies are facing for the capital crunch. This is one. Secondly, sir, there is a need for reforms, not only in the general insurance industry, but on the distribution channel, I would say, by the hospitals in the country. No, those needs to be, I mean, all those hospitals has to be regulated in terms of the rates, in terms of all the procedures. Then only I think we'll be able to reduce our costs. The other area where we have a lot of scope is obviously cooperative sectors, banks and societies. And there are also some reforms are required in terms of, because they are not financially so sound. So for making them agent and all those things, we need to realign their present limit, reduce the limit from 50,000 to somewhere some 10,000, 15,000. And if we authorize them, that will be a financial inclusion for them. They will have more earning, and definitely they will spread the insurance in the rural area also, sir. So these are the basic main suggestions. One more suggestion, sir. What I have observed over past 10 years, I mean, frauds have been happening in the industries, but there have been no sort of overall control on this fraud. If it is happening in one company, it is not being shared. I mean, even if it is shared, it becomes historical data. Why the regulator is not thinking that way, where the big frauds are there, those should be brought to the notice and it can be shared in the industry so that to stop recurrence of these frauds, sir. Thank you very much.
Thank you very much, sir. May I now request Mr. Bhargav Das Gupta, CEO of ICICI Lombard.
Thank you. Good afternoon, sir. Good afternoon, members. Thank you, as always, for the opportunity. And as always, it's really inspiring to listen to your plans for the industry, and really excited to see the speed with which the changes are being brought in. So a lot has been said, and I think my colleagues have covered quite a few points. I just want to touch upon some of the specific, comments that you had in terms of the thought processes, and I'll, maybe, give some suggestions if it makes sense. So you talked about awareness and you want us to do something within 1 month. A couple of years back, we had, as an industry body, we had thought that we'll spend about 5 basis point of our GWP as GI Council. And we had done some work. It unfortunately didn't see the end of the day, largely because due to other, pressures, some companies couldn't contribute. Now, when you look at the mutual fund industry, they've done it well because there is a mandate to spend 2 basis point of their AUM. Maybe a similar mandate would be required to help all of us, get the internal support to, provide the same 5 basis, maybe 5 basis point of our GWP. And if that can come fast, I think the schemes and the plans are all ready, and campaigns are also ready. We can launch that very, very fast. So the second point on, on the reforms that we've already seen, use and file is, again, came as a very, very pleasant and surprise very soon. But just one request to consider all categories, not leave the miscellaneous out, because one thing that we are beginning to see is a lot of customers are seeking products across categories of products. Why do we want to look at a product lens rather than a customer lens? We as an industry don't look at a customer lens. So if a customer is thinking about all types of risks that he or she is worried about, why can't we package all of that together and give it? It'll bring down distribution cost, per product, and hopefully will, create stronger linkages with the customers for a longer period of time. To be able to do that, we need to look at all types of risks. Some of them may be miscellaneous category. So if you can't really solve that if you have a, file and use mechanism there. So the third point that I will make is on the point that you made on why not long-term motor, policies. Just again a suggestion. There was a category which was allowed, 5-year OD, which was withdrawn a few, couple of years back. If while we are thinking about the 10-15 years, if that could be brought back, automatically we can start, going back to the market. I think the concern, to voice the concern that was there that time, so that we are all aware, was that is there, a high cost to consumers? But so that's a customer choice. We were seeing about 20-30% of customers buying that product, not 100%. So there was no compulsion. It is a choice, and let customers choose. There is an accounting issue which my colleague has talked about that needs to be addressed on the DAC, but that apart. The other things are OPD. If you look at health, roughly 1/3 of the hospitalization cost, healthcare costs in this country in the hospitals, 2/3 is outside. We haven't solved it. There's a GST issue. There could be an HSS as a solution, but there are a lot of opportunity that we have if you want to achieve those numbers. If you look at the total cost of healthcare, so staying with health, while the government has done a brilliant job with the Ayushman, scheme into the product concept, So there are certain learnings from RSBI which I think is relevant, and I don't know if it's possible to go back and think about changing some of the scheme constructs. But as I said, a couple of elements of the RSBI. One, it was an insurance scheme. That time there was a big worry that insurance is making too much of money, not paying claims, etc., etc. But today the fact is very evident that that was not really an issue. One of the advantages of doing it through insurance model was there was a 30 rupee premium that you took from the customer. What that made us do is we had to go to the ground and do camps and create awareness, and then only someone would pay. The fact that a person was paying 30 rupees made him, there was a skin in the game, and he knew that he had got a service that that was there for him to her to consume. Automatically increased awareness, automatically increased the usage of that scheme. So if you look at Ayushman, I understand that while 40 crore individuals supposed to get that cover, really effectively it's about 25%, which is the true penetration. So I think there's a I don't know if it's possible, but maybe there's some opportunity to rethink the entire Ayushman scheme and bring in some of the element of awareness right at the sourcing stage, and hopefully that will increase the scheme effectiveness. The last point that I would have is package. I've done that. So those are all my 4 points. Thank you, sir.
Thank you very much, sir. May I request Mr. Ritesh Kumar of HDFC Ergo?
Thank you, sir. Sir, all I can say is that there is a lot of work that we need to do, and I think there's a lot of work that we need to do collectively, sort of with the regulator, because the targets. A lot has been set on the target. All I can say is that it's a very daunting one, and it will not happen without a lot of efforts and a lot of thinking on our part to do so, sir. Sir, I just wanted to, I'll not sort of repeat the points which my other colleagues have done. So one is that I think there was a mention in terms of from a fraud perspective, and we know that as an industry we lose quite a bit there. So I think the linking to the civil scores is something that will become very, very important, especially if we have to sort of achieve these kind of numbers. So the second one is that even from an hospital side, sir, I was trying to look at some data, and while data is not really available on that side, but I think we are gradually coming to a stage wherein as insurers, we are actually beginning to contribute significantly to the hospital's kitty in terms of what percentage of their revenue comes. And my idea is that it's some number between about 20-25% today, while earlier it was lower. Sir, I think we'll have to work in terms of how do we make that entire mechanism seamless. And so that's one thing which is there, sir. Sir, Bhargav spoke in terms of long-term on motor, sir. Sir, even on home, earlier there was a construct wherein the long-term was allowed in a much larger tenure. And probably, one would request that that's something which is looked at, sir. So the other one, we spoke in terms of how is it that we can increase the penetration in terms of whether we are able to have a 15-year policy, or how do we work closely with the banks to do that, sir. Sir, I want to just talk in terms of two things which are existent today, sir. Sir, third party is mandatory. Sir, but we can't drive compliance, sir, because this is not really something that we've been interested with, that compliance. Sir, if there could be something, there are places wherein if we can go out and say that petrol pumps will not give out petrol if there is a third party, if the insurance is not there. So there can be, through the InsurTech, we can create a mechanism wherein we can know that what are the vehicles which are running, which are not insured, and it need not be current. As long as there is a policy, we can have a 1 or a 2 sort of 2 month time window, sir. So the other one is clearly, sir, I try to look at some of the loan covenants which various banks have, sir. Practically all loan covenants, be it auto, two-wheelers, four-wheelers, mortgages, sir, all of them talk in terms of 2 or 3 things, and these are also, by the way, part of the Reserve Bank of India's most important terms and conditions, sir. They say that insurance is mandatory. In some of the loan covenants, it also says that the banker is allowed to deduct premium should they so find that, sir. So, this is to the point of homes not being insured in the country, or to the point of how do we drive own damage penetration. So, sir, this is just something wherein a nudge to RBI to just enforce something which is already there in the guidelines. And then it triggers, sir. The idea is not that the banks should be able to do that, but this will actually open up a huge thrust to push these things. Thank you.
Thank you, sir. I will now move to Go Digit. Madam Jasleen Kohli.
So first of all, sir, thank you so much for taking us through your vision. Really, really excited. The numbers given to Go Digit are really daunting. You have given us 100% growth that makes us in 2017 the largest insurance company. So thanks a lot for having faith in us. So, sir, I feel that if we have to look at penetration increase in our country, there are 2-3 things we strongly believe should be done. Number one, the prices have to go down, for which expenses have to go down, sir. And for that, sir, also competition has to increase. We also feel that insurance should be made available to our customers through every distribution channel possible. Now, keeping these 3 agendas in mind, we have 2 or 3 recommendations, sir. Number one, there has to be open architecture. You spoke so passionately about banks, MSME, you spoke passionately about tech. So organizations like us who are tech-driven, who are doing innovation in products, have to be given access to banks, which are today restricted to just work with 3 insurance companies, so that we also, through our innovation, technology, can deliver a much better product to the customers. IRDA has been talking about stopping health products which are linked to loans. We all know that the claim ratios of such loans, such products is very, very low. I think with new companies coming in into the banking infrastructure, much more innovation will happen. Customers will get much, much better products. We've seen, sir, in 2019 when the regulator pushed few large OEM companies to impanel every insurance company. Earlier, they used to work with just 4 and 5. With impanelment of around 18 companies, which the regulator pushed, the price for the end customer fell down. There was a saving of almost 1,500 to 2,000 crores of premium for the end consumer. So we believe, sir, that if insurance penetration has to go up, there has to be much more competition. Every insurance company should be given access to every distribution channel, because by only that, prices will come down and much better products will be sold to the customer. So, sir, this is our first recommendation. Open architecture is a must. If distribution is restricted to a few companies, it will always be giving higher price to the customer, poorer service. So this is first, sir. Second, sir, as I said, that if we have to reduce price, our expenses have to go down. I think IRD is already working on the concept of EOM. We feel that the EOM has to go down for the industry. You should relook at the numbers. There is definitely a possibility of reducing this EOM limits by at least 5%. And you should draw a roadmap for the industry, sir, that in the next 2 to 3 years, each insurance company should reduce this EOM by at least 5%. This is very much possible, sir. A single limit of EOM with some line-wise limits also. It's important that you also give us line-wise limits. Otherwise, the companies who do much business of crop or government health where the expenses are low will of course use this limit towards other retail lines. So there has to be reduction in EOM. There has to be adherence to the EOM limits, also line-wise business. This also takes care of the problem which Rakesh said, that in case there is a single EOM limit, it also resolves a lot of our problem, which today as an industry we are facing from the taxation point of view. So these are, sir, my 2 recommendations. Open architecture will lead to much, much better product for the customer. Please allow banks, POSPs, agents to work with any insurance company of their choice. They should decide. There should be no restriction of 3 companies only working with the banks. Second, sir, prices will go down if insurance companies are pushed to reduce their expenses. So let's draw a roadmap for the next 2-3 years that this EOM limit has to go down by 5%. And all companies should adhere to this. Third, I think few of my colleagues spoke about KYC, sir. Because in case we have to increase penetration, it's important that we know our customer well. So please make KYC mandatory the way it is for life insurance also in the GI sector, sir. So these are my 3 points. Thank you so much, sir.
Thank you very much. I'd request that we make the suggestions incremental. We're making note of all the suggestions that are coming. So we'll try to avoid duplication. May I next request Madam Tanya Chakrabarti of Edelweiss.
Good afternoon, sir. Good afternoon to all the members. Thank you for the guidance, and we need to go back to our drawing board and see how we can achieve the numbers. But given the regulatory environment and the kind of changes that we are talking about, I'm very hopeful that we will be able to achieve the numbers. Thank you so much.
Thank you, ma'am. I now request Mr. Anup Rao of Future Generali.
Good afternoon, sir. Good afternoon, members and dear colleagues. Sir, thank you for your encouragement and inspiration, and thank you so much for your leadership. So I'll try and make incremental points, but I just wanted to state that, fundamentally the regulator needs to address product, process, and distribution, and I think, it's been addressed in many ways. I think use and file will have an impact. Distribution is critical, and the more we open it up, the better it's going to be. Process enabled by technology will make us more efficient in the marketplace. Coupled with that, awareness, which you have spoken about, will lead to greater penetration. However, I just have a couple of points to make. Besides the constraint on capital for growth, there's also this accounting issue around DACing expenses. I think that is something the IRDA could help us with. Besides that, we have a couple of points which probably would come to you through the working group. But to summarize, one was on TP rates. Could we have an automatic increase in TP rates year on year? And maybe every 3 years, through actuarial intervention, they could be revisited, so that on a consistent basis, we have a price hike. The other things are obviously around GST and tax benefits. Is there any way to make the tax structure more competitive, enhance tax benefits? I do agree with some of my friends who mentioned a single EOM line.
We are today largely depending on our investment incomes to have our profitability and return on equity. If capital has to be forthcoming, either from promoters or we have to go to the public by way of listing or even overseas, fundamentally this return on equity number has to go. For that, the underwriting results have to improve. There are several systemic issues here which cannot be deliberated very, very openly out here. We need to have a framework where some of these systemic issues can be resolved, by which underwriting results can improve. So that is number one, because that would be very key if we have to really go down this path of faster growth, which is very much possible. Second is that, sir, this is in the area of long-term products. Very definitely this has made an impact in terms of reducing the level of uninsured vehicles, both in cars and in two-wheelers. Another area that we should immediately proceed is with relating to tractors, which has got the next highest uninsured level. And also considering the fact that the tractor is almost 99 to 100% financed kind of vehicle. So that is something that we should go ahead. Thank you.
Thank you, sir. May I request Mr. Tapan Singhel of Bajaj Allianz?
Oh, thank you, ma'am. Chairman, sir, members. First and foremost, I think in my entire 30 years of career, I never seen such speed of execution from a regulator. So can we have a round of applause for Chairman and the entire team? I think it's phenomenal. I think in just 3-4 months' time, I think the amount of things which already happened and the clarity of what's going to happen. I remember finance telling in the speech, we are in a bit of a hurry. It is not bit, sir. It's like a lot of hurry. And I think that is, I still remember his speech when you mentioned that. So that was very, very impressive. On a lighter note, sir, yesterday evening in the dinner, one of my close friends told me, target mila kya? So I was not aware. I said, target kya hai? Mule target milne wala hai. And I told him, 30 saal shaadi ke ho gaye, target dar nahi lagta. So whatever it is, always good. And I was sitting through the presentation and I saw the targets, and in the morning I got the mail also. I think targets are always very good because it helps you open up your mind. With the way we are currently operating, koi nahi pahunch payega. So whatever people may say, it's easy, achievable. The reality is the way we are doing business today, none of us will achieve the target. That's a harsh reality. But then you have to think separately, differently, and have the excitement that we should cross the target. And then that is how you should be able to or reach the target. So while we were preparing the notes on the committee and all, one thing which kept on coming was, see what's happening in the world. Duniya mein kya ho raha hai? A lot of people kept on saying, nahi, ye to kahin nahi hota hai. This doesn't happen anywhere in the world. Transparency doesn't happen in the world. This is how it is done. And I was thinking that for a country like ours,
a regulator like you and industry like us, why should we be a follow to the world? And in your presentation, I heard the word best in the world. We should leapfrog, no? We saw the telecom, we leapfrogged, no? Over developed market. I think our mindset has to open up. The entire discussion across my own people, colleagues, ministry was dunya mein kya ho raha hai? And I'm thinking, if that is the limitation that we have, then our dreams are too small, no? I think, so first we have to open that mind, dunya mein kuch bhi ho raha hai, we don't care. Hame kahan jana hai is what we should be clear about, and we have to open up the mind. The other thing which I realized was, we talk of awareness among the masses, which is very good, sir. But awareness among the government, and that's when I saw you mention about state governments and adoption of it, it's a phenomenal thing. I don't think we have really understood what exactly it means. The problem, if you look at most of it, comes through is कि paisa nahi mil raha government se, distrust hai. People are moving up for insurance, they're moving to trust, or we heard about RSBY or no. So awareness among government also about what insurance does, it was a small part of your speech, sir, is very, very critical. I think between government and insurance industry, they make a difference in society at a very large scale. And it has been like recorded. You can see, I think, one of my speeches in the Pradhan Mantri Fasal Bima Yojana, I mentioned, suicide rate of farmers have gone down where crop insurance has been implemented. And it completely changed the perspective of everybody. We don't see it from that perspective. If you look at health insurance on the masses level, wherever implement well, I can guarantee the average life expectancy of that state has moved up. Like you said about the funds, wherever the funds have reaching the state and getting implemented for better infrastructure, there the economic growth of the state is happening. I think our role of putting these stories together with a lot of data, along with state governments and having very high engagement, involving them will help us reach the target that you're putting and cross it very fast. To make a point, case in point, you spoke about the home insurance, I think if we look at the US, it's mandatory for people to have home insurance. They are pretty 95%. In countries where it is not mandatory, it is not so. And what is wrong in mandatory home insurance? When things go wrong, it offsets by the entire citizens by off. Look at the calamities in places where we have like the act of God or the economic loss would be about 30,000 crores. Insured loss is 4,000 crores. Who loses 26,000 crores, sir? It's mostly the poor people, And then the government may put in 3,000-4,000 crores as subsidy, and they're also missing out. When it can be very easily addressed by the insurance industry, the parametric insurance, the home insurance. So one of my strong suggestions is that with you there, I have such a lot of hope. We have to work a lot with government, sir. And I can guarantee if you put the work with the government and the under-penetration you put together and what we are talking about, your dream of the target you're saying is again very small, sir. It will be crossed much faster than we think, Because if we are thinking the way we are thinking currently, incrementally, for an industry which is losing money, sir, a high distribution cost, very high expenses, I think it's a very shameful position that we are in, sir. Let us be honest about it. And we're not opening our minds to think differently. I don't think we're getting anywhere. Just standing and saying that it's easy and we're inspired, we'll do it. I don't think it's working. We have to really work hard, one, with the government, sir. Second, on the distribution network you talked about, like the Jandhan, the success of the banks, that again is very powerful, sir. If we crack the government and the banks, sir, I think we'll fast forward your target at a much hyper speed. That is a very clear thought that I have when I look at what is coming through, sir. And because of you, that belief is there. On motor, when we heard about how should we look at, or I think my friends mentioned about petrol pump and all, what we forget is the fast tag which is happening so fast, sir. The entire chip has the data. If the fast tag data, and you talked of long-term insurance, if it has insurance data also, in a flash, every day we shall know how many vehicles, which vehicle uninsured are on the road. Immediately, sir. It's like instant flash. We are aware about it. You do no police checking, you do no petrol pump checking, nothing. As vehicles move through, we know it. So it's a simple suggestion where in the fast tag, we record the insurance details for the vehicle. So all the entire 35-40% uninsured vehicles, you have the data at a hyper speed, because today every second person is on the highway and fast tags is very, very popularly used. So I think just a simple, innovative way of looking at things differently would propel our growth rate at a much more systematic, much better manner. Capital management also I heard say it is our own wrongdoing. So if a company has run well, it has no problem of capital. I think the last capital infusion in my company was 2007, sir. And today my solvency is 360. So for 16 years, I've taken zero capital from shareholders and I have a 360% solvency ratio even today. A well-run company does not require capital, sir, for growth of any kind, So it's our own wrongdoing. So what are we talking about as an industry? I think we should introspect on this part, correct ourselves, work with the governments, in the awareness, create the campaign, work with innovative solutions of bringing out, the under-penetration, and that we combine this together, sir. I promise you, we'll, in 3 years' time, what you said, we'll get dignity to celebrate the success in insurance. Thank you, sir.
Thank you very much, sir. And finally, we have Mr. Sanjeev Srinivasan representing ACO General Insurance.
Thank you for the opportunity, sir. It's difficult to follow Tapan and be the last one to make a few comments, but sincerely, thanks for the opportunity. Very exciting session. I think two things that are already happening in our company, and I guess in most companies, is there's this monthly meeting and there's a lot of deliberation as to what are we going to talk about, what are we going to ask, and the speed in which it gets resolved and comes back is like really put us on toes. And it's like we're wondering how many months will we last where we have something to ask, and these numbers are now telling us the reverse, that there's something now getting asked very, very differently. For a young company like ours, the targets that we took were very ambitious, and this is a new level of ambition that you have set. But yeah, really committed to kind of look at all the enablers, and I think, like everybody said, I guess if it might be a few quarters delayed or a year delayed, but I think directionally it'll get there. Just one suggestion, because we are a direct-to-consumer digital tech company. For us, digital distribution, and again for the industry, one thing that you've been talking about constantly is enhanced distribution. I think the digital companies, as in the people who are selling products and services on the platforms, like edtech companies or even consumer companies, I think there, like POSP was done in the retail channel, I think that channel needs to be nurtured, and there needs to be some thought put to see how that channel can become a very large channel, because they sell a lot of contextual products. If I go back in time, even IRCTC, for example, started retailing insurance. It was a huge success on a very micro product where 60% attachment was there. I think nurturing platforms such as these, both in the private and the public sector, would really help build a channel. I think some help there from the authority to see how we can nurture that channel and make that a mainstay would really, really help. So digital channels is something like traditional channels would be some ask that we can jointly brainstorm and work upon, sir. Thank you.
Thank you very much, sir. And that concludes the open house session. We'll now move on to presentations on reinsurance, and may I request chairman and members to kindly take their seats. We'll start with the presentation of Mr. Bhargav Das Gupta, wherein he will highlight issues that the non-life industry faces with regard to reinsurance. There are already a couple of points that are being made, and so probably this and after the response from the reinsurers, which will be made by Mr. Parag Gupta, we could have a few discussions or questions. Over to Mr. Bhargav Das Gupta.
Good afternoon, everyone. Again, on behalf of the industry, sir, thank you for this opportunity. I think one of the things that we really appreciate is this new change where we are discussing issues of the industry very, very openly. And again, this is apart from everything else that we've talked about, this is another refreshing change. So thank you for this opportunity. So the way we've gone about, preparing this presentation, is we've taken inputs from the industry. Synthesized most of these recommendations, not talked about some of the taxation and other issues that are being looked at separately, and specific company specific issues we've kept aside and picked up some of the key themes that are coming through. We've shared this presentation with the reinsurance colleagues so that they can prepare a response which is meaningful, and we'll talk about the specific issues. So before I go into the next slide, please. So this is the agenda. We will spend a couple of slides on the market overview and the objectives, and then the specific agenda items that as an industry we believe needs to be addressed. Next slide, please. So if you look at the overall industry, roughly about for the overall industry, about 72% of the of the premiums are retained by the direct insurers. So 28% is roughly reinsured, of which almost 76% is actually reinsured by the domestic market. So effectively 93% of the of the premiums get retained in this country. About 6.7% go out to the CBRs, as we call them. And if you look at different categories, that percentage is slightly lower for fire and engineering for obvious reasons, because fire and engineering need a lot more capacity. Number one, a lot of the FBRs have limits in terms of country-specific cat limits, so for which you need extra capacity coming from outside. And certain segments like marine, particularly offshore, agriculture, aviation, and some of my colleagues have talked about some of these points, needs, special capacity, and, some of the local markets are not able to provide that capacity. But one point we must remember, and, and that's come through in the theme of this, what we are going to talk about, is that India remains an underpenetrated market, and, the numbers that you've talked about, clearly one of the biggest sources of capital, we've talked about the capital, need for the industry to, scale at that level. One of the biggest sources of capital can be the reinsurance market and the global reinsurance market, and we need to figure out ways to how to tap that opportunity. Now, the objectives that when we looked at all the recommendations, suggestions that came through, when we give you give our submission, there should be some principles behind the recommendations. First, of course, increased penetration. We've talked about that the whole morning, so I won't spend too much time on that. There is, of course, an agenda that we have of increasing some, retention within the country, which interestingly is a bit at cross purposes with some of the other points, but I'll talk about that. We obviously need to create capacity. If you have to grow at this kind of pace that you've set for ourselves, we need significant capacity increase in terms of, the support that we need as a direct insurer. Finally, the ultimate lens, you talked about that in your presentation, the benefit should be to the policyholder. Whatever we do, whoever in the chain that you look at, it is not my interest or a reinsurer's interest. It should be the interest of the policyholder that we look at. Product innovation, that's an obvious. That's something that we need to promote, and we need to look at various types of innovative products if you want to achieve the objective that we set. One of the most important roles that reinsurance plays, being a banker, one of the things that we, when I came to reinsurance side, one of the things that I saw as a big strength of the reinsurance or insurance industry is the fact that we are able to distribute risk across the globe in a much better manner than banking industry. Even now, my banking colleagues ask me about insurance, and I see some of the bankers in this room. I think this is one thing that insurance industry has done much better than the banking industry. And that's why you see insurance industry as a lot more resilient industry than the banking industry. And that happens because we are able to, spread the risk across the world. So while there is an interest in retaining the risk, 93% of that is retained within the country. In an unfortunate, large cat, we want some of the global capacity to support the country when it needs, that support. So that would be something that we have to keep in mind. And lastly, of course, the theme that you've always talked about, and that's a theme that really resonates with all of us, ease of doing business. So these are the principles and the objectives that we looked at when we looked at some of the recommendations. Next slide, please. Yeah. So in terms of the issues that we want to talk about, the first one is the obligatory cession. Sir, one of the basic principles of reinsurance commission is that we as a direct insurer, we spend money, pay commission, invest in distribution, fixed cost, technology, etc., and bring that premium to the reinsurer to get protection, of course. But for the reinsurer, that is a business that is being served to them on a platter. And reinsurance commission is supposed to defray that cost of sourcing that business for us. Now, if you look at the current situation on the obligatory side, if you look at the obligatory commission, which is there in the table across different product classes, it's significantly lower than the expense of management. It's in fact lower than the commission number that we have, officially. It's lower than the overall expense that we incur as an industry. If you look at the industry's expense ratios, roughly about between 27-28%, different across different categories, but roughly in that ballpark. And the overall commission that we get from the obligatory treaty would be about 10-11% as an industry. Now, I think the regulator is cognizant of this, and the regulation talks about a minimum commission. It does not say this is the commission. But the fact of the matter is none of us have been able to negotiate a better commission than the minimum commission. So this is one area that we wanted some discussion, we wanted some support. One of the recommendations that we are making hence is the proposed solution to this could be that each company negotiates a commission structure, and I'll talk about the profit commission subsequently. And if we do not agree with the reinsurer on the commission that we are getting, we should have a choice of not ceding that commission to the reinsurer. One of the advantages of that, we believe, is that some of the companies with extra capital can actually use, effectively use that capital better, and companies which need more capital can be supported by the reinsurers. If you could turn to the next slide on the profit commission, we talked about the reinsurance commission. If I talk about profit commission, so principal profit commission is basically to drive and reward better underwriting. And when you look at the regulation is very prescriptive. It talks about, adjustment of the total incurred cost. It talks about the commission of 15%. Interestingly, this 15% is actually much higher than the weighted average commission that I showed in the previous table, which is about 10 to 11% for the industry. It talks about a 7%, cost plus profit for the reinsurer, which, given the fact that we place the money for investment with the reinsurers, is very, very high. And if you look at thereafter what remains as a surplus, that's supposed to be shared 50-50. So if you look at, let's say, 78% loss ratio, which is where it starts, if you look at a treaty which gives you a 70% loss ratio, effectively the profit commission the company will get will be about 4%. Add the 11% that you've paid out as a reinsurance commission, effectively combined ratio, for the reinsurers is 85%. I think that is, in a sense, a pretty high tax for the direct insurers. So again, the recommendation really is to see if we can make it, let the session be there, but let it be based on a choice for the direct company. If we can't agree on the commission structure and the profit commission, let there be a flexibility for the insurer not to cede that commission. So there are a couple of small other operating issues here. One is this, there are certain years that we've seen that the change in the obligatory structure has come very late in the day. In fact, one year I remember it came after the start of the year. That becomes very, very difficult because you can't plan accordingly, you can't negotiate anything. So give us about 90 days. So if by 31st December, obligatory session requirement is set out, that will help us close this properly. And the second point that I think my industry colleagues have raised also is that the group health structure, where not the employer-employee, but the group where the cases were group administered, the B2B2C, those are in reality retail products, and the cost is also like retail products. That could be possibly classified from the commission perspective into the retail segment. So that would be the first recommendation that we would have on the obligatory session. Next slide, please. Yeah. So if you look at the next agenda, which is the order of preference. So if you look at the challenges that the order of preference, creates for us, one, it's a huge administrative burden. You have a certain order of preference to seek quote, which says you follow these order. Then once you get the quote with at least a 10% line, you go back with another, set of order of preference to place. All of us have had experience where you have to supposed to get a quote from Indian reinsurer 4 FRBs, right? Most of the times you don't get a quote for all the 4 FRBs. You get a quote on the 27th of March and you don't have much time to anyway do much. And then again, go back on terms of the placement scope. So there's a huge administrative issue. There is a anti-competitive issue and it will increase going ahead. One, if you see the sequence of placement, one of them is IIO. So we, and I think, New India have branches in IIO. effectively we will get to see all the placements that everyone will do going ahead. Right now, for seeking quote, it has to be an A- rating, and it's not inconceivable to believe that we cannot get an A- rating. So even for quote seeking, they have to come to us, and it would be very unfair to ask, let's say, an HDFC or Bajaj to give us, a case which is of their interest. So I think this order of preference, which gives a anti-competitive nature, is in a sense a problem. The second bigger issue is that if you look at the role that CBRs play, and going back to the principle that we talked about, that ultimately it has to benefit policyholders. So one of the real concerns that we have, and it's already beginning to be demonstrated, is that effectively what we are saying is that the best policies will be retained by some of the players who get first access to the best policies. Only what they do not take will go to the CBRs. Now think from a CBR's perspective. At the end of the day, after some time, they'll say, why should I look at the Indian market? And interestingly, if you look at the data from 1920, in the year 1920, based on IRDA annual report, there were 378 CBRs. Last year, 2021, there were 322 CBRs. So we had a 50, CBR drop, 50 CBRs would come out of the market. Effectively, we are creating a risk for the market, because in the long term, as the number of CBRs come down, you will be dependent on a few FRBs, and you have a situation when maybe prices have to go up. There'll be shocks to the market like what we saw in the term market last year. So this is something that we have to think about and create a resilient market. And CBRs over the years have played an important role, giving us capacity in certain areas where the FRBs don't have specialization. Or, some of my colleagues tell me that they don't even get quotes from FRB. So I think we need to rethink this entire obligatory session model and open it up for, let the market, play a role. The argument that is been given, and let me also present the counter argument, that why would a reinsurer come into the market? I think this is like the West telling us, why don't buy oil from Russia, because then I won't be your friend. Because they're coming to India because there's an opportunity in this market. And I remember before 2015, most reinsurers would come to us and say, please work with the government to open up this market for branches. Only after that happened, then there was a request for order of preference. My sense is that the time for that is over. Let's go to the next slide. This is a link point. When we talk about the CBRs, we've also kept limits. And I think one of my colleagues made that point in the town open house, where we've said the session limit will be to the 20% for a A plus company of what we seed overseas, which means in that example that I gave, 7% of the treaty placement is going abroad as a country. So you're basically talking about, let's say, for an A plus rated company where you can only see 15%, 15% of that 7%. That is a very, very small percentage, and then it makes it very difficult to get capacity from so many players. I think whatever that percentage is a good percentage from a risk management perspective. You obviously want to diversify risk, but it should be for the overall session, not for the amount of business that is being seeded overseas. That small technicality needs to be addressed. And we have proposed certain slightly higher percentages. As against 20 for A plus, we've proposed 30. Some of my colleagues wanted this limit to be removed. My sense is that it's good to have some limit, because it's good to have some kind of a diversification rather than concentration with one CBR. So we are suggesting some increase from 20% to 30%. Next slide, please. So there is also a bit of a process issue with the FRN. Still 2021, it was just a filing requirement. Now it's an approval requirement, which is fine. One-time approval may be appropriate, but then this approval cannot be every year. Our recommendation would be that create a framework. If you look at the quality of reinsurers that we have, out of the 269 who've quoted this year, 244 are A and A plus, A and above. So these are good quality reinsurers. We don't need to make them go through the ringers every year. We can create a framework. If there's a drop in rating, then maybe there's a process, but otherwise, we should allow this to be a 5-year. The argument that you should not write treaty for property is fair, because there could be concentration that is difficult to assess. But for all other lines, it should be allowed. And just to give you an example, if you look at crop insurance, what happens is that we quote for multiple states, but we may end up getting only 2 states, and that creates concentration risk. If I could address that risk by buying a bit of treaty exposure to some of the other companies, it will help me manage my risk, which effectively helps bringing down cost to the customer. So letting direct companies write treaties is actually going to help in that sense. What it will also do is a new company which is in a market which is not doesn't have the expertise to write, let's say, new areas. You talked about cyber risk, for example. Every company may not have a treaty capacity, or may not want to may not have the capability to write cyber risk, but they may want to experience and build capability may want to start by taking 5% exposure in a treaty. So it could actually help the industry grow much faster. Next slide, please. Now, this is one of the issues which I'm sure we, the direct insurers and the reinsurers, will not agree on. But I think this is something which is really hurting the direct companies. So again, the principle of proportional treaties is that, as with the direct customer, I take a certain premium, I pay the full proportion of the claim, and when I get a proportional treaty, I give a proportion of that of the premium to the reinsurer, and we expect the same proportional claim to be paid back. But that is not the case. There is a limit, based on event limit. And that event limit is modeled on various models which are honestly untested. The flood models in India are really untested. The return period models that we talk about are untested. We've seen even Thai, the flood experience that we had in 2011, which triggered this. By the way, before that, this event limit wasn't there in a lot of treaties in India, was an untested number. So clearly, this is an area that is creating a bit of a challenge for us. And what is increasingly worrying is that now, initially it came for NatCat, it was for natural catastrophes. Now the natural word has been taken away. So it's for catastrophes. Now, it could lead to dispute going ahead, if a large claim happens. Let's say for a riot, is it a catastrophe or not? Could be a point to debate. And emerging exposure like cyber is being capped. I think the point that one of my colleagues already made. So this is an issue. Of course, it's a negotiation issue with the reinsurers, but this is something that, as a direct company, I think we are facing an issue which needs to be looked into. Next slide, please. We now come to the area where I think all of us have had situations where there were requirements of national importance. 2 years back when COVID happened, the authority rightly told us to write COVID policies, and all of us came in and supported. And the point that you made, sir, as an industry, we paid 35,000 crores claims. And that's our responsibility. But I think there's equally a responsibility for the entire chain of the insurance industry. And if we are asked to write something which is new or which we don't have experience with, let's say, for example, the surety market, which you talked about, we don't have expertise. I think there is a need for all the players in the market to support that national objective. So if there can be a way that reinsurers also are asked to support the insurance companies, that would be very helpful in expanding the market in some of these areas. Next slide, please. So there's been a lot of talk about capital. I think globally there are enough examples of alternate risk transfer mechanisms. There has been at times in the past some conceptual concerns about this. I think that is overplayed. There are sophisticated markets which has allowed some of these products, and we probably need to think about having a framework. We can sit together with the authority and build a framework for allowing some of these ARTs, cat bonds. I think Rakesh also talked about. These are ways to increase the availability of capital for the industry, and this is capital coming from the global capital market, for example, or reinsurance market, and that could be very useful in scaling up the industry in India and achieving the objective that you set for us. I'll come to the last issue that we want to talk about, your ease of doing business. We looked at all the operational issues that we face, and we've kind of put them under this bucket. So one of the issues that we really are grappling with is this reinsurance payments. And, treaty is one where you negotiate one time. That's all. There are problems there also. But the bigger problem is in the facultative, where every day you're writing facultative, policies. Some of the specific types of risks, let's say aviation or offshore exposure or some complex refinery projects, there are 50 to 70 reinsurers behind it. The global market is structured around brokers, because this is a policy that is actually the broker would go to the corporate, bring in demonstrate the capability of reinsurance placement, and that's how they get the transaction. And then we come in as a fronting, as a direct company, but which is in India. However, when it comes to get the confirmation on reinsurance placement, the onus is only on us. I think that is something that we need some change in approach, because the person who's responsible for it, and by the way, this is something that we've discussed many times with the industry. We've tried our level-based. Shankar is here. I think he was helping us to achieve this. But let's say Lloyd's market is a broker-driven market. It will not talk to a direct underwriter. So there are markets which needs to talk only to a broker, and that's something that we have to recognize on this issue. So from the immediate perspective, maybe a responsibility of the brokers who place the reinsurance treaty could be a way out. In the long term, an ITAS type model, it will take some time, it will be complex. We'll have to figure out how to deliver it, but there is an opportunity of creating an ITAS type model for ensuring the payments are being tracked properly. Because this is, I think, a systemic risk. We've had a fraud in the industry a couple of years back. I think it's a systemic risk that we need to address. In the next slide, please. And similarly, on the claim side, there are two aspects: the broker role in getting the claims, as also the reinsurer, responsibility. You have a lot of, responsibility given to us in terms of the policyholder protection, and that is absolutely correct. But equally, we need some protection on the policyholder protection side from the reinsurers, and particularly when there are runoffs, if there's some way that regulator could help in talking to the counter authority in the other market, or reinsurers who are unfairly delaying a claim, maybe they should be blacklisted in the Indian market. Suggestions, and we could think through what is appropriate is one. Secondly, filing of the RI program. Today, we have a process where you have to file the program 45 days before, at which time no program is really, finalized. And then 30 days after the board meeting, again, we have to file it. Maybe one filing after 30 days of board meeting is adequate. It really doesn't add any value. The first one is not really adding any value to the market. And a consequence of, this issue also is that, most of the insurers tell us that they get the treaty offers in the last month of March, by which time they don't have enough time to get good quotes and seek and get proper placement. So maybe some discipline in terms of, both for us, we have to submit all the treaty submissions, but the reinsurers have to give a quote maybe about a month. I mean, we've suggested 45 days, but at least a month before, so by 1st March, then it gives enough time to the direct insurers to place the treaty in the market. So this is more in terms of the operational aspects that we face. So these are the suggestions that we had, sir, from the industry, and I'm sure my colleagues will have maybe points to add. But once the reinsurers make the presentation, we are happy to talk about it.
Thank you very much, sir.
Thank you, sir.
From the reinsurer side, may I now request Mr. Parag Gupta of Scorri, please.
Good afternoon, Chairman, sir, seniors and colleagues. Chairman, sir, thank you for organizing this meeting, Bima Manthan, and setting up the tone and targets for the industry to increase the penetration. We are very happy and excited to be the part of this journey. And with the help of the reinsurance colleagues, so we have put a few slides, and here I would like to share some of the thoughts on reinsurance here. Next slide, please. These are the, this is the reinsurance premium sessions over the last 1 decade. And if we look at it, the way reinsurance session premiums have gone up at a CAGR of 12.7%, which is almost at par with the industry growth. So it clearly indicates that, reinsurance also contributed well to the growth of the industry. And somewhere I think insurers and reinsurers collectively work together for the market to grow. Along with that, I'm very happy to share that, if I look at India as a market, so in India, we have one of the highest globally per risk capacity deployed, which is automatic per risk capacity deployed here in India. So it means, if I say in a very, very crude manner, so maybe a risk of approximately 1,000 crore, 1 lakh crore rupees can be absorbed within the Indian market, within the automatic capacities which have been deployed in this market. So market has very strong automatic capacity to really underwrite the business. At the same time, if we look at it, agri insurance, which is definitely India being a agri country and where our 70-75% population is in rural areas, and to support the agriculture scheme, which was a government initiative as well. So we could, reinsurance industry was able to really deploy one of the highest global capacity for the agriculture insurance. And the change we see in between, this was with the, a jump we see there, it was with the implementation of the new agri scheme, which some of the friends were talking about, PMFBY. So with the introduction of that, collectively, reinsurers and insurance companies were in a position to really provide the right protection there for the government as well for the farmers. Next slide. Now, as we know that, as insurers and reinsurers, we are exposed to various kind of a risk. And our risk environment is very, very dynamic. So it's changing, risks are very dynamic. They are changing with the time. So some of these risks, definitely, as insurance and reinsurance industry, we are in a position to develop some expertise there, in a position to develop models, the pricing, underwriting systems, claims management systems. And over the period of time, that expertise is there really to estimate the claims and to work out the proper solution for that. But while some of the risk, we always get surprised, or we get the surprises. And like COVID was one of them, sir. These are systemic risks, and the systemic risk, it's very difficult to judge the frequency of such kind of an event. And when the loss is there, the severity is so high. Maybe this is much more than any catastrophic loss. And so it becomes difficult for the insurance industry and reinsurance industry really to, to handle such kind of a risk, or really to absorb such kind of a shock. And that's where, the discussions are there across the globe, that how really we work out the solutions so that such kind of shocks can be absorbed better. Now, when we look at this risk, but along with this risk, definitely this risk throw a lot of business opportunity also for us. And so I have highlighted some of them. Like first one, if you look at it, increase in Nat Cat events. So one side we see the climate change, the impact of climate change, deterioration of the environment, and clearly we can see the globally, how it's impacting us. And India is also not spared. If I talk about India, our 58.6% of the, our landmass is exposed to the some or other type of, the earthquake exposure, moderate to high. 12% of the land exposure, is exposed to the flood or river erosion. We have 7,500 kilometers long coastline, which is exposed to the cyclones or, the cyclone storms, or maybe tsunami. 68% of the cultivable, land is exposed to the drought. As well, we have mountains where risk of landslides or avalanche are there. So we are also not spared. So we are a highly Nat Cat prone country, if I look at it. And we can see the change of frequency of some of the cat events. Like we have seen the change of frequency of cyclones, and where, whether it's a west coast or it's a east coast, we see cyclones happening. So one side is a threat, one side is a risk, but other side is a great opportunity. And I think with our kind of country, what Chairman sir also pointed out, the kind of protection gap we have, it's a great opportunity for us as an insurance industry really to work on the different kind of solutions. Second is, the changing the health needs of the masses, and we see that. And we can look at, the way our health premiums are going here in, in the country. And maybe COVID has accelerated the process. If I look at it, because of the COVID, now at least the general awareness has gone up, and people have started realizing the importance of health insurance. So that's also an opportunity. Changing geopolitical and economic situation. So that's again, India is emerging as a global economy and as a strong global economy. So that definitely is a big business opportunity. Other side, if I look at it, now globally, like the inflation is affecting across the globe. And the European markets and American markets, where they have not seen inflation for last 3-4 years time, now they see the very high inflation. And as India, we are also definitely affected because of this inflation, and it's definitely going to affect our portfolio, as insurance and reinsurance industry, because definitely, claim costs are going to go up because of inflation, and because of the supply chain challenges, actually the business interruptions, the delivery of the material is going to be delayed. And that again, because of the inflation, put the more pressure. So our book is also changing, the pressure on our book is also changing from time to time. And, but again, because if I look at it, it's again our business opportunity there. Because of the inflation, some insureds will go up. Maybe clients will understand the impact of it. They will start buying the more cover as well. Then we are, today, like emerging technologies are there. There is a hyper connectivity. So definitely we have a growing dependency on the technology. And that's again a new business opportunity, what we see here. And another important aspect is, the government policies or regulatory changes, and that definitely create the new risk, but at the same time, they create the new business opportunities. I mean, we have seen the way PM FBY scheme was introduced, or government introduced the Ayushman Bharat cover, or otherwise we discuss about the surety bonds or some of those kind of a products. So definitely it's a great opportunity for us as an insurance and reinsurance industry in this market. And in fact, I would like to say that presently as India, we are in a sweet spot because number one is the economy is growing. Number two is government is trying to push a lot of push on the manufacturing side. There are so many schemes running around it. And, authority is definitely coming forward and ready to provide us all the support. And for insurance and for reinsurance together, I think it's a great time. Can we go to the next slide? So some of these, so what we feel is that, these 5 outlooks will definitely shape India non-life insurance business for the next 5 years. So first one, as I talk about the NatCat, so and Chairman sir also mentioned about the the some kind of a protection available like the parametric solutions, and we believe that it's a very good solution because it has at least it's a trigger-based insurance, and we know that if the trigger is there, it's a ease of payment is there. So the moment trigger is there, I mean the claimant can see the money in his account. So these are the solutions which definitely we can work on them, and changing health needs of the masses. So some maybe thought leadership products there, and like maybe the new health products for the OPD covers or critical illness covers or dental insurance, or maybe some of the disease specific covered. We talk about the diabetes, we talk about cancer, or we talk about heart disease or some of the other disease. Now changing geopolitical and economic situation, and definitely we definitely as insurance and reinsurance industry would like to be the part of this growth journey, where a lot of push is there on manufacturing. And along with the manufacturing, we see a lot of investment happening on the infrastructure side. So there be the requirement of project insurance, Pradhan Mantri Awas Yojana, or otherwise investment into real estate. So requirements like inherent design insurance, title insurance, and for SME or MSME, the SME insurance. So some of these are the great opportunities for how as a reinsurers also we see these opportunities there in the market. And with the technology, definitely, the opportunities of, we have the opportunities of the cyber insurance there. And we see that, or the product innovation with the help of some insurtechs. And some of my colleagues were talking about, the specializing the product, or products which can affect the daily life of the people. That's possible only with the technology. And maybe I feel that this is the future, and this is what is going to happen, that transaction-based insurance, you do one transaction and some insurance is there. You go to the market, you have a coffee at the Starbucks, you earn some points. And after that, different outlets, those points can be used to buy some insurance or to get some protection there. You do one transaction on a payment bank, you get some insurance cover. Next month, you do another transaction, you get continuity of the coverage. So, the embedded insurance or linked insurance, these are possible now because of the technology. And government policies and other things like surety insurance, so all these areas, and like Bhargav mentioned about ART programs, or definitely ART is a strong solutions. And because it goes beyond the traditional reinsurance or traditional reinsurance solutions. So it's a combination of the risk transfer as well the financial markets. And it helps definitely to increase the market capacity. So all these areas, many of these things we are working on globally. And we have experience, expertise available of many of these products globally. And I think the important is for us and insurance companies to work together on these products. And we are happy to collectively to work on that. The important thing is to look at the opportunity, to work out the products together, and to look into the capacity, to work out the underwriting systems, and to work out the claims management system, and really to work out some viable options. And it's very important that, the interests need to be aligned, or the results need to be aligned. And insurers and reinsurers together, they need to have a skin into the game. So these were, some of the thoughts on that, which we feel that, the development of the industry, on the issues related to the development of the industry. Now, coming to some of the specific points there, like, go to the next slide. So first one is the obligatory cession. Sir, I remember that, obligatory cession was introduced many years back to build up the domestic market capacity there. And I remember at that time, it used to be 30%. So from 30%, it's reduced to 4% now. And we see with the development of the domestic capacity, obligatory cessions are also going down. And so this obligatory session is for the domestic, the national reinsurer. And maybe I would request my colleague from GIC Re here to comment on obligatory session.
Yeah. Thank you, sir. Thank you for this opportunity to speak up on behalf of the National Reinsurer. At the outset, I would say that GIC as a national reinsurer has played a major role in this country as far as developing the capacity and capabilities of the insurers in this nation. Ever since privatization, we have been supporting most of the insurers in this room to develop capabilities and reach the position that they have been. An obligatory session is reducing from 30 to 20 and then 15, 10 and now 4 is natural, it's progressive, and we are okay with it. But the point is that when we talk about obligatory sessions inviting a lot of drain on part of the insurers, I would beg to differ. Because I think if I look at the last results that are available on industry-wide incurred claims, it's around 81, 82%. And if you take the 15% commissions, the balance is hardly 4 to 5%. And out of that, we sort of charge a profit and margin of 7, and the balance is what we get onto our books. That is, if at all, that year is profitable on certain classes. So that does not even actually give us much of return even on the capital deployed for supporting this session. So I would really beg to differ when you say that, it's a drain on your resources. Acknowledging the fact that we have been supporting you across all sectors for so many years. When it comes to national initiatives and taking the lead on any national calamity, events of national calamity, JC is always the first port of call, and we have always delivered. We have always never, looked at any other constraints when it comes to putting in our capacity first, organizing, galvanizing market, trying to use everything that is there in our capacity to see that we provide solutions to the market. Like you see the several pools that are running, we have been behind, organizing them, maintaining them, and delivering on these solutions for years together. And yes, when you talk about event limits not being there on proportional treaties, that is actually something which exists all over the world. India is no exception, being exposed to cat perils like Parag mentioned. So definitely we have to have event limits, which will help us also be viable in the long run. Now, how we pass that on to the client or how we make the whole equation, sustainable for the entire ecosystem, insurers and reinsurers, I think we have to look at other solutions that were also mentioned, like parametric solutions, which possibly we could take up at the state government levels. I think there are funds, and all we have to do is to start working with state governments and central government, like Sir has also mentioned in his presentation. Maybe find out how we could find out more, viable solutions to address the protection gap in the larger interest of everybody. But apart from that, I think GIC's obligatory sessions are hardly to be worried about, because I don't think it's a very big drain. If you look at the numbers, and the other part is that it is a blind agreement. We hardly get any information on what is being ceded to us, and that is also delayed. Maybe some insurers are prompt.
So as director insurer, we request for doing away from obligatory completely, ma'am. Thank you, ma'am, for that point. I think that was the main point. No? On the rest, I think we'll take it later.
Yeah, thank you, Tapan, on this. So maybe I think, I mean, if I look at it from the FRB's perspective as well, sir, the market has last 20 years, definitely our market has developed. And we have a pretty good domestic capacity available. So what, the Bhargav mentioned in his presentation, instead of obligatory, maybe he was talking about a voluntary quota share kind of a scheme where insurance company can decide and with which company. That can be one of the options. Another, the point is here is, which was mentioned, there was order of placement or, the session to the CBR, sir. Sir, if I look at it, Insurance Act Amendment 2015 and mandated the foreign reinsurers to set up the branches in India. And then some of the large foreign reinsurance companies, they opened their branch. I'm very happy to share that in last 5 years, we brought the FDI of almost around 12,000 crore to the country. We are retaining more than 50% business. It's not working, sir? Working, sir. Okay. Hello? Yeah. Sorry. Yes, sir. So, sir, last 5 years, FRBs and Lloyds India, together we brought a FDI of 12,000 crore, and we are retaining more than 50% business in India, and that business is invested into government securities and bonds, which is again, it's a good investment which is happening in India. And sir, along with that, we are definitely subject to the regulatory compliances. And we are into, the solvency requirements. We are into the, one of the highest tax regime, across the globe, if we look at it. So, but definitely, by opening the branch here and developing the local underwriting capacity as well, investing the capital here, we are committed to this market. And definitely, we believe that India is a great market and we would like to continue investing in this market. Now, other side is, if I look at it about the CBRs. So CBRs, definitely CBRs are writing a decent business in India today. And, but I look at it, they are in a very different environment. Number one, they don't have any commitment to the market as such. Neither they have office here, nor they have invested any money here, sir. They are not retaining any business in India. Whatever sessions are there, money goes out of India. They are operating from some of the low tax regime market, or maybe the market where very less solvency requirements are there, or no solvency requirements are there. So they have certain advantage. I think to me, what is important is to create the system where all the reinsurers have a level playing field. That's very, very important. If I say that, today, if I look at it as FRB, I feel that we are not having level playing field with the CBRs. So to me, actually, for that, if we can really, if CBRs, they can invest in Indian market, or maybe if they can retain 50% premium in India with the insurance company, maybe as a collateral in a bank account, that will definitely help, number one, on the various reasons. Number one, they will have commitment to the market. And again, we will have a better retention into the country. Then it will help insurance companies also. That for them actually to have a distinct choice between the CBRs who have invested in India and CBRs who are not there. And then it will also help maybe some of those CBRs would like to open office in GIFT City. So that will again, the help into the government agenda to have more and more reinsurers in India. So, for that purpose, I feel that maybe a very simple order of preference can be there instead of having very complicated. Maybe national reinsurers or domestic reinsurance companies, or the FRBs or Lloyds of India or IIO, they can be at the level 1. And level 2, we can have the CBRs who are ready to invest 50%, ready to retain 50% premium in India. And maybe third category can be for the other CBRs. And then the kind of limits we have 20% for over A plus or other limits, maybe those limits can continue for them. This will definitely help. Some of the other issues which are pointed out, like I was looking at Bhargav's presentation about if the account settlements are not happening or some of the issues are there. So maybe if the companies invest here and if they, so then they work well there. So this was one of the things. And other thing is Nat Cat event limit. And as Girija rightly mentioned, it's a global phenomenon, sir. And we need to look at the Nat Cat event limit as a risk management process, sir. So why I'm saying risk management process? Because number one, it helps the reinsurance company to manage their risk. Because of that, actually, we are in a position to provide diversification. We are in a position to provide the capacities there. At the same time, sir, if I look at it from the primary market side, this event limits definitely motivate them to have a better accumulation control and really to manage their portfolio better. And to be frank, if you remove the event limit, instead of increasing the capacity, capacities may diminish from the market because, infinite capitals are not possible or infinite capacities are not possible. And if I compare with the primary market, I mean, insurance companies to protect their net, they buy the cat protection and that they buy in 1 in 250 years or they buy in 1 in 500 years. So again, they buy based on certain models, a limit they buy. They are not buying infinite. Same theory is applicable to the gross book as well, to the proportionate treaties as well. So what I believe is event limits are actually, it helps in the diversification. It helps capacities to be there in the market. So, and fourth point is, which was mentioned there was the, treaty reinsurance by the insurers for non-property business. For that, I would request my colleague from Lloyd, Shankar, to really comment on that. Yeah, please.
So literally 90 seconds is all I need. So on that point, all I want to mention is that even the International Association of Insurance Supervisors, what they typically encourage is that insurance and reinsurance are very different because the capital requirements of a reinsurer are fundamentally different. I do know that groups are setting up to do, reinsurance groups have set up to do insurance business and vice versa. UK, I think, is the only market which allows insurance and reinsurance to be written, and Lloyd's is one of those exceptions. But again, that's a legacy issue. So I think what I would encourage is please do think about it before, because the capital requirements for a reinsurer is fundamentally almost double that of an insurer. Insurance by nature, again, as Bhargav mentioned, it requires diversification. You need to ensure that there's a lot of spread of risk. So the fact that if you're going to ask insurers to write reinsurance, especially on the treaty, there is a risk of spiral. In other words, you're all reinsuring yourselves. And again, Lloyd's has had that issue where we've had spiral happening, wherein the losses pretty much fell within the Lloyd's market. So I think, again, caution there would be, please be careful. It also encourages inadequate pricing. So effectively what happens is if there is why is a insurance company not able to get reinsurance support? Probably because the underlying book is bad, right? And then if you're going to then go and write it through another insurance company here is saying, well, I'll cover your back, don't worry. You're essentially encouraging bad underwriting practices. So my suggestion for that would be, if the insurance group want to set up to do a subsidiary and then do reinsurance, then that can be encouraged because it has a very different legal entity. It has its own capital requirements, etc., that we can think of. The other points, if I can just, Parag, if you just give me 2 minutes. All I want to just say is we talked about, CBRs and reinsurers essentially talking about premium confirmations and all that, and then brokers being asked to get the confirmations. Now, what typically happens is the broker will then say, well, it's an extra pain for me. I need to go back to the reinsurer and get that, etc. Throughout the session this morning, we spoke about how India can lead the market. And I'm thinking we have so much tech experience. And sir, you mentioned about the fact that there was an InsurTech conference in Bangalore. You're doing a hackathon here. Why don't we have an electronic platform which essentially allows reinsurance placement? Talk about reinsurance only here. Reinsurance placements wherein all the insurers, brokers, reinsurers, both onshore, offshore, everybody, it's there. The benefit of that is you get contract certainty. You get everybody is on the same plane. You can then say, has the premium been paid, settled? Has the claim been paid, settled? So you've got all of it in one place where there's a clear audit trail of what's been said, what's been placed, what's been agreed, and so on. So I think that's something to think about. And then the last point, which I just simply want to say is, we're talking about why can't, and again, I will agree with Bhargav on this, regulation should never be the way why people should come and set up a business in a country, for that matter. It should always be what is the size of the market, what is the size of the price in a market. And I think here I would probably encourage the IRDA and the GI Council, etc., to try and come up with a neutral pack which promotes the Indian market to the reinsurers and also to any new entrants coming into the market as well. So it's saying, if you said surety bonds, okay, what is the surety bond size of the price? Then that would encourage people to come and do business, including us. We would also be able to go back to our own head offices and then say, here is the size of the price. Here is what we can achieve. This is provided by the government, by the regulator, by the council, for us to do more business in the country. So.
Thank you, Shankar. If I just to be summarized, so I see, there are a lot of development opportunities here. There are a lot of development opportunities here in the market. And some of the products which I mentioned here, like be it about IDI, parametric insurance, title insurance, or, and surety. So we requested the help of the authority actually to unlock, some of the challenges which are there, maybe related with the government or with the various government agencies. And I feel that, we have seen in other markets that these are some of the great opportunities, and it will definitely help us to kind of targets which in the morning chairman discussed with us. Thank you so much.
Thank you very much, sir. We do plan to break on time for lunch. And
Ma'am, I just want to have just 1 second. Tapan sir, I just wanted to clarify that I never mentioned that it is a drain. Obligatory session is not a drain. I've not mentioned that. I just said that it's a blind treaty. We do not get the numbers on time. It's very difficult to comment on the wafer thin margins, if at all they are, for the obligatory sessions. That's all. Just wanted to clarify.
After the two presentations, I was going to take the mic and ask if there are any discussion points. There was no need for that at all. I think a lot of discussions. My suggestion, sir, is because we are going to have an external guest joining us for lunch, we talk additional points during lunchtime. So I'd just want to mention that the next three presentations, which were scheduled pre-lunch, will now be done after the guest has given his presentation. Sorry for the inconvenience, but we now invite all of you for lunch, which is just outside. So I hope, if other issues with regard to your flight departures? 7 should be fine. Because, so when we spoke to all of them, we said, don't book before 7. So, no, 7 ko book. No, 7 ko. Exactly 7 ko. No. The three presentations are very small and they will be very crisp and to the point. So now let's go for lunch. Please do join us. Good afternoon. Excuse me. Sir, Mr. Sanjeev Srinivasan. May I request all the participants here to kindly settle down. Chairman sir is here and our guest has also arrived. A very good afternoon to all of you. Over to Chairman sir.
Very good afternoon to all of you. I have the pleasure and privilege of welcoming a very special person, esteemed colleague in the sense we belong to the same service, my senior, Dr. R.S. Sharma, who is the current Chief Executive Officer of the National Health Authority. So please welcome him by giving a big hand. Just to briefly introduce him and his CV, I would just like to mention a few points. Dr. Ram Sevak Sharma is the Chief Executive Officer of the NHA that implements, as you all know, the ABDM, the Ayushman Bharat Digital Mission, and also the Pradhan Mantri Jan Arogya Yojana. These are the two flagship health missions of the Government of India. He is also the chairman of the Empowered Group on Vaccine Administration for COVID-19 and a member of the National Expert Group on Vaccine Administration for COVID-19. Dr. Sharma joined the Indian Administrative Service somewhere in 1978, and he was allotted the Jharkhand cadre, erstwhile Bihar, and the state bifurcated. Then he went to Jharkhand. Before his appointment as the CEO, he has served as the chairman and of the Telecom Regulatory Authority of India from August 2015 to September 2020. And we all know what kind of reforms he got into the sector. And that's how, you know, how much we are paying for the mobile phone or for the internet, data and all. So that transformation was brought during his regime at the TRI. Prior to that assignment, he also served as the Secretary of the Department of Electronics and Information Technology in Government of India. And also, he was the Chief Secretary in the Government of Jharkhand. So he has had a very, very illustrious career. And then his another domain expertise is in the field of technology. So I'll not be wrong in saying that he is the tech czar of India as far as the government is concerned or the service is concerned. So we are really very, very proud of him. So he has led a lot of initiatives. I think if I keep reading, I'll be wasting time. So his work speaks wherever he has been, and we are privileged to have him with us today. And he'll give a small presentation. And he also feels that health insurance has so much of potential, and whatever has been covered under the Ayushman Bharat Yojana is excellent. And he has made a lot of innovations in terms of creating the unique ID as well as the health exchange. So he'll tell us how we can leverage that platform in order to reach out to more people, and also how to capture the missing middle, which is a matter of concern. Pricing of insurance, we were just discussing over lunch, how it will come down. So technology, data, etc. I've already tried to tell him that how we are trying to bring down those costs and introduce technology and digitization in a big manner, and also unlocking the value of data. And also, I'll not come in between you and him. So may I request, sir, please to come and address us, and also give us your thoughts so that we will be, able to implement things better. Thank you very much.
Well, good afternoon to you all, friends. My dear friend Devashish Pandaji has, given a very, very generous introduction to me, and I think you will soon be quite disappointed. So that's one. And secondly, firstly, let me sort of thank him profusely for really giving us this opportunity to talk to you all and come here. And basically, when we met a couple of months back, since the time he joined as the chairman of IRDAI, I have been telling my colleagues in the National Health Authority that now things are going to really transform, because he has been responsible for a number of things as Secretary of the Department of Financial Services, and before that also into the administrative service. He has also had a very, very illustrious career. So we became very hopeful, and since the time I joined this authority, health authority, in February of last year, I have been quite convinced that there is a tremendous amount of synergy between the insurance sector and the health sector. So I think that synergy can be leveraged if, the regulatory environment and the developmental environment, which is basically developing new artifacts, new products, that they all, come together. So that's the purpose of me coming here. And essentially what I want to share with you is what we are doing and how we propose to take this agenda of digitization, which Devashish spoke just now, how we can take this forward and how this can have a tremendous amount of, influence. I am one of those persons who believes that a major number of India's hard problems can be solved by technology. That has been my very, very fundamental belief. I know everything cannot be solved by technology, but many of these problems, especially the problems of scale, the problem of diversity, the problem of inclusion, all these issues, technology can play an extremely important role. So, and one of the things which is also very stark about India and differentiates it from the rest of the world is the basic numbers. You know, when we talk of people talk of millions, we talk of billions. So this actually makes a tremendous difference. I'll give you just one example. I, as telecom regulator, I used to participate in many of these conferences, and the people from Sweden, Denmark, and Western Europe, they will all come and say, oh, our ARPU, this is the average revenue per user of telecom, is $150. And they used to crib. And when they used to ask me, I would used to say, our ARPU is $2. It's 125 rupees. In fact, it's less than $2. And then they will say, how is your industry surviving and flourishing at $2? And then I used to ask them a counter question. What is your population? They say 10 million or 5 million. And I say, multiply 10 million with $150. How much does it become? And multiply 1.4 billion with $2. How much that becomes? So essentially, India is a country of large volumes, small value. This is how this distinguishes. And if you reduce the transaction cost of these large volumes, then things start happening. Jam happened, Janadhan Aadhaar Mobile, you all know. It happened because the cost of creating one account, cost of one customer acquisition was 100 rupees minimum, opening a bank account. Devashish ji knows that very well. When Aadhaar electronic KYC came, you could open a bank account without going to the bank. You could do electronic KYC in 2 rupees, 1 rupee, free of cost. Now that way, Janadhan happened. Janadhan, Aadhaar and mobile, that trinity created a tremendous amount of, acceleration into the system. So essentially, if you want to capture the base of the pyramid in this country, you need to reduce the transaction cost. UPI has 6 billion transactions per month. Why? Because the cost of doing transaction is 0. I transfer 1 rupee to you and you get 1 rupee, not even 99 paisa. This is the characteristics of our market. And that can happen only through digitization. So therefore, my whole purpose of briefing you, sharing with you, is my belief that if we can accelerate digitization in the health sector, in the insurance sector, in all related these sectors, service sectors, then I think it will reduce cost. I mean, I am sure all of you are insurers here, and I don't know how much is the cost of settlement of a claim or disbursement of a claim. It should be quite significant. I think not 100, 200, 300 rupees minimum. Zyada hoga. Now, if we can bring that cost down to, let's say, 10 rupees or 5 rupees, then you guys will be able to do even an insurance of an OPD in the health space I'm talking of. Currently, you are able to insure larger inpatient, hospitalization claims. So essentially, the theory which I want to propose to you is that if we really go in for an accelerated digitization, things will change. Also, I want to share with you that the basic DNA of our digitization journey in this country has been what is called digital public goods. We have not been doing some kind of proprietary and closed stuff. Whatever we have been developing, whether it is Aadhaar or UPI or many other things which are happening now, they are all happening in an open environment. Open, interoperable, frugal, robust, scalable, speedy. These are the basic attributes of our digital journey. Look at COVID. COVID has recorded yesterday I was looking at it, it is 1.976 billion vaccinations have been recorded on COVID. And COVID is being approached, COVID is being accessed, the platform, by 150 plus partners Paytm, Apollo Hospitals, Make My Trip, Infosys, everybody. All these people, these applications are just having Arogya Setu, of course. They are having just kind of thing, and they have a button or a tab which basically they can search for hospitals, they can do a booking for vaccination, they can download the certificate, they can create their accounts, everything is happening. That's happening because we have adopted interoperable environment in our digital journey. And that makes huge amount of sense, because for a country as diverse as India, we need to have digital systems which are inclusive. Inclusion is very, very important in this agenda. And therefore, what we are developing now in the health space, the Ayushman Bharat Digital Mission, a project which the Honorable Prime Minister launched in September last year, we are actually adopting the same open architecture. And I want to share a part of that with you. Can you just start? So essentially, I'll just talk about the NHA and ABDM, what we are doing. And then, of course, then how do we take that journey forward? Reimagining the health claims process, which is basically one of the pain points of not only industry, but also of the hospitals working with you, is essentially that they have a staff, somebody is processing the claim for a Star Alliance, somebody is processing the claim for some other company. So because company specific requirements are different, and therefore there's a huge amount of multiplicity. So it's like an end-to-end kind of process. This is how we can change that, how we can reimagine that. So that's another part. And of course, how we can improve the coverage towards the UHC. Me and Devashish ji were talking about how much is the scope and the space in this sector. And in health alone, I think we are at a very base level. And we can expand that base to a very, very high degree. And I think country needs that. Everybody needs health coverage. After all, health for poor people actually is a catastrophic event. If something happens to their family, they are just put back into the poverty, ditch. And that is very, very important for us to address. So basically, as I explained, come next. So we implement two schemes. One is the Ayushman Bharat Pradhan Mantri Jan Arogya Yojana, which is essentially an insurance scheme. And the second is Ayushman Bharat Digital Mission, which I talked about just now. So this basically the whole idea of both these schemes is to go towards the universal health coverage in our country. Next, please. So the key features there are multiple key features. It's a very busy slide, but suffice to say that we are actually processing about 1 million claims per month. That's the broad, big picture. 1 million claims per month are being processed. Our process is completely paperless, which means that there is no paper which takes, from this time of filing of the insurance claim, filing of the reimbursement claims, till the time the claims are passed and money is paid to the hospitals. Everything is paperless. So there is a workflow, which basically you examine, some claims are examined, and then of course doctor examines them, and then the sanctioning authority and all those things which happen. So that's one part. We have an ecosystem of 28,000 hospitals, half of which are private, half of which are government. Then of course we have 7 insurers, 10 TPAs, and we have a model called trust model, because some of the states decided that we will not go with the insurance model. So they created a trust, and then they are operating on that model. Of course, insurance is also prevalent, and people do keep on switching from insurance to trust and vice versa. Sometimes people realize that trust is not operating appropriately, so they come back to insurance. And some states go back to the trust model. So essentially and we are insuring about 500 million people. 40% of India's population, at the bottom population, is covered under the Ayushman Bharat PMJY. And of course, secondary and tertiary care hospitalization, we don't really cover the OPD kind of processes, but the hospitalizations. Then unique portability feature, which means that if a scheme is being done in Bihar, and a Bihar person comes to Delhi for treatment, he is provided that treatment. And why does that happen? That happens because the data is portable. The beneficiary list is portable. I forgot to mention that one of the unique features of India's digital public goods is portability, which means that, it's not as if that you are here you get the benefit and there you don't get. Aadhaar is a portable identity. Now you are talking of one country, one ration card. Because suppose there is a person from Jharkhand, my state Jharkhand, and he's working in Tamil Nadu or Andhra Pradesh, he or she can get ration here also. And that settlement can be done because his identity is portable. His eligibility of ration is also portable. So that's the difference. Digital makes portability also is implemented easily. Next, please. And of course, now we are doing the CGHS and the CAPF, for the forces. Many other schemes are also being implemented on this same platform because government realized that there is a digital platform. Why can't it be used for other schemes of the government also? And now what we are doing, that digital platform is being made open, which I'll talk about it a little while from now. Maybe my colleague Kiran will talk. How we are opening up this platform so that this becomes digital public good available for every insurer, for every service provider. Every payer and every provider can use this digital platform. So basically and the Ayushman Bharat digital mission, which we are, the second scheme which I talked about. So one is we are talking interoperable health data via health information exchange. Now it's important for you to understand because ultimately all the health insurance will be based on the health data of a person. If you want to have a personalized, premium, personalized kind of offer to be given to them, and not given to them by discussing with them, but given to them in an automated manner. Possibly your AI machines or AI engine can be put on your side of the system. This guy gives his data and immediately the offer comes out. That's how the system should work. Then and only then it can work at a scale. Manual things don't work at a scale. So essentially what will happen is we are building longitudinal health records of individuals. Which means that if I go to hospital A and my record is created, I go to hospital B, my record is created there. Now we are creating a system where record does not move. It remains at hospital A and B, but the patient or the person has the feature to access that record using what we call consent manager. So this is health information exchange and consent manager, which essentially enables a person to fetch his or her own records, either keep them in the mobile, keep in a digital locker, keep them wherever he or she wants to, or let them be kept wherever they are and access them as and when he or she wants to, number one. Number two, he or she is the only person who can give consent to share these records. So suppose I go to a doctor and I just share I will have the capability, again using the consent manager. And fortunately, because we have a digital identity in this country called Aadhaar, and 1.3 billion Indians have got Aadhaar, I'm sure everybody of you has an Aadhaar. So this enables, this consent framework has been developed by Government of India, which enables the records to be shared. So that's another very, very important feature. And that sharing with the doctor, with the insurer, or with any other person is allowed. So that's another feature. So this is what is happening, personal health records. And then of course, these personal health records in an anonymized manner can be used for disease surveillance and data for public health management. This is another very, very important part because what's happening? Google is able to find out today as to which is the disease which is happening at a particular place. Again, based on the search, why people are searching paracetamol, which means that people are having fever in that particular area. Similarly, of course, that data is a little sort of fuzzy. We will be able to have a very, very robust public digital health, related policy making, data-driven policy making as it is called. Then, of course, anonymized large data set for machine learning. So today you have diagnostic facilities available. People are offering solutions for AI and machine learning based You plug in your X-ray and you get an opinion, a second opinion, which actually comes from the machine. So this is what is also going to happen. We are installing multiple solutions as software as service so that, people can just plug in and get their, the result for their X-ray or their other kinds of reports. So we can have many, many other anonymized data sets for public policy making. Then, of course, what is happening, as I said, is that interoperable health claims, we are creating what is called a health claims exchange. Now, this is an extremely powerful enabler whose basic purpose is to standardize. Of course, you have already standardized the formats, etc. That part is already done. We had a joint study done with IRDAI and NHA, and we have already done much of the work. But what will happen is that this goes a step further. This basically makes claims object, eligibility object, and other objects which Kiran will talk about. And of course, allow consumers to choose any UHI app. Now, we are like UPI. We are creating what is called UHI. This is a little bit of a plagiarism, but UPI is payment interface. We said, let's it be called health interface. The whole idea is that on a protocol basis, we should be able to connect the providers with the patients. This is the broad idea. So the person will be able to search, will be able to book, will be able to avail all kinds of health services. This is the broad idea of UHI. Now, UHI, in a way, it does not, it again operates on the basis of interoperability, which means, let me give you an example, that there's a teleconsultation which is happening today in this country. About 60,000 teleconsults take place every day. Now, these teleconsults are all, one-to-one, in the sense that if I have, let's say, Practo is one of the teleconsultation providers. If I have as a patient Practo's application, doctor also has to have Practo's application only. It's like this, that if I want to purchase something from Amazon, I'll have to have an Amazon client application with an Amazon platform. Only Amazon sellers on Amazon platform can sell on Amazon. No, they can't sell it on Flipkart at the same time. I can't use Amazon app to buy on Flipkart. So this is the problem of interoperability, which means they are all silos. Now, what we are building is essentially this protocol-based approach, which is similar to email. Think of it. I am on Gmail. You are on Rediff Mail. I am able to send you email without any problem. That I am able to do because I am using protocol. I am using the simple mail transfer protocol, SMTP, many of you may be knowing. This is how interoperability is achieved. So what we are doing is, tomorrow, UHI compliant teleconsult applications will be any application to any application. So I may have some application by some provider, and the doctor may have some other application, and we are still able to talk. This is what we are building. We are building an interoperable, so you can search for ambulances, you can search for hospitals, you can search for vaccines, like COVID, you can search for vaccines. This is what is being done, planned, and in fact, this has already become operational in the sense that it is already in sandbox, and people are now developing applications based on the UHI protocol. Next, please. Now, what do we intend to solve? I think most of it I have already spoken, but nevertheless. So check availability of medical resources, discover, book, order, avail. This is what this will do, the Ayushman Bharat Digital Mission. And access, the healthcare providers will be able to view the patient's health history and provide digital health consultation to patient for primary care. And then policymakers and program managers view and analyze public health at national level, implement policy. So this is what ABDM seeks to achieve. Now, what is the architectural principle or architectural view of this entire thing? So let me begin at the base. India is very unique in the sense that it has created a number of digital public goods. This term has become very, it has become very popular nowadays because they are public goods and they are digital. And what we have done, Aadhaar, UPI, e-sign. E-sign is very interesting. You know, for signature, digital signatures, you have to have a dongle. And when you file your income tax, you give that dongle to your CA. Say, bhai, mera income tax file kar dena. Wo kya file karega, nahi karega. And you have the responsibility, right? He is signing on your behalf. तो आपने अपनी कलम उसको दे दी और अपने सिग्नेचर भी उसको दे दी कि भाई लाओ साइन कर दो. Now what we thought, if the identity is digital, why can't I prove my identity on the internet and immediately some service provider gives me a key pair, because ultimately a digital signature is nothing but a key pair. So that the key pair is used to sign a document. So we came up with e-sign 2014, 8 years back. And this e-sign actually is now used to sign your income tax returns, if you remember. You know, you give your PAN number, PAN is linked to Aadhaar, Aadhaar is linked to mobile, and mobile you get OTP and you plug in the OTP and you are digitally signed. This is how it happens. So we have that e-sign. We have DigiLocker. DigiLocker, actually 5 billion documents are on DigiLocker. You can put your, driving license, your Aadhaar, your other kinds of things on digital locker. Consent artifact I talked about. So these are the digital public goods which are horizontal in nature. Horizontal meaning they are not really only for one particular segment or one particular domain. They can be used everywhere. So you can use Aadhaar for your income tax, you can Aadhaar for mobile connection, you can use Aadhaar for opening bank account, you can do multiple stuff with that. Then of course, on that layer, we are building the health building blocks. Basically the domain layer. This we call domain layer. Let's say this is called the base layer and this is called the domain layer. Now domain layer has got digital registries. So we have health identity. Now we probably did not need health identity provided if there were no problems with Aadhaar. Now Aadhaar somehow, because of the litigation and all that, seems to have become a very secret kind of stuff. So this digital health ID, or what we call Ayushman Bharat Health Account, put it this way, we are just creating a health account. And this account number is what we call Aadhaar number. This Aadhaar number is on base, linked with this base Aadhaar, which means it is unique. So it has all the properties of Aadhaar without having any complexities of Aadhaar. Okay, so you can display it, you can do whatever with it. In fact, Aadhaar also can be displayed, but that's a matter which people don't agree with me. So which is health Aadhaar number? Then of course, healthcare professionals. Every healthcare professional is being given an identity, which means that he or she will be able to publish or become a part of the registry, national registry, so that he can be searched. If somebody is searching for some doctor, endocrinologist or some other discipline, this person will be coming. Health facilities. What are the health facilities? Drug registries, others. We are building a set of registries which will be used, generally in this architecture. Then of course, health records I told you about. We have standards of health records, exchange and consent manager, anonymization, aggregation, analytics. Then of course, health claims exchange. This is, I think, the most relevant piece for you, which is the standards for claim submission and processing, and we call it health claims object. How do you construct a health claim object? And then, ultimately it just flows and then you can have automatic adjudication also, and you can have various kinds of adjudication processes and provider payment mechanism. So then what happens on the top of these registries, you have protocols and you have services and APIs. So discovering, booking, avail, pay, treatment, diagnostic, preventive, all this will happen at the unified health interface layer. And of course, you have the individual apps. You have the user applications by the service providers, applications for the people, for the patient. So that's the architecture. And there, of course, this is public. This is the digital public goods, again, the registries, and the other one is public and private. So essentially, another sort of attribute of India's digital public good is we don't deploy and develop solutions. We allow the ecosystem to develop solutions. For example, if you remember in UPI, the Honorable Prime Minister launched Bhim in December of 2016. Now, Bhim we did not promote much. Why? Bhim is actually a reference application. We were not competing with the other private ecosystem players. That's the whole idea. Similarly, we are building an application for the, other reference applications in ABDM, but we are not wanting them to become competitors to private applications. So that's the broad architecture. Next, please. And how this will operate? This will operate basically health information provider. This whole, the HPR, the PHR, personal health records, how will they, operate? One is these records are with the information provider side. If some person, some doctor on the health information user side wants to use it, then this comes through the health information exchange and consent manager. Consent is taken, and then the records are made available, fetched from this side and visualized on other side. So essentially, there is no problem of privacy because health records are extremely sensitive. We have to preserve the privacy, and privacy is preserved by ensuring that only the person who owns the records is able to share them or able to give his consent. So that's the broad idea. And of course, they access healthcare professional registry, healthcare facility registry, and of course, health account is used as an identifier, as the address. Like Aadhaar is used as a financial address for DBT, direct benefit transfer. You transfer money using Aadhaar number. You don't know the bank account, you don't know anything, you just know the Aadhaar number and you transfer the money. Similarly, this Ayushman Bharat health account becomes an identifier for holding the basic, linking the records to that particular individual. Next. So essentially, health claims process, how we are, now the relevant sort of issue, this was only what is called Bhumika थी ये कि क्या क्या हम लोग कर रहे हैं. अब वो कैसे आपको मदद करेगा, कैसे हम लोग सिनर्जी लाएंगे, इस विषय पर अभी मैं आई इनवाइट माय फ्रेंड and colleague Mr. Kiran Gopal Vaska. Kiran is a Madhya Pradesh cadre IAS officer, and he is working as the executive director with the National Health Authority. A bright officer from IIT Mumbai, did his computer science and all that. So I think he'll come and explain to you. Thank you very much.
Thank you for the generous introduction, sir. We are still learning, and my age is even lesser than the number of years you have spent in the service, sir. So having said the preface or the bhumika, now we go a little deeper into what this whole claim processing is about. What is this HCX thing that we are building? What is this plan object? And also, how is it going to help you as the insurers and also the providers on the other side and the citizen who is at the center of everything? So today, this is how the claims processing is happening today as we speak. So a typical hospital would have to deal or have 30 plus insurers or TPAs. And I'll give you an example. I was in Pune yesterday. LTI is one of our partners in the development process. One of our development team leads was supposed to meet me. He got late, and I asked him what happened. So his wife delivered a baby on Monday, and yesterday they were doing the discharge process. They said, "Sir, मैं सुबह गया था. They took 4 hours for discharge." The reason was everything was done. This was happening. The claims processing was happening. They were actually submitting the claims, only then the discharge would be given, and that is how they actually spent around 4 hours, right from 9 a.m. in the morning till 1 p.m. in the afternoon. So what is happening? A typical HMIS, the entire data, even if the hospital is fully digitized, the data is already sitting in their health management system. But then every one of the insurance providers, although the processing, the claim data or the details to be taken are standardized, each one takes these data in different forms. Somebody asks in an email format, somebody have their own portal where they are supposed to enter, somebody asks it in physical copy, and that is what happens here. And then even after that, when they go to the other side, they are all either in physical format or in a particular format that is not really machine readable or can be handled by a machine. So eventually what happens is, there is some sorting, and then finally it's a manual process. And overall, at least from the information that we have from PMJY and other experiences, the total claim processing
could take anywhere from days to months together. So imagine the amount of capital that is getting logged up. Imagine the amount of effort that is going into, and the average cost, like yourself, you said that the average cost of processing a single claim is at least definitely more than 300-400 rupees. So that itself is a significant cost to the entire process. So what we are trying to achieve through this whole HCX model or the health claims exchange model. So what we are saying is the HMIS stays where it is. It does what it is exactly doing. We are creating what we are calling common e-claim standards. That is where we are creating what we are calling a claim object, which has various components to it. I mean, in the process of processing, doing a processing of a particular claim, you have what you call a eligibility check. Then you have a pre-processing or a pre-authorization. And after that, the procedure is done. And then the claim is actually submitted. So each of these times, in each of these instances, they are sharing the provider is sharing certain information with the payer. And we are trying to standardize this whole exchange process. And digital records. The synergy between the ABDM work that my CEO has mentioned and what work that we have done already. So we have created standard health profiles in what is called the FHIR format. This is the Fast Health Interoperable Resource, an international standard used for exchange of health data between two different entities. So we have created these objects, and on top of that, we have created objects that are specific to the insurance domain. And interestingly, FHIR already has certain financial, what you call a subsection in which they have certain objects, but then these are all US specific or not tailored to our requirements. So we worked with CDAC, NRCES, which is the nodal or the apex body for handling this or creating these dictionaries. And we have created this typical claim request, a pre-auth request. And the center of this entire thing is what we call a plan object. So when you enroll a hospital or when a hospital gets enters into a contract for providing certain service under a policy or an insurance policy, you give them certain rules of eligibility, of what procedures that will be covered, and what other additional requirements are documents or other information that you require. So this policy or this plan object that we have created is a generic object that can be utilized to build a particular policy. So it's like a empty or rather a framework into which you can actually put your own values, and we made it as generic as possible. And in fact, I would say our own PMJY plan object is already so complex and diversified that we have been able to find a solution for that. And this plan object is as generic as it can be. So now this HMIS actually can translate the information they have into these objects that we have created, the standard objects. And this health claim exchange that is sitting at the center is nothing but a gateway. It is simply a gateway which has a network registry with information about who are the providers and who are the payers. And today, the provider who is actually expected to interact with 40 different entities or 30 different entities, that many-to-many relationship that was mentioned earlier, actually reduced down to one-to-many. It's either my own HMIS or let's say the reference application that we are building. People are free to use the reference application also. So you use either of them, and you don't have to interact individually with each of the payers, and then your information is flowing towards them in a seamless manner, and the HCX gateway is responsible for routing it to the concerned entity. And there are also inbuilt sanity checks so that the errors that are otherwise committed. A lot of back and forth happens when a claim is submitted. Some information is missing, some is wrongly entered. One of the advantages of digitization is that the validations that we are going to put, both static and dynamic, which some can be done at the provider level itself, or some can be taken in a dynamic form even before I am submitting, so that the information that is flowing through HCX is actually as far as possible correct and is error-free, so that you spend minimum time in processing it. Lastly, when it comes to you in the form of whatever, in that particular objects, you are actually able to do it in an automated fashion. The advantage is that these are all standard digital information which a machine can read, and majority of the information you will be able to read and process in an automated manner, leading to auto adjudication, which is one of the drivers of which can actually help us drive down the cost that we are talking about, and also make things faster. Like I said, the whole capital that is getting locked up, the whole time, the whole back and forth, this gets reduced. So that way, the automated forms come to you. They can be auto adjudicated, and some, of course, will have to be done manually. So today, you in fact would know better than me. Majority of the claims in the US are actually automated. There are only few that actually are done manually. Whereas in our country, it is the other way around. So we want to flip it. That is the whole objective. So by introducing this whole HCX concept, we are creating a new digital public infrastructure that can support this entire ecosystem, and that can standardize this process, make it easier, simpler, and remove those gaps, remove those time lags that currently ails our system. So the idea, and another interesting thing is, we say that this is a very open architecture. It is not that NHA is building one exchange and everybody is supposed to come there. Someone else can also build an exchange. These protocols are open. So, Google built its own Gmail, and that also works on SMTP. And Google, when it talks to Yahoo, it also talks on SMTP. So it doesn't stop anyone from creating even more exchanges, and maybe you will get more value add. And this is the whole idea behind this openness of this architecture. So this gateway there could be multiple gateways, but the standards that are being created could be used across so that interoperability exists. So what would be the capabilities of HCX? Some of them I've already mentioned to you. Oh, sorry. So first thing is the coverage eligibility. So one would be able to check the coverage eligibility in a dynamic fashion. That plan object that you are sharing to the provider is actually going to be the base data through which the coverage eligibility check can happen. Claim status. One of the beauty of automation is that you can actually track what is happening in the entire workflow. Today, a typical hospital health service provider may or may not be fully aware. If it is a manual process, you are either talking to someone on phone, asking for, "Bhaiya, mera claim ka kya hua," where it is currently pending and what reason. But the idea is to give an end-to-end visibility of this entire process. Second is smart contracts. By automating this entire process, the entire payment thing can actually get automated, and HCX platform enables this kind of automation. Provider facility info. One of the important advantages, and this is also, I'll come to the advantage of overlaying ABDM building blocks onto HCX and how it can help the overall ecosystem, is that machine readable information on providers. We have what we call the construct of a health facility registry. That is a basic building block of the Ayushman Bharat Digital Mission. These are verified entities. So what is a provider? It is eventually a hospital or a facility that is providing a service. When they are verified and their digital identity is confirmed through this registry that we have created, it actually helps you in ensuring that the claims that you are receiving are from the right entity. You have shared your policy, the plan object, with that entity that you intended to. You will actually be able to check that, okay, the claim that is coming to me is coming from the entity that I actually have a contract with. Then the policy details. The policy is the standard policy markup language. This is the plan object. This is a generic object that has been created with ability to have, and it is extensible. It's not like I have created n number of fields and then I can't go beyond it. It is an extensible thing. We can tailor it. We can add more fields. We can modify it according to your regular needs. So X insurance company can make its own plan object. It could have different plan objects within the same entity. And then Y insurance company can have their own plan objects, which can be shared with the providers. And finally, digital contract management. When you actually move on to this whole digital world where you have the entities being verified and their digital identities verified, the entire exchange happening in a digital manner, we can move towards digital contract management. So these are the various capabilities of HCX we believe will actually help in making this entire process of claims processing and the entire insurance processing even more smoother, faster, and more reliable. And this didn't happen in a day. And this is where the collaboration between NHA and IRDAI comes to the fore. So IRDAI Health Regulations 2016 actually standardized the claim form, discharge summary, etc. This work was already done. Now we need to, then we took it to the next level where we said we have a joint working group on developing an approach to build a digital public infrastructure. This was done in September 2020. And then we sat down with some of you, whoever was willing and whoever had the time, who could invest the time to discuss and come together and created these standards in 2021. And now today we are in a stage where we have actually developed this HCX. The first version of HCX, along with the reference applications on the payer side and the provider side, are ready. They are, in fact, the pushing them into sandbox is happening as we speak. Maybe by end of the day today, we will in fact publish, we will be in a position to publish it. And the NHA HCX will, basically the sandbox will have APIs and e-claim formats, not only for PMJY, you yourself also will be able to enter into sandbox and start playing with the system. So you are a payer. We have a reference application on the provider side. So whatever you want to see, when I am sending a response, what is the sending a request, what is the response I am getting? Or when a provider is sending me a request, what is the response I am supposed to give? Is the provider receiving the response that is supposed to receive? You can test all of this and see how you can actually create a plan object, how you can actually play with the whole claim processing and pre-auth and eligibility request and all that. So this is what we are doing. And one of our targets is that in August 2022, we actually move at least one of our operations in PMJY, maybe a state or a particular scheme, onto this HCX and demonstrate it to all of you that yes, this can happen and we are actually able to do it, so that we gain your confidence and you also are aware that of those 1 million transactions per month we are processing in a month, a significant portion of it we'll be able to move onto HCX and show that this can happen. So this is the plan ahead. So, yeah. Yes. Yes. Yeah. Absolutely. Absolutely.
The registries that we spoke about, the registry is a dynamic stuff. Which provider is connected to which payer and stuff like that.
So just one small submission, sir. I think very impressive the way it is going, sir, and the enthusiasm that is being built on. The only thing that one of the big problems for us in the industry is hospitals. No, I think that is where this question of Ritesh came in, that one, do we add to that? Now, we are all very excited about it. I think we would make it the platform. We're thinking of building exchange, which I think we're just discussing. We'll drop that idea. And let's say we hook on to this. Now we'll get all the hospitals also on board of this, and we'll make this a single platform for it to succeed. It will not succeed. We have to be all there, fully or not there at all. But then the issue of hospital regulations, in terms of looking at it, in terms of controlling the cost and fraud, is a small request from our side. If that can also become a thought process while you build this, I think then our commitment from our side would be that we all come into this with our entire network. Only then it was powerful. Otherwise, just as a pure exchange for settlement may not be leading to the returns that we want from something so powerful like this. In fact, we're setting an exchange on our own. But after looking at the first thought which came to mind is we'll not duplicate it, not waste time. Now we'll go whole hog with you. But we want this part to be a thought process also, so no, in terms of how do we, because that's a big problem. It's getting bigger by the day.
Yes.
I think we have been asking for regulations for hospitals, not happening. I think the only way we can do is now with the amount of money that we are paying to the hospitals, and we put it together as, if you're not here, you're not part of the network. I think let's make it as simple as that.
Yeah, we want to create what we call a FOMO, fear of missing.
Exactly. Yeah. So once we reach to that stage, but then this has to be the part of the thought process of what we are building. No, I think that is.
Yeah, it's there. It comes. No, this is like the objects that we have built are generic objects.
Okay.
That we are only standardizing it.
Okay.
No, but We are encouraged by this enthusiasm, sir. So it's always very good, sir. 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 Yes, sir. Yes, sir. So now coming to how the ABHA, the ABDM environment and the building blocks that are being created in ABDM environment can actually help in making a lot of things easier for you and in a way help in reducing fraud. And also, I mean, of course, your regular fraud triggers, your regular fraud detection mechanisms would be there. But things like somebody using misusing the system by claiming something multiple times, or I mean, not giving the exact details that one is supposed to give. I mean, whenever someone wants to take a life insurance policy, first thing is आपका health records दिखाइए. Or you actually, I have seen your agent takes the person to a hospital, gets all the tests done, and then then they say that this is the information of this person, and therefore he or she is eligible for this should be the premium. So what we are in fact saying is today your KYC is one of the places where you actually end up spending some amount of time, effort, and money to do the KYC process. And then the information that is shared by by the citizen today when he or she is getting an insurance is a non-standard format, is partial, may or may not be shared, and I don't know, we don't even know how much is being shared. And then even when everything is shared, the time again taken to process it and then arrive at a decision is again time-taking process. And therefore, this actually results in premiums and coverage limits that are not entirely tailored. I mean, on one hand, I can spend a lot of time in looking and pouring into all these documents I have, create something very specific to a patient, or make it like put them people into buckets because I'm spending more time on it. And therefore, I'm actually not giving a more tailored policy to an individual depending on his or her current position. So what we are saying is the ABHA ecosystem, through the ABHA ID, which is in fact backed by Aadhaar for individual identification, solves your KYC problem. The medical records that we spoke about the whole creation of the PHR, the longitudinal health record, actually solves your problem of accessing records in a standard format that your machine can process and eventually give something that is more tailored. And at the end of the day, your premiums and coverage limits are for specific individuals rather than for larger groups, just because you don't want to spend time in going through a lot of documents. So this is an advantage that we think you will be able to give you when, especially for health insurance, when by using the work that is done as part of ABDM and the work that is done in the HCX ecosystem. And another thing, transparency for all stakeholders. I mean, this is an illustrative dashboard I'm saying because when information is flowing from party A to party B through a gateway, and one more thing, the gateway is blind in a way. It does not look at what information is flowing. There is only a small part of it is what we call the protected header, where because I need to know whom to send it to. I need to have certain basic information. Apart from that, what procedure, what are the individual demographic details, I do not know. I mean, anybody who is running the HCX, if NHA as an IT agency is running it, we are not aware. But we are aware of the throughput. We are aware of the time taken. So all these things, the claims processed, the claims paid, average turnaround time, what part of it is digitized? Because as of today, we all understand that this digitization is not going to happen today just because we came up with HCX. It is going to take time. We would probably have to live with PDFs coming to you in certain format. We will do an OCR, try to extract as much information as possible, but still there will be scope, there will be time for those small or medium-sized players to completely digitize themselves and move on and actually create those electronic records or electronic data that can be directly read rather than from a particular document. So tracking how much is happening in a really digital format. And then what is happening from a payer perspective, provider perspective, what are the different packages and packages more from a, let's say, a PMJY point of view to look at what are the general packages that are being used as a state, because states, especially for PMJY, become big players. So they also can actually look at what is really happening with the whole claim process. So this actually gives you more transparency, more visibility about what is really happening. And this will not take away the requirements of fraud detection and other things that are required. So it will only enable and make it even more easier for us to do this. So benefits of adopting HCX and ABHA, I think this I have already covered as part of explaining the other, but just to summarize, for the insured, it will be easier to discover linked health policies, better wallet management, mainly in cases where they have a limited wallet for which they can avail certain services. Digital KYC is another very easy way of doing a KYC, and that saves a lot of time. For providers, like I said, the many-to-many goes away, and it is a one from pre-auth to payment can be tracked. They actually know what is really happening, and faster turnaround times. This is a very, very important. For insurers, digital data, so less error prone, machine readable, auto education, and you actually spend less effort in certain things that could have been done faster and better by a machine than by a human being. And lower costs, because once you do this, you are able to lower your costs, and empanelment of new providers becomes easier because we are already doing a KYC for you. And industry, policy makers, and IRDAI. So the objective is to move towards universal health coverage. Today, even in PMJY, where we are saying that we are covering 40% of the population, we are not touching primary. We are not touching OPD because the costs are higher today. By introducing this, we will be in a position to reduce the costs. And I will also talk about how we can work together to bring the missing middle also into this insurance net in the second part of this presentation. And then the real-time data on the SLAs, on like the time for pre-auth, discharge, etc., can also be tracked by the regulator. And this can actually give a national level picture of what really is happening, rather than waiting for somebody to file their returns to tell that, okay, these are the number of claims that I have processed in the last year. The regulator gets actually real-time data from this. So this was more about, so basically about the HCX and the work that is being done. So briefly, I'll also try to cover how we think coverage can be expanded by taking the missing middle into consideration so that we all move towards UHC, universal health coverage. And also, how do we improve quality in the process? So missing middle, I think you know it better than us, and you've been looking at this problem for some time. So approximately 35 to 40 crore uncovered population, which are falling under that lower middle income category. The bottom, we are trying to cover with schemes like PMJY. The top, they are covered either by their employers or they buy it themselves. This middle is the one that really misses out. So how do we try to bring them in? So they actually, unfortunately, are not eligible for any government scheme because they fall above a certain bracket. They are generally unaware. And not only the BPL and vulnerable population, even this population also falls into the debt trap if some health catastrophe happens in their family. In fact, I think the effect on them is much more because the ones in the bottom part of the pyramid probably have much less to lose because eventually they may give up. But that is one category. It can neither give up nor it can really find some way of getting. So it is really a difficult. This is that typical the middle class which is really which really suffers. And then this is again a difficult to read segment because you can't categorize them into any particular bracket. Usually, if it is a BPL population, there is a political will to get them covered for various reasons. But this is one group. I can't. I mean, there's a group of truck drivers. There's a group of Uber drivers. There's another group that is working as mechanics somewhere. So these are disparate groups of certain income level, but it is difficult and they're not part of a single entity like ESIC or something like that, so that there's one agency which is taking care of, because we understand the problem that if today we say that all of us are one group and all of us are in group insurance, but even one of us stops paying, that whole process becomes irrelevant. So this is again a challenge. So how do we think that by working together, we will be able to cover this? So the suggested approach is to get insurers to create affordable health cover targets for this missing middle by leveraging what we are calling the PMJY ecosystem. So as a comparison, The inpatient affordable cover estimate cost according to Niti Aayog report is about 4,000 to 6,000 rupees. And the cost of cover under PMJY for the current health benefit packages is about 500 to 2,100. So, sorry, sir? Yeah, per family, sir. Yes. So this varies obviously by population size and the kind of pool that you have. So that is one advantage. Another, what you can leverage from PMJY is, I've already spoken about the HCX and the transaction management system that we already have. The provider network that is already onboarded, those 27,600 hospitals that are already working with us. The PMJY package construct. By creating this construct of a package, we have brought all the things that are required to provide a service to a particular individual into one construct, which is the diagnostics up to 3 days before the actual hospitalization and procedure, the actual procedure and hospitalization, the inpatient cost, and costs up to 15 days of medication and post-op care. So that is a package. And fraud and abuse control, we have robust mechanisms. Of course, they're continuously evolving. And those who are trying to circumvent are also continuously evolving. This is a cat and mouse game that continuously happens. So we have an AFU division. We do a significant amount of fraud analysis on our own. And also, there is one possibility of evolving the Arogya Sanjeevani to become more affordable, like PMJY cover, especially for retail distribution by insurers. And then we ourselves at NHA are working to find out ways in which we can target groups that we can probably try to cover. Let's say we are having discussions with Truck Drivers Association. We are having discussion with other such associations who are willing to form a group and to whom we can probably find some way of using our packages construct, defining what packages can be given to them and using them as a pool if we can discover a price for providing cover to these people. So this is something that we can jointly explore. And improving quality of care. The common packages, I've already spoken about how we have built these packages. Another interesting thing that we've done as part of PMJY is the standard treatment guidelines. So as a payer, I am always wary of this fact that I say that, okay, I will cover, let's say, XYZ transplant or liver transplant. So what goes into liver transplant? What are the minimum diagnostics that are required? What is the procedure that needs to be followed in case of A situation, B situation, C situation? We have tried to cover these and codify them and provide them in such a way that we are able to standardize the entire process so that there's no uncertainty about what is the final cost that is going to come to me, which is very important. I mean, the whole idea of, I worked in the finance industry before coming to the service, and for risk, there are only two things, uncertainty and exposure. So when there is an uncertainty of it could be both that can kill you as far as risk is concerned. If either of them increases, then your risk increases. So the exposure in terms of what a provider is choosing as a procedure, if that is not certain, then you do not know how much is going to come to you as a claim. Then it becomes like between you and the provider as to what I will allow and what I will not allow. That is not a very happy situation. The standard treatment guidelines actually help you to standardize the procedure and also what documents are required, what are the other clinical circumstances under which a particular procedure is to be done. This is being done. And then the quality indicators as part of this entire PMJY process are also helping us in identifying who are the better ones, who are the better providers, who are providing, who are NABL accredited, for example, so that the quality of their service increases. And we have incentives to encourage hospitals or providers to get these more and more certifications. So this thing that we have already built as part of the PMJY ecosystem can also be utilized. And we've already been collaborating with the collaboration between NHA and IRDAI has a history. So we created a report on hospital network management, on how a common empanel portal would look like, a common unique ID repository. We created a report on common IT infrastructure, which is about the e-claims, the smart digital contracts, the standard coding. We created a report on data standards and exchange, where we have defined 56 common variables, how exchange of data between the authorities can happen on a monthly basis, and plan for real-time exchange, and report on fraud control and abuse. So all these have been covered, but post that, we've had limited interaction. And we need to restart this engagement if NHA as that body running PMJY and catering to 40% of the population, and also having creating the digital backbone to digitize this entire process, and IRDAI and you all as one significant part of this entire ecosystem. Once we start working together and take this further, I think this universal health coverage also can happen. So that is one of the things that we would like to highlight. So overall, the way forward, we think, and of course it would be, we will be happy to take your comments, and I think we have a lot to do after this, is that HCX, joint discussion on how best we take it forward. I was really happy to hear you when you said that we are ready to abandon our own work and come on to this, and that is really encouraging, and that gives us more and more impetus as to how to push this forward. ABHA, I mean, how we use ABHA, rather I would say how we use the entire ABDM ecosystem into it. Not only ABHA, not only PHR. What if while I'm searching for a doctor, I also hit the HCX data, or I also am able to leverage that data and see, also show me hospitals or doctors whom I already have coverage with. So there is an interplay between HCX and UHI together, working together. So how that can happen? How we can reduce costs by the KYC mechanisms that we are already doing, how you can leverage them. The coverage part, about how we can bring low cost affordable solutions. And then how do we improve quality? And this we can do by identifying some nodal or officer group, agency, or some group that can actually prepare a plan on various joint recommendations. So I think this is what we wanted to share with you. And I think there were some questions. If time permits, sir, we can take some of them. Sir. Thank you.
Thank you. That was, again, a very exciting presentation. As Tapan explained, just this morning, we were with Chairman saying that we want to set up this health exchange. Some of us were talking about this. Clearly, it makes no sense for us to progress there. A question that I wanted to ask you is that today, if we want to start engaging on this health exchange journey, where are we in terms of readiness and preparedness? Because this is a burning issue for the industry. You gave the example of 4 hours. We believe the delay at our end is maybe few minutes, maybe 30 minutes, 45 minutes. But the customer perceives that the delay of 4 hours on the insurance industry. So we believe once this happens, it will actually improve the credibility of the industry. So first question is, how soon can we start this journey? And I have 3 questions or 3 points. So let me make all 3. Second is, I think the question that Ritesh asked, how do we get the others on board? So maybe, this is something that we have to do as an industry, that all our policies, all our network providers, we have to mandate them to be on this platform. Otherwise, they won't come. They're not coming on the Ayushman Bharat scheme for various other reasons. So even for this account, they will not come unless we mandate. And that's something that we have to do. And the third thing that you said about the longitudinal data about individuals. So one of the most powerful feature is, the example that you gave for life, for non-life, for health insurance. We come up with, limitations on the product. Or we look at prior period, or pre-existing disease issues at the time of claim. Now, if you have this data for people on a longitudinal basis, we completely trust that data and say that this customer, if a claim comes, we will make it, straight through processing. Because we know that this customer didn't have a pre-existing disease. But that data has to be from his or her lifetime. So what are you planning in terms of developing the longitudinal data? Is it prospective, or are you looking at data of the past? And how are you getting to the hospital to share that data with you?
Okay. So I'll try to answer the last question first. Then we'll go in that order. So regarding the longitudinal health history, see, all of us have visited hospitals or have undergone treatment at one point or the other. And some of the hospitals we have visited have some of our records. So the beauty of ABDM is it doesn't say that you have to change your existing system in any way. What we are asking is, you only add an additional layer where you are creating what you are calling an ABHA, and you maintain your own individual identity as far as your system is concerned. and you just have a table where it says that my internal ID is linked with this Aadhaar, and the consent mechanism that we are using as part of, let's say today I go to a hospital for a treatment. Let's say I go to Apollo Hyderabad, and let's say I have gone to Apollo Hyderabad even earlier. So the consent mechanism that we have actually enables Apollo to ask me whether they can also link the records of my past history also. So today, a lot of hospitals are sitting on a lot of records, even government hospitals, the e-hospital or e-Shushruth, the two government softwares they have, they issue what you call a UHID. Most of the time it is common. Every time I go, I end up getting the same ID. So this, they already have the list. So ABDM architecture has the ability to link retrospective records also. They have to be in digital format. Obviously, I can't do anything about it. Plus, the private players that we are onboarding, this is not something we can do alone. So there are apps that are already integrated with us, which give you an opportunity to scan and upload your old records. They are reading the data. Let's say somebody is diabetic and he has diabetic, the HbA1c reports and blood glucose reports for the past 2 years. Applications are already available where you are scanning and uploading. He is reading the data and actually giving you a graph saying that this is how your thing has happened. Third, ABDM in this current form is in a position where, in fact, we are already working on it, is where your variables and all the technology that is going to come up, the data that is throwing it out. Let's say there is a diabetic who has taken a policy from you and you are covering him for certain things. But then there is also a responsibility on that person also to maintain a certain quality or health, quality of life. So if whether he is following the doctor's advice or not, whether it is deteriorating, and there are such devices that are coming up. There are now, I think there's one device already where it can, it's a non-invasive way of checking your blood glucose on a real-time basis. So all this data also can flow into the system. So retrospective records can come in, provided they are in some digital formats. Even if they are not in digital formats, there are already applications which are helping you digitize and pull the data. And going ahead, we are also ready to take on data that is going to come from this IoT environment. So this is how it's going to happen. Now, then your first question as to how do you bring hospitals on board and how do you know where that delay is happening? For you may be taking only few minutes to say yes or no. But then if that few minutes, yes or no is happening 5 times. Because the errors that are coming in, that are creeping into the system because it is not standardized, it is manual most of the time. There is a back and forth that happens. We are not saying that error आपके पास आता है claim and then आप 4 घंटे लेते हैं. आपके पास आता है, आप देखते हैं ये ठीक नहीं है, आप वापस भेजते हैं. फिर वो अपना समय लगाता है चेक करने, फिर वापस भेजता है. ये बैक एंड फोर्थ 3-4 बार होता है, तभी 4 घंटा होता है. Otherwise, everything is okay. It's not that everything is happening. The average time is so much time. Average time is 4 hours, but there are things that are happening in 15 minutes also. So that is what we want to reduce. So that's the basic idea. The question was, where are we on the development of the HCX? Yeah, that's the last one. Development of HCX. Today is Friday. Go back home, take rest. Monday you come, we'll start playing with HCX. It's on sandbox, so you can start to it. We can start. We have exposed the API. By today evening, we'll expose the APIs. Our implementation guide is also going to be online. Some documentation we will develop together. I mean, I'm not saying my entire documentation is ready as of today, but the system is ready, so we can start playing with it.
Thank you. I think first and foremost, I must compliment Mr. Sharma. I've not seen any youngster so enthusiastic and so in-depth when he speaks about technology. I think that was the first discussion we had when we saw him speak. His energy, enthusiasm, and the depth of understanding was amazing. So Sharma sir, hats off to you. I think that's the first thing. The second thing is that it's a big problem for us. Health insurance is not something that we can take lightly. The claim ratios are high, frauds are high, and no common platform. And that is why we were thinking about getting it done together. And like Bhargav and Ritesh also mentioned, I think time has come, we have to make it mandatory. That's my, I think personal thinking, and most of us actually agree to this. Not only for provider, even for something like reimbursement also. for the first time when it comes through, it will be the owners of the insurance company ensure that either the hospital comes on board or we stop, allowing the hospital to have any kind of medical reimbursement or cashless. I think if we don't go to that extreme, we'll not be able to solve the problem of insuring the middle, like you said. Right. Let us be honest about it. Right. In a fragmented way, we're not able to solve it till now. Our cost, even at the premium that we charge, the loss ratio is 120, 130%. So why do you expect us to drop it there? It will not happen. So as an industry, I don't think that we should use this as a differentiator now. I think as an industry, we should use this as a putting it together to serve the nation, to bring the cost down. Let's start from that perspective. Right. So it has to be mandated. Everybody who's on the insurance ecosystem has to be on this mandatorily. Right. The first time somebody comes in, obviously to the customer, we never say no, because we are there to serve the customer. But the owner should be to get that person on here. When we do that, then in 2 to 3 years' time, we will be closer to solving the issue of missing middle and solving the issue of insuring everybody in the country. I think either we make it this powerful, we cannot play on the fringes for this, And that's a decision I think, sir, we would like to propose industry. They will take it at this level. Then it becomes powerful for us to solve the problem that we are facing in terms of the health insurance penetration or increase of putting it forward. That is our thinking from our side. But very, very beautiful presentation, I think. So, but the only disconnect I have is that we don't go back and rest, sir, while you work.
Let us all work.
No, I just had a couple of things. See, we've also been sort of looking at eKYC for the non-life sector, because that was something which was largely at the claim stage. I mean, for the health, we could actually use the ABHA as the eKYC, because that way we will get everybody's ABHA also created.
Yes.
And because that is when the digital, the whole sort of thing sort of moves to the next level.
And we've already created some 24 crore ABHAs.
Out of the COVID and...
out of COVID and also various programs.
Yeah. So this was one. The second one was picking on what Tapan was talking on from a reimbursement perspective. I mean, it is our belief that there is a lot of fraud which happens out of reimbursements, because there are things which come in 2 months, 3 months, 4 months after the hospitalization. There is nothing that you have with. And in motor, for instance, we have this concept that every claim needs to be surveyed, whether it goes to our cashless or goes to a reimbursement garage. However, in this case, this was not happening, and we could actually use this to transition there, because there is a significant amount that we are losing. I mean, obviously, there is no data whether it is 5%, 10%, 15%, but there is a very, very large component that we lose there. So maybe this could actually be the transition from the from the reimbursement perspective.
Correct. And I would say I cannot agree more. And one thing I just wanted to highlight is the power that you possess as the payer is something we also want like to leverage. Because today you say that you don't stop what you're otherwise doing. You say that, okay, if somebody is going to come to me and submit these claims on this platform, I'll accept. Then they'll only read and maybe it will be at a lesser cost because it is costing you less. So that way, I think, I don't know how much it would work if we want to make it mandatory, what kind of from a regulatory or a policy perspective, I think that a call could be taken. But what we would like to say is like, if this is one of the options, and then people start moving. So I think that could be one way.
We have been wishing for it all these days. We know it is not easy, it is very difficult, and we are very glad to see that you have taken the first step. So we have to make it powerful through a combined effort. But one bottleneck or one suggestion, what I could see, suppose in some hospitals are sending us a PDF file. Will it be a disturbance for the HCX?
No.
And number two, sir, the hospitals, the high-end hospitals have a very high-end HMS system. The smaller hospitals and the mediocre hospitals, either they don't have or they have some compromised HMS, which will have some problem in integrating with our HCX switch. We are trying to create HCX switch as a data blind to data and as a route. So if I do not know that I'm right, parallelly, if you can develop a hospital management system software, which can be offered to smaller hospitals. When we talk about this, when the immediate question is, sir, can I use it for my, with my compromised software? So if parallelly we can offer one of the HMS platform, and so that adoption rate will be much faster.
I'm happy you asked that question, because only 3 days back, we reviewed and we actually had a concept of what you call an MVP, a minimum viable product, as to what all features a typical HMIS, which would be ABDM compliant, should contain. So we are happy to tell you that we've identified 6 products, each one, and a couple of them offering the service for free, and they have versions, one for a very small clinic, one for a medium hospital, one for a large one, all in a SaaS based model, and ranging from completely free to about 400 to 600 rupees per month. These solutions are already available, and we have listed it on our webpage. So we are, in fact, this was a very, very important problem. I mean, we also struggled with it, and we also thought, okay, we'll build this exchange, the insurance, the payers are very interested, everybody will, but where will the data come from? If eventually everything is happening on paper, I can't create magic and then convert it into those objects that I'm talking about. So that is why we worked in parallel with other IT companies who are in this field of HMIS preparation. Some of them, interestingly, are hospitals who themselves have developed these software so that they have the end-to-end knowledge of the entire process. So there are already such products available, and NHA is already had listed them. And just like you want to buy a computer or you want to buy an AC, the websites show you, right? You select 3 of products and then they compare and say what is better in what. We in fact created that comparison matrix also, so that people are able to choose, and one is able to choose which one suits me best and what features are important for me. So that work has been done. Thanks.
Digitization. See, as Kiran says, that unless the whole ecosystem is digitized, the play will not start. Certainly not at the scale where we want it to start. And digitization will have tremendous impacts, as I said in my introductory part also. Now, there are a couple of levers which we are exploring, both regulatory, legal, and maybe some incentive based. So essentially we are trying to create, and probably we will work with IARDAI, because ultimately health insurance, it will be a topic for the insurance regulator agency or authority also. So what we want is that what levers can be used to ensure that hospitals come on this digital platform, whatever platform they choose to come on. And we have actually engaged some legal agency to actually tell us as to which are the laws which can be made anchor to expedite the digital process. So that's also another parallel track which we are working on. HMIS, low cost HMIS, as easy to use as, let's say, creating an email ID. That is what Kiran talked about. We have 6 products which satisfy the minimum viability criteria and which are available at a very minimal cost, 500 rupees per month. अब 500 रुपए का तो Netflix का लोग जो है अपना वो ले लेते हैं, अब फिल्म देखते हैं. So this is something with a very minor cost, and they are coming up with. They will give you the space also on the AWS or whatever other platform. So that's what is happening. And we want to again, we are not in the role of, we are not regulators, but we are certainly in the role of market making. We want to develop this entire ecosystem. That's our interest. Because I think what has happened is that health has come out to be an extremely important subject for all of us during this pandemic, certainly. And what is important is this area is the area. FinTech, for example. Now, digitization in financial sector has really proceeded at an extremely fast pace. Devashish has been the Secretary of Department of Financial Services. He knows it too well. Banks have come on board. UPI has happened. JAM has happened, and all those had happened. So now I think the next big sector is the health sector, and that is craving for digitization. And I think it will have huge impact on the accessibility, quality, and affordability of the health services in this country.
Sir, I just have a related question on that. In fact, that was what's going on my mind. That in the absence of a healthcare regulator, do you think there will be challenges for all the hospitals large, very large, medium, small, to basically come onto this kind of a platform? And how do we basically mandate them? Because we can always say that we are going to mandate everything, but finally the providers also have to basically come onto this particular platform. So do you think that there will be any challenges on that, and what are the thoughts on that?
To ensure, certain orderly growth of a sector. I understand and I agree with you. And obviously, it's not in my hands to create a regulator for the health space. But what we are saying, let us utilize whatever we have. There are laws, there are Clinical Establishment Act, there are other levers which are available to us. And also let's understand this. If you talked of digitization on a massive scale 15 years back, 12 years back, people would not have appreciated it. But today, digitization is an idea whose time has come. Nobody is going to say, oh, we should not have digitization. So if you say now, I think this is the right time where we can all work, IRDAI, Ministry of Health, NHA, we can all work in tandem to say, let's say, roadmap to digitization of health sector. We can create a joint paper whereby he can, we can say this will be good for the health sector per se, for insurance industry, health insurance industry and all that. So I think this is something which we can have, and we can make policy makers more sensitive. Everybody will become more sensitized. Like environment, for example, single-use plastics, they have been banned from today onwards. So I think there are times where some ideas become extremely acceptable, and digitization as an idea has become extremely acceptable now. And we have shown also, India has shown many of these digital products and they work at a scale. And that's I think, so it will happen. Regulator will be certainly another step in the right direction probably, but I really have no views on that because I'm not the guy who is going to create a regulator.
Thank you, sir.
So one quick question. The providers will come on board eventually, but what about Abha? What has been the experience so far? With UPI, it was good payment interface, good experience, right? And zero MDR, that was an impetus. How will Abha adoption increase?
See, Abha adoption basically is two things. One is the Abha number generation itself, which we think is a relatively easy thing. It's because a single interaction, any point, maybe it is at a hospital. In fact, we are also talking to some banks who are saying that we could do it when somebody comes in. And any health interaction you might have, and if the system is integrated with us, your Abha is created. The real play is when your records are supposed to be created and linked to Abha so that they get access. That is when my longitudinal health profile gets created. So we are doing it in two ways. One is on the government side. On the government side, there are multiple health programs under which this kind of data is being created, be it RCH or non-communicable diseases or various other Nikshay and such programs. So each one of those programs is integrating with us, where apart from Abha creation, the health record they are creating as part of their regular work also gets attached. That is one. And then the state governments themselves have their own programs. In fact, before coming today, I was visiting one health center in the old city, where today Telangana government has 4 different applications. One called KCR kit, another for NCD survey, another called Telangana Diagnostics, and a third one called e-health profiling. So these are all 4 softwares where they are already capturing data digitally. So I was actually going, and the diagnostic Telangana diagnostic scheme, they are actually doing really various lipid profile and all those diagnostic tests, and the data is in digital format. Now for them, it is only a matter of doing that Abha integration and linking. So that is what I explained to them. Once that does, they have some 17 records of some 17 lakh people ready, and they are going to do an entire state level thing. Andhra Pradesh, as we speak, is already doing it. Andhra Pradesh, in fact, Abha numbers that were created, Andhra Pradesh is the only state where the number of Abhas created through their NCD drive is much more than what were created during the CoWIN platform, using the CoWIN platform. Then there are other states which are at different level of integration. So this is on the government side. On the private side, we are trying to show them the value of coming in. And this, I think, especially for the private side, these other things like HCX or the unified health interface, we think that these applications and then the health tech companies. So today, as of today, 42 different health tech companies have integrated with us, and they have their different applications ready. It could be an HMIS, it could be a mobile app, and it could be some other web-based application. And another 800 are at various stages. So as the private players are integrating with us and starting creating of Aabhas and creating these health records, in fact, that charting thing that I told, it is an app that is already live.
So it's a great presentation. I had one request, like the other studies which had been done with IIT on standardization of definitions and the invoice. So you had one slide on a payer to incentivize quality of healthcare. So there could be a joint study which could cover, I think the points of fraud management, overuse, standard protocols. So how does the payer start? And there are a lot of very good examples in a lot of countries globally. Earlier, CII, FICCI had also done some work. So that joint study can become also the one part of this thing.
Yes, absolutely. And I think this is something we also would like to do jointly with you. We are showing something. No. abdm.gov.in. Dashboard.abdm.gov.in. Sorry. ABDM. इंटरनेट नहीं चल रहा है क्या? इंटरनेट नहीं चल रहा है क्या? Technology can. Yes, sir. No. Yes, it's public. We can share it with you all. There's nothing secret in this. I don't know. Net नहीं है क्या है? Ma'am. Of the individual.
For an insurance company to insure?
Yes.
Yeah.
Right. So, I don't know. I'm just trying to point. So this is like a public dashboard that we have created so that one can track what is really happening as part of ABDM. So as you can see, some 22 crore 79 lakh Aabhas have been created, and today some 58,000 or almost 60,000 odd Aabhas have been created. Almost 1 lakh health facilities are registered with us in our health facility registry. Some 23,000 odd health professionals, mostly doctors, are on our HPR, and this number is increasing daily. And as you can see, states that have taken a lead and have done it through automated systems are already ahead. Like Andhra Pradesh, like I said, is doing an excellent job. So they are not only verifying their professionals and they are also adding their facilities. They are also the largest in terms of number of ABHAs created, and every state is doing it. If you can please scroll down. नहीं, scroll. इससे कैसे scroll नहीं होगा ना? करिए. So this is just a pie chart which shows by age group and by gender. On the right hand side, you can see ABHAs created by partner. So here you can actually see whether the ABHAs that are coming are either only through the co-wing platform or the PMJY platform or any other government entity, any other government program that is running it. And आप health records पे click करिएगा. So health records are like, obviously CoWIN is the first one and is the easiest one where I can simply pull my CoWIN certificate through any PHR application. Apart from that, the NCD drive that I mentioned about Government of Andhra Pradesh, e-hospital. E-hospital currently runs on 687 hospitals across the country. So each one of the e-hospital system is integrated with ABDM. So whatever records that they are creating, I'm not saying every hospital is using e-hospital end to end, but at least those where the system is being currently used, this is where they are like linking the health record that they are creating. Similarly, we have the software of Dadra Nagar Haveli, e-Arogya. Then you have railway hospitals. You have Briefcase. This is a private entity. You have e-Shushrut running in AIMS. You have Doc Prime, which is again a private agency. You have e-Sanjeevani, PMJY, Bajaj FinServ, etc., etc. So this way we are actually tracking where this information is coming from or which are those entities that are creating, mainly to understand how it is going in the public sector, how it is going in the private sector, so that we can target our outreach methods in a better way. And then below it is general trends as to how many ABHA health records are getting linked, the ABHA creation trend, the facility verification trend, the healthcare professional, the rate at which they are coming in and joining us. So this is a slightly more detail on how many applications have come. So this is an interesting thing. The healthcare professional registry, if you look at the graph in the bar chart in the middle, that combined bar chart, this one, the one below. Here, that orange one or light orange color one is the applications that have been submitted by the professionals. And the green is actually those the councils have actually verified that if somebody is saying I'm a doctor, the council verifies whether that record exists with them. So this is the KYC that we are doing. So for a practo, for example, this is a value proposition we give to some private player saying that you want to onboard doctors, you spend X amount of money in finding out whether he is a doctor or not, whether he is, where he is practicing, etc. Pick it up straight away from HPR. We are verifying it. We are verifying it through agencies who are actually empowered or authorized to verify them. It's not a word of mouth. It's not something that we are doing on our own. We are actually doing it through those agencies that are authorized to do it. And then, so this is the value addition, or this is the KYC that we are saying that we are already doing, which you can leverage, which can actually make it easier for you in improving your own KYC process and making them much more easier. So I think that is us. Thank you very much, sir.
First of all, I would like to thank Kiran for that very insightful presentation and also the excitement around the entire industry here. And in this morning, in fact, sir, we were discussing of creating a platform. I said, hold on. This afternoon, we are having you here and a presentation will be made. So I think, sir, to go ahead, move forward, I think we will revive the engagement and we'll make it a more intensive engagement. We'll create a working group. We'll have a few insurers on board, and from the regulatory side also, we'll have a couple of our representatives. And we would like you to also nominate a couple of key resource person. Maybe Kiran can sort of be the key person there. And we start working. And then from the regulatory perspective, we look at what are the things which needs to be mandated and which will work, or something which we can incentivize and get them on board. So we'll work out all those details, probably will come out through the working group. And more importantly, how to cover the missing middle is also something this group should also work more details. The last point, sir, I would like to request that currently, to my knowledge, only 7 states are onboarded as far as the insurance scheme is concerned. Rest of them are all on the trust mode. It will be perhaps a good way of targeting that all the states should move to the insurance model, and that will help and give them the impetus to go in for the missing middle, even add a layer to top up the current level of coverage that is being provided under the Ayushman Bharat scheme. So it will be a win-win for all. So I think, sir, with your intervention, probably if we move to the complete insurance regime, then it will be all the more, a uniform approach to whatever we are doing. So, sir, I'd like to personally thank you very much for taking out time, coming to Hyderabad, and giving us a perspective of what is being done there and how we can utilize this whole, efforts that has been made by the National Health Authority. So thank you very much, sir, and we'll continue to bother you time and again. And thanks, Kiran. Thank you. Namaste, sir.
So, thank you very much, Dr. R. S. Sharma, sir, and Mr. Kiran. On behalf of IRDAI, as a token of affection and respect and gratitude, we have a small momentum to give. Can I request Varsha Chaudhary to please facilitate handing over? Maybe. And Mr. Kiran. Kiran. Thank you, sir. So, ladies and gentlemen, we will begin with the next item on the agenda, and Chairman Sir will be back in just a minute. There's a slight change in the program. Before we have the presentation by the General Insurance Council, we will have the presentation on corporatization of IIB. Mr. Anuj Gulati, I would request you to kindly come, and the floor is yours. May I request the others to kindly settle down, please?
Ma'am, should we wait for Chairman sir to come in? Respected members, executive directors, industry colleagues, Tarun Chok is a representative of the life insurance industry. A colleague, Nilesh, is in the washroom, I guess. He represents the general insurance industry, and I, on behalf of Standalone Health, we're a part of the IIB Governing Council. Mr. Kunal Prem, the CEO, is in the room, and we've collectively put together this little deck. The idea was to update you today on some of the work that has been done by IIB, and I think hopefully we can get more time and participation from each of us, seeing the value that we all will collectively see in the work that has been done. Can we go to the next slide, please? Yeah, I do. Next slide, please. So, okay. Thank you. So essentially at the heart of it, what we've done so far is we have put together some industry data. 2009 is when IIB was set up under the aegis of IRDA. 2012 is when it became a society, and the memorandum article of association of IIB give it a lot of power, a lot of freedom to operate. And it's under that aegis that a lot of work has been done. Thanks to the mandate that we've had from the regulatory body, all of us have been contributing data. And with all the data that is being put together in IIB, as you can see today, there are some tools that have been built out for fraud management. There is a claim risk model around motor and life insurance now. There is a caution repository for employee fraud, agent, so on and so forth, which is being put together as we speak. And of course, all of us have been using research reports, some general, some bespoke, that have been coming from IIB in that sense. What was information for me as well, and which is overall, IIB spends approximately about 20 crore rupees a year. And already about 15 crore rupees is being collected from us. Right, so the gap in self-sustenance of IIB is only about 5 crores, which IRDA has been financing up till now. Let's go to the next slide, please. Yes, next, please. So we looked outside of our industry to see the work that has been done and what a bureau like this or an information body like this could do. And I thought there was a lot of learnings that we got from the credit bureaus, the work that they've done. The fact that they are able to collect every line item of data of credit that is taken in this country, the fact that that itemized report is made available to every lender in this country has helped grow business, has helped grow penetration, helped segment the market better, and so on and so forth. Next slide, please. And essentially what they've been able to, the previous slide. What they've been able to use now is the credit bureaus through tools participate in every element of customer underwriting, acquisition, customer management, collection, and recovery. Right? They have tools which fit in at every line, at every element of the whole lending and collection process in that sense. Next, please. Yeah. And similarly, when we thought about IIB, next step, please. Next slide. This is what is potentially feasible from a customer acquisition underwriting standpoint. Right from KYC to dedupes and so on and so forth that we need at the time of policy servicing and of course at the time of claim. There is a feasibility that we could be using tools which can help us at every element of our own underwriting and servicing process in that sense. Can we go to the next slide, please? This is, as I said, some work that has been done, what is on our left, and work that is being planned. So under IIB, there was a little subcommittee that was formed which has spent time putting together a document, and I would encourage each one of us to read. If I can request Mr. Prem to just email it, because I had some CEOs from the life insurance industry also request for it yesterday. Email it to all of us. I would request, it'll take about 15-20 minutes if we just go through the summary. It's a very comprehensive document that lays down the entire roadmap for IIB, because not only has it been drawn up by the subcommittee, later it went back for consultations with industry and experts from outside the industry. And we got some very valid inputs. Basis which it's a very comprehensive document which lays down the roadmap for IIB 2.0 in that sense. Can we go next slide, please? And basis that some plan around life, general health. One approach that we've always taken in this industry is we think of it like motor, life, and health. And I think that's the first myth that the moment you think about data, mortality data, morbidity data, health data, fraud data is all very valuable the moment you look at it collectively, right? For each one of us in that sense, right? So just starting to think about data from a consumer standpoint more comprehensively. One limitation that we've had up till now, we've not taken, it's been anonymized individual data, except for one pilot that has been done within life insurance, where they've tried to underwrite individual lives, where not all life insurance companies, most companies, private companies have now provided data and they found it very valuable. And the thinking now was, how can we have enabling regulation? Because apparently under the policyholder protection guidelines, we are not allowed to today submit individual data, etc., etc. So how can we get that? Under the data privacy bills and so on and so forth, there is a carve-out now for credit bureaus. So can we have a carve-out for IIB? So that some of us could start providing that data and the value for which we could start to get in that sense cohesively. Can we go to the next slide, please? So in the last governing council meeting that we had at IIB, this was end of March sometime, Chairman IRDA asked us two, I thought, questions that forced us to introspect. The first question he asked was, why is the industry not leading the effort of building this out from here? Why you're expecting IRDA to build this out for you? And the second question he had was, as chairman, as IRDA, I am very clear on what I expect from IIB. Give me a map of India, I should be able to put my finger, and you should be able to tell me in that village how many individuals are covered, how many individuals are not covered. As industry, are you clear of what you expect? The moment you're clear, you'll start getting it from here. And why don't you drive the governance of this? And I think that is really the opportunity point. That's the point at which we all felt that, listen, this could be the biggest opportunity for all of us, where whether it should be for profit, not for profit, but collectively we taking ownership, equity ownership, but certainly in spirit, getting involved in this body, some of us leading the governance of this and leading the build out from here. And the first step, can we go to the next slide, please? So one of the, when you think about the heart of it, this institution is about people, high quality people, and it's about laying down tech infrastructure. There is some groundwork that has been done. There is a foundation that exists. There is a lot of data that's already been collected and processes set up for collecting data. We can argue to say we could get better data. We could argue to say we could have better, more efficient processes of collecting data. But fundamentally, some of those building blocks are in place. That in combination with, from a people standpoint, the existing folks, we are on the IIP website, there has been a search put out for a new CEO. Age profile, 40 to 55 years of age, market link compensation of up to 1.5 crore rupees per annum. So once again, the idea is to get in some of the best, some very high quality people who come in and lead this from here on. From a regulation standpoint, as I said, IRDA has been very supportive. We're already getting data, as well as there is a draft regulation that was put out sometime last year. And as that becomes, that exposure draft becomes law, we will be able to collate even individual data and so on, so forth, which should help us collectively utilize this information much better, right? So all in all, the idea was to give you an update on some of the work and the thinking around IIB, and a request that I think it's a great opportunity for some of us and for all of us actually to participate in ownership, in governance, so that we can build it out from here collectively. Right? So that was the whole idea of this presentation. Thank you.
Thank you very much, Mr. Gulati. May now request Mr. Nagaraj Sharma, Secretary General of the General Insurance Council, to give a presentation on the role of the Council and the way ahead.
Respected Chairman, sir, honorable members, senior executives of IRDA, and my dear colleagues and members of the GI Council. Thanks a lot for giving me an opportunity to say a few words from the Council's point of view. Before I go exactly into the role of the Council as a growth driver, I would like to say a few things about the Council. GI Council is a statutory body created under the Insurance Act, and it's not a mere association of the insurers. This is not a group formed just to protect the interests of the companies. It is something more than that. That is the role given to the GI Council under the statute. And what is that role and why is it given? The reason is the subject we are dealing with is quite a complex one, is a technical subject, insurance, and it's not easily understood. The nuances of it is not easily understood everywhere. And the government felt that it is better that there be a body in between the insurance companies and the government, various departments of the government, or the regulator, or the courts, or the various other industry bodies. So they thought that there should be a representative body to wherever some point to be discussed or any clarifications to be obtained, they thought it would be necessary. So they created this body, and this body does its job by trying to, explain the correct position or the nuances of the business that we are carrying out, and to the satisfaction of the various organizations, so that the insurance company's role is well understood by the general public and also the various bodies. That is the main role of the GI Council, and in that we are trying our best to perform this role to our maximum capacity. Of course, in fact, a lot of learning happened to me, although I spent nearly 36 years in the industry. In the last 3 years, what I learned about this industry is much more than what I learned in the last 36 years. I can humbly admit that. So that is the kind of situation we are in. But then it also gives rise to a lot of situations where we need to properly explain the conduct of the insurance companies, or maybe the certain policies or certain decisions taken at the insurance level, which are not easily understood outside, and they see this more as hurting the customers, which not exactly so. So that is where we come in, and then we try our best to explain to the people and the fundamentals of the insurance and all. So we need people at the GI Council level who are thorough with the basics, the fundamentals of the insurance, and who have in all India a macro approach to all the issues, and who know it, and then who can explain it better. So that is a kind of role the council has to play. And in the process, indirectly, the GI Council works for the growth of the industry. How it works for the growth of the industry? Because if I may I may ask you to recall the tagline of Indian Overseas Bank. I don't know, those of you who are familiar with the tagline of Indian Overseas Bank, it says, "Good people to grow with." So good people to grow with is a wonderful tagline with which they wanted to project the Indian Overseas Bank as being run by good people, so the public can trust and come to them and do the business. So is the case with the councils. We try our best to project to the people that the insurance industry is the best one, the good people. The people here are not cheats, as commonly many people think that insurance companies put a lot of things in small print to negate the claims. No, that is not the case. In fact, if you take the overall balance sheets of the insurance companies, you find a lot of money is being paid. In fact, our combined ratio is much higher than the premium collected. So all things needs to be properly projected, and we try our best to do that. And by projecting that the insurance industry is good, is beneficial, is one of the risk management tools. Insurance is one of the risk management tools available to both to the individuals and to the industry. We try and build a kind of a good feeling in the public about the insurance industry, and thus they trust, and then thus they come forward to take insurances in a bigger role, in a bigger number. So that is one of the roles that we perform. And we also try thank you. I'll not take more than 5 minutes. We also try our best to, when the matters go to the courts, normally the tendency in the courts is to expand the scope of the liability. They try to interpret in such a way that they always see it against an industry versus an individual, an institution versus an individual. And they always try to side with the individual, thinking that the institution can always shoulder more liability. So the judgments tend to be, a little more generous on that side. So sometimes they go beyond our original boundaries of the liability, and then they try to impose extra liabilities on us. So that is again where we impede ourselves, we involve ourselves, we try our best convincing them, explain the principles of why it is and what it is, and try to win. And nearly 50 to 60% of the cases we win, and then we get the liabilities within the limits so that we can manage within the given premium rates. But then there are some cases where we lose, And when we lose, my appeal and suggestion here is that if the liability is getting more than what is anticipated or what is expected of this contract, then maybe the regulator must immediately allow us to increase the premium rates suitably, so that the judiciary also will have to know that liabilities stretched up will also result in increase in premiums, that they need to know that. So for that, at least we need to allow the insurance companies to immediately respond by increasing the premiums suitably, so that the liabilities are taken care of and companies remain solvent and within the liability limits. So this also will lead to an increase in the law in a different way. But once the judiciary knows that the liabilities and the premiums calculated and kept are all taken together, and then decisions are given more judiciously, then there will be no need for us to increase the premiums, thereby keeping the premiums low and affordable, and thereby helping penetration of insurance more and attracting more business to the companies. And the third and most important thing here is communication to the public at large. As an industry, ours is, as I told you, it's a knowledge-based industry. This is complicated, this is technical, and there's a lot of gap between the expectations of the public and what is the delivery. Even though the delivery is as per the agreed terms and conditions, many a time the customer doesn't know what exactly he expected at the time of taking the policy, and then he'll always think he's been getting far less than the promised delivery. So there we need to communicate properly to them. Insurance education, awareness campaigns, information campaigns, these are the ones that we need to run. These are not brand projections, these are not product publicity. This is more of general awareness, building up general awareness in the public, so that, expectations are controlled and then within the limits, so that the deliveries and the expectations match, and the dissatisfaction between the public and what we offer is also equated. There's no dissatisfaction, and then the goodwill for the industry increases and people start relying on the insurance. There has to be a message from the councils to the public at large that insurance industry is there, run very professionally, very accurately, highly regulated, well controlled, and they are all for the public protection. And people should be, have no hesitation in coming up to us to transfer their risk. And then should there be a problem, we should be able to communicate and tell them that there are grievance redressal mechanisms, there are ombudsman systems and all that, and the IRDS portals, grievance redressal portals, companies' grievance redressal portals, they're all there to solve the grievances in an immediate way, so that there is nothing to worry for them. So with these kind of things, we can always try and keep the image of the industry good and clean, so that the public can rely more on the insurance and come forward to take more insurances. And as for the targets in the morning that the chairman sir has given, it's welcome, and we are very, very happy. I'm sure all the members of the GI Council here must be definitely happy that this is the business potential. For us, it's all business. The more business, the merrier it is. So we will be welcoming, we'll be very happy. But only thing is, in order for us to realize that, we need a certain atmosphere. One of that is, as I may explain, in choppy seas, if a boat is being manned by a particular crew, the ship, the focus in choppy seas will only be one on, stabilizing the ship and then ensuring that it remains afloat all the time. It is not the destination. Destination is dur ki baat hai. So you can always reach to the goal when things get calm. But until then, it is controlling and then maintaining the ship's stability and ensuring it doesn't sink. So that is the situation that we are going through, mainly because of I see the IRDA, the vibrant IRDA, as I see now, is trying to make running businesses very easy, and then making a lot of changes so that it is business friendly. and all that is happening. We are very happy about it. But then there are external agencies which are causing the sea to be choppy around us. That is the tax authorities and maybe a lot of judiciary cases and all. So these kind of things are creating some problem. So once things like that, if we also can get some help from the regulator in our fight against these kind of disturbances that we are facing, it'll be of great help to us in making the CEOs and the top managements of the companies focus more on business and business growth. Right now, our attention is getting diverted to handling those kind of disturbing things all around. So we hope we'll have the support and the help from the regulator in this regard. Thanks a lot.
Thank you very much, sir. I'd now request Dr. Mamta Suri, our Executive Director, to speak about IFRS and Ind AS.
Good evening, friends. Last but not the least, and I'll only take 2 minutes. Chairman sir mentioned about the 5 teams that have been set up on the mission mode basis, and one of them is on the Ind AS or the IFRS. And naturally, the fact that we've given time for this is that we want all of you to go back home and work on how really we will work on the achievement of the implementation of the Ind AS. You can go to slide 5. Because all of us are aware that there are resources to be allocated, there are issues around actuarial aspects where we'll need to work with the Institute of Actuaries of India. There are issues around accounting aspects where we need to work with the Institute of Chartered Accountants of India. Given the fact that all the policies will have to be tracked right from the single policy, there are a lot of investments that we'll need to make on the technology front. So all of these are reasons why that we need to allocate resources in terms of financial resources, human resources. We'll need to work on the knowledge partners. Kindly identify all of these. We also will be working with the Government of India because certain relaxations we require. We'll also be needing amendments to the Insurance Act. NAFRA, which is the notifying authority, we'll be working with them as well. RBI has experience on the NBFCs. We'll certainly be taking inputs from them as well, learning from their experiences. Insurance companies, I find some of the life insurance companies have moved towards, understanding the subject better. But in the non-life side, I think even where the start was made, people have stepped back. So my request is please work on all of these aspects. You need to allocate resources and to see how that we move towards the date we are not announcing today, but it's very important that we move towards it. We work on the understanding of the subject. We work towards understanding what are the implications. Next one. We understand what are the implications in terms of the various resources we need to allocate. Where do we need the help of the regulator? Of course, we ourselves are in the process of learning. And while we are learning, it will be important that we don't waste resources and let it be a work which is consistently focused towards achieving the objective. And maybe we'll have a couple of years in which we will be needing to implement this, which means that a year before we need comparatives as well. So that really means that we need to get probably in a more than a mission mode really to work at implementation of Ind AS. Please work on identifying people within your respective organizations. Some of the entities like the PSUs will also have to identify where from the resources will be coming in. They would need to put in that additional effort on that. Please, all of you, go back, work on this. Where you believe that we as a regulator should be chipping in, please talk about that as well with us. And let's work on this journey together to implement the Ind AS. No dates now, but yes, it is certainly in the mission mode. Thank you so much. Thank you.
Thank you. Thank you very much, ma'am. We've had a whole day of very interesting deliberations, and like Mamta said, general insurance is... Questions? General insurance is never easy. Today, 1st July, I complete 36 years in the industry. So does my friend here, Mr. Poddar and Mr. Anjan Day. I think he's not here today. But the more we expose ourselves to the subject, the less we feel we know about it. So I'm sure in future we'll have many interesting sessions with regard to reinsurance and insurance as well. Having said this, I would now request our member Life, who's also in charge of health, to say a few words to us.
Good evening, friends, and understanding that we had an agreement that 5 p.m. the meeting will conclude. Just 1 minute. I think today's interactions, apart from the presentation the chairman made and the deliberations we had thereafter, I think what we will remember for a long time would be the presentation made by the National Health Authority. And I'm sure that these are things that we are going to work upon with great enthusiasm in the coming days. Just one point, we're talking about, there was a presentation about the segments. And then Madam Yagyapriya mentioned that in the fire it's only 7%. I'm talking to you today. We talked about the regulator, we talked about the insurer, we talked about the other stakeholders. The one stakeholder who was not available was the policyholder. So I will talk from the policyholder's perspective. I have a life insurance policy and I have vehicle insurance. So I'm a policyholder not just with one particular company. It's been across the public and private sector. Thank you for reminding me again and again about the unpaid premium. But for the rest of the year, I've never been informed of anything that the company does or the company can do for me. Is this information in your company in silos that you cannot access? There may be sharing issues between one company and another. But within your company, if I'm insured, my vehicle is insured with you, can you not ask me whether I have a property to insure? Cannot I check whether I have a family member to be covered under health? I think these are issues that CEOs possibly have taken some time to do in the past, but operationalizing them has been absent. I think if we start putting these questions and not just only sending a premium reminder, probably it will trigger some more thoughts in the minds of our customers, and that can help improve more and more coverage to people who really can benefit from these opportunities you provide them. Thank you very much, and my best wishes to all of you.
Thank you very much, sir. May now request Member Actuary to kindly speak to us.
In the interest of time, I'll just convey my best wishes to all of you in the achievement of targets which Chairman Sir has assigned to you today morning. I must inform you here that yesterday when the targets were given, it was specifically told that these are not the caps, these are the floors. This is the minimum which we have to achieve. It's up to you what best you can do. So in this context, I will just inform that when I see the number of the products and other things in life insurance companies, there are 23 companies, and on an average, these companies having 20 to 30 products. So there are around 400, 500 life insurance products available in the market. But when I see the general insurance and health insurance, the number of products available in the market is more than 1,000, in more than 1,000, 2,000. The number of insurers in non-life segment is more. Number of products in non-life segment is more. And if we say the mandate of the insurance in the non-life is there, when the life it is not there, and the number of years it takes to break down for general insurance is less than it takes to break down in life insurers. The number of applications which we have received for a new insurance company in the last few months is more in non-life segment than in life segment. Considering all these facts, when we see that the amount of premium return in the non-life segment last year is 2,20,000 crores, whereas the amount of premium return in the life segment last year is more than 6 lakhs crores. So if the 6 lakhs crores is the premium return under the life segment, considering the world average, the non-life premium should have been 18 lakh crores, because worldwide the premium of non-life and life in the gross insurance premium is 3:1. 75% comes from the non-life segment and 25% comes from the life segment. If the life segment has written a premium of 6 lakh crores, the non-life should ideally, as per the global average, should be at 18 lakh crores. But in the targets which we have given, even after 5 years in 2027, the target given is 11 lakh crores. Right now we are 2 lakh crores. We, as per global average, we should be at 18 lakh crores. So much is the potential available. So you don't think this is the whatever targets we are given, this is the minimum. There is maximum. There is so much things are to be available. In simple words, I will tell कि अगर बाहर बहुत सारे पकवान लगे हुए हैं, खाना पड़ा हुआ, आप कह रहे हैं भूख नहीं है, तो ये तो acceptable नहीं है. Thank you.
Thank you very much, sir. Now I request Member Finance to speak to us.
Good evening. I know all the cabs are waiting, so very quick one. Just a housekeeping issue. In general insurance, KYC may be made mandatory going forward. I think that's a demand for the from the. Now you clapped too fast. This means that your CKYC has to be uploaded on CERSAI. Please note that. I don't want to be embarrassed in the CKYC committee saying that general insurance does not upload KYC. Point number one. Second, so today I saw the battle royal between the direct insurers and the reinsurers. Very good. But there have been a lot of cooperation as well between the two. I think one of the first experiments where we saw a parametric monsoon campaign coverage being done for the state of Nagaland between a direct insurer and a reinsurer. And that has been successful for the last 3 years. I would expect all of you to look at the other states as well. And that would be the key change. Thank you very much. Have a safe flight back home. Thanks.
Thank you very much, sir. May I request Chairman, sir, to give us wrap-up comments? Ma'am has spoken in the morning, so I wasn't sure. Ma'am, would you like to speak? So for your wrap-up comments.
I think I've got 5 minutes before you can reach the airport and all. So I think I'd like to thank each one of you for a wonderful interaction. And lots of ideas have come during the open house to engage with health providers, maybe a meeting with them, to engage with the corporate agents, mainly the banks. The tweaking of the BC network, their regulations at the end of the RBI, or also whatever we have to do here. Bundling of products, a common platform on technology and data, and one we discussed this afternoon. Freeing up of capital was also an issue which came up. Tier 2 capital or the other forms of capital, how to further enhance that, and the raising of CAT bonds, making KYC mandatory for the non-life segment. The home and the surety bonds issue also came up. Magma, I think, mentioned that. Crop insurance, the state share of premium not coming on time is certainly an issue. MSMEs, how we can involve the banks because they have an insurable interest. The change in regulations to align this thought process. New to insurance and cross-selling of products. Bima Bharosa, you all agreed that should be something at the center point for the redressal of customer grievances. Quality of data involving the cooperative banks and the other banking institutions that are available. Miscellaneous, I think there was a demand for miscellaneous covers also to be moved to the use and file method of certification. Longer tenure for the non-life products, maybe 10 years, 15 years, home, fire, motor, and so on. Linking to the CIBIL score to contain the fraud issues. Then of course the distribution network for an open architecture. EOM, I think some suggestion came to mandate also the line of business so that there is an orderly growth of the non-life side. Regional, host of issues have come up. We have taken note, and the officers here have also taken note. I think we will compile all those issues and see what can be done, because they are all relevant to my mind. But how can we take them forward and convert them into either guidelines, regulations, or whatever? That we'll definitely consider. 2 or 3 things just I'd like to bring it into your focus and consideration is that when we talk of a lead insurer being in charge of a particular state, we would also expect that that insurance company should have a significant presence in that state. and also enhance that presence. If you don't have one, then I think you need to be there. So that would also help. In what form and shape, that is for you all to decide. And maybe when we meet next, each one of you could send us a note and also talk about how we are going to take this initiative forward. So whatever we have discussed, it's not that it's just an idea for thought. It's certainly an idea for thought, but then also to take that thought forward in terms of a concrete action plan. The common technology platform, the IIB, whether it can become the unified platform. Everybody talked about a UPI-like moment for the insurance industry. So can we leverage the existing IIB platform into one? That was the whole idea what Mr. Gulati made the presentation. So how we can do that, I think all of you have to put your heads together and let it be an industry-led body. Of course, the oversight can remain with the regulator. So, and quickly we have to embark upon those things and not delay. The role of the councils, I think, like for example, the case in point is that the insurance and the reinsurers are all part of the GI Council. A host of these issues should have been sorted out, and if there is a regulatory hurdle, sure, you are most welcome. Why should we be sitting and trying to sort out those issues? So I think the councils will have to become more vibrant and engage with the insurers, the reinsurers more frequently, or rather cull out the issues which are actually bothering or impeding their growth, or which could in fact sort of facilitate the growth. Come up with those issues and tell the regulator from time to time. So kindly also pay attention to that, to how to make it a more vibrant body. With regard to the insurers and reinsurers, I think both of you have served the nation, but I think there is some kind of a deadlock and we are not moving forward. And as a regulator and as a developer of the sector, I think we should somehow would not expect such a situation to emerge where we are not able to underwrite because of the non-availability of reinsurance or for hardening of the rates, or whether the quotes are not being received. There are certain issues I think we need to sort out. So here I would suggest that we'll form a small task force comprising of the insurers, both from the life and non-life side. Somebody from the regulator will be also there, and the council should also take the lead, and probably we can very soon find solutions. And whatever solutions emerge in terms of the presentations made by both the sides, I think should be factored. And whatever we have to do, we will certainly do to sort out and remove those hurdles. Another working group we just suggested that we will constitute regarding the taking forward this initiative for the health insurance part, both for the claim processing part, the health exchange, and the ABDM, ABHA, and also how we can move towards that universal health coverage, and what is the kind of product we are looking at to target the missing middle. So we'll work closely and continue to follow up on these agenda, the developmental agenda and also the regulatory agenda. And I think when we meet 2 months from now, we'll be in a much happier situation, but at the same time, a firm commitment on the growth targets. Like my colleague said, it's the bare minimum. We are expecting much better results from each one of you. So wish you all the best and have a safe flight back home, and see you again 2 months from now. Goodbye.
Thank you very much, sir. A quick vote of thanks from our Executive Director, Dr. Mamta Suri.
Good evening once again. Chairman, sir, members of the authority, my colleagues in IRDA, and the industry representatives. It's my proud privilege to stand here to propose a vote of thanks at the end of 2 days of Bima Manthan to deliberate on the road ahead, where we have set ourselves challenges which we all propose to surpass in the days and months ahead. I propose a vote of thanks to Chairman Sir, who's been leading from the front, the members of the authority for their guidance. I thank all the industry members for sharing their thoughts. Mr. Bhargav Dasgupta, he spoke about the reinsurance issues and the response that we received from Mr. Parag Gupta. We also had representation from Mr. Raman Sharma, who spoke about the general insurance industry, Mr. Gulati on the IIB and its corporatization. Of course, what was the most vibrant of all was the presentation by Dr. R.S. Sharma who was ably supported by his colleague, Mr. Kiran Gopal. All of that was really very invigorating for all of us. The CGMNL non-life, who has compared through the program and has also provided a lot of inputs which have gone into the deliberations today. Admin department, which has been supporting and has been working tirelessly in making all the arrangements. Of course, the sumptuous food, which was given to us, served to us, along with all the food for thought that came in from Chairman Sir. And last but not the least, the team in the Chairman's Secretariat, the young team who's been working tirelessly all these days. Thank you all. Thank you so much. And we look forward to the next round of meetings and safe journey all. Thank you so much.